Hello, future CAs. Vanakkam, Namaskaram, and Sabko Swagat. Welcome to the expected question marathon for the Jan 26 exams, guys. Before we begin, guys, I want to know from where you all are watching this marathon live. Some of them may be watching from Kashmir, some from Delhi, some from Andhra, some from Chennai. So in the comment, I just want you to put the location from where you're watching in the comments, and other students will come and like it. So we will know that students from across the country are watching this. Why, sir, so many students are watching this? Because last time in September 25 exams, from our expected questions and expected question marathon, 95 marks came in the main exam, and it's not just one attempt. In many attempts in the past, 80 to 90 marks have come. That means I can confidently tell, even in the worst case, a 60 plus is guaranteed. 60 plus is guaranteed, and you're only going to spend a few hours with me. And what will happen, guys? Today, before you sleep, if you finish this marathon, almost the entire syllabus, one full revision will get done for you. All the provisions will be recalled for you, so you can sleep peacefully and do your second revision tomorrow, guys. I need to give you some important information with respect to the marathon before we start off with it. But before that, the first thing I want you all to do is subscribe to our channel, guys, because for you, it may be just one small button 2 seconds away, but for me it means a lot. For all the work we are doing, that one button that you click will honestly mean a lot, guys. You know, I don't ask this in every video. I'm asking only in a few videos, and that's a humble request. So let's start off, guys. The first thing is materials. I use mix of materials in such a way that all the concepts are revised. I use my concept material, I use my Gen Z notes, and this time additionally in my rough note, in this note I have scribbled a lot also. Whichever book you are following, whichever faculty you have gone to, it's okay, because the provisions are the same. End of the day, the goal of this marathon is to help you recollect the provisions. So I've tried to simplify the provisions in such a way, and throughout the marathon, I will be asking you a lot of questions. Even though you're in your house, even though you're watching alone in your house, keep repeating with me. The moment you keep repeating it with me, as if you're sitting in an offline class with me, your energy levels will increase and your mind will start prompting the answers before I tell. Sometimes in certain areas, I'll keep some pauses so that you will repeat. So keep repeating as if you're in an offline class. Imagine you are watching Avatar movie, 3.5 hours. You will watch it continuously. You will not get distracted. I want you to watch it like that. In a movie, what makes the movie fun? You have popcorn. So in this next 4 to 5 hours, have popcorn, have lace, have some juice, have the dinner and keep watching. Relax and watch, but just try to pay attention so that at the end of the marathon, you will feel one sense of holisticness which will feel too good. I know the marathon may start off with 200, 300 students, but at the end only 20 or 30 will be there, and those 20 to 30 will feel that power, guys. And the ones who couldn't stay today till the end, later you will come back and watch the balance, guys. Second, you all would have seen the expected question video that we had put out, the expected question list. Maybe if you have a print, keep the print with you or keep the soft copy, so that every concept we done, you can start keep putting a tick over here. Sir, where can I get the concept book, the Gen Z notes, the rough note, and this expected question list? Everything is there in the CA Classroom website in the free resources tab. The link for this, I will drop it in the description of this video as well. The next thing, the duration of this marathon will approximately go for about 5 hours. Will go for approximately 5 hours. So be prepared. Once the live gets done, once the premiere gets done, at the end, then we will be adding the timestamps for students who are watching it later, guys. So that's about it. This is the brief intro for the expected question marathon. Last couple of things I want to tell. In the marathon, in some areas, my voice has already cracked. So you might find my voice cracked because I've been straining it for last 2-3 days. But it will be like this. It will not be worse than this. And second, once the marathon gets over, the only way you can show love back to me is by commenting how you felt. Was it useful, sir? If it's not useful, let me know in the comments itself, because it becomes a feedback for me so that I can start working on it for next time. So whatever you felt, however useful it was, let me know in the comments, guys, because whether I reply to all the comments or not, I read all your comments. Let's not waste more time. I've given you a quick 5 minutes intro. Let's get to the expected question marathon. Now, some of you will ask me the flow or the order of the marathon. I'm a very sentimental person, so I have my sentiment. Whichever class I take, students will know that, guys. So the first chapter is going to be dividend. I will be starting off the marathon with dividend. And then I will come back to Companies Act, start off with preliminary, incorporation, share capital in the same order, auditors, all that gets over, and we'll go to foreign company. So in the same order, we will finish Companies Act in the first 3.5 hours, and then come to other laws. And in other laws, the first chapter will be General Clause Act, followed by LLP, then Interpretation of Statutes, and last will be FEMA, guys. This will be the flow of the chapters for those who are watching live, for you to understand what flow we're going to have, guys. And in lot of places, I would have already pre-written the notes. Wherever I wanted to show you the notes, no, I would have spent another 4, 5, 6 hours extra. I wrote the notes only now in the last 24 hours, and I will be explaining over those notes, so that instead of making it a 10, 12 hours for you, I'm condensed it for 5 hours. So the notes time writing also is saved. So all you have to do is focus, listen to my voice, recollect the point, and try to recollect it before me, and keep repeating, have the energy levels high. And that's about it. Let's start off the expected question marathon, one step closer towards you becoming a future CA, guys. Let's start off with the expected question marathon for dividend chapter. This chapter as a whole is important for your exam this time, because last 2 attempts, this entire chapter was skipped by ICA in the exams. But I will be revising all the expected questions, starting off with interim dividend, guys. So if you look at interim dividend is something which is declared between two AGMs, and the section for interim dividend is 123, subsection 3 and 4. Now, the first question they may ask is, sir, can interim dividend also be declared in AGM? If you look at it practically, in some AGMs, final dividend is declared and interim dividend is also declared. Sir, how is that possible? In the AGM, final dividend is declared for the whole of previous year, and for the current year's quarter, they can declare interim dividend. Therefore, both final and interim dividend also can be declared in the same AGM, guys. But generally, ICA has not asked these kind of questions. Generally, for us, between two AGMs, if a dividend is declared, that's called interim dividend. In exam, what is important then, sir? Based on past attempt questions, you need to apply this principle. When they are declaring current year interim dividend, current year financial year, overall profitable, sir. That means this year in the question, loss itself is not there, or loss is there, it's negligible. Fully profit only. If I do the whole total, it's profit. Then no limit. You can declare any amount of interim dividend. For example, if current year profit is only 70 and previous year reserves is 170, I can declare the whole amount as dividend itself and make my reserves 0. But current year, if overall is a loss, that is when rule comes in, and this is the place or the only small place where students get confused. So let me explain this. For example, company is declaring dividend in Q3. Imagine I'm declaring in Q3. X is the place where I'm going to declare dividend. Q1 is profit. Q2 is negative. What I should do? You have to total it both. You have to total the previous quarters. So I'm declaring in Q3. So Q1 plus Q2 you add it. Overall profitable. Yes, sir. No limits. Declare any amount of dividend. Sir, overall loss, sir. Q1 plus Q2, if I add, I'm getting loss. That means this year you can declare dividend using the reserves, but the rate of dividend should not exceed the average rate of last 3 years. That means overall, if this year I have loss before the current quarter, then the rate should not exceed average of last 3 years. I hope you're getting this point. For example, sir, what if I'm declaring in Q4? If you're declaring in Q4, Q1 plus Q2 plus Q3, total it. If it's coming overall profit, go declare any amount. Overall loss, then average rate of dividend should not exceed average rate of dividend declared in last 3 financial years. All other provisions, like once I declare dividend, pay within 30 days, separate bank account 5 days, then IEPF, all the other provisions, whatever is there, penalty, etc., whatever is there for final dividend, rest of the chapter is applicable for interim dividend also. Next, so with this we are done with interim dividend concept. Next is 126 abeyance, guys. Abeyance is section 126 abeyance. Sometimes when dividend is declared, I do not know whom to pay. For example, Mukesh and Anil Ambani are fighting in the court as to this share belongs to whom. There is a dispute between both of them. If there is a dispute or transfer is pending, Mukesh Ambani is sending the shares to Anil Ambani. It's in the process of transfer. Then company will be like, whom should I make the payment of this dividend to? So if there's a dispute or transfer is pending for any reason, then the dividend, not only the dividend, any other benefit arising from such share like rights or bonus will be kept on hold. Hold is nothing but abeyance. So in exam, we'll use the keyword of abeyance, guys. So what is the section? If the transfer is pending or any dispute is there, any benefits on that share like rights, bonus, dividend will be kept on hold, guys. How to remember section numbers over here? This is section 126. So what's the magic? 126. 26 if you reverse, you will get 62. So 62 again plus this one, you will get, what you will get, guys? 63. So my 62 is rights, 63 is bonus, and dividend will be kept on abeyance. Where will this dividend kept on abeyance be transferred? It will be transferred to my unpaid dividend account, which is nothing but 124, part of the same chapter, guys. So rights is 62, bonus 63, dividend will be transferred to 124 abeyance, guys. All the benefits will be kept on hold. The next one is 127, penalty for non-payment of dividend. Look at this. Once a dividend is declared by any company, it has to be paid within 30 days. Has to be paid within 30 days. Where the dividend is not paid within 30 days, be very careful over here. If the point is not claimed, then that will not come here. Not claimed means it's mistake of you. Mistake of the shareholder for not claiming what is given to you. That will not come over here. Only not paid. Mistake of the company. Then from the 31st day, company has to have some, punishment. So for the company, interest is 18%. How to remember this 18%, sir? 127, last section of the chapter, 1 plus 7. This 1 plus 7 will give me 8. So 18% is the penalty. That's how I remember, guys. And for the director who has knowingly done this, intentionally I will make mistakes, I am known for mistakes, then up to 2 years of imprisonment and 1,000 rupees per day of penalty. Let me repeat, guys. So some director who has done this intentionally, then the company will pay 18% interest from the 31st day, 18% interest per annum, and up to 2 years of imprisonment and 1,000 rupees per day of penalty. Sir, what if there are some exceptions for this? Yes, in certain cases, this penalty itself is not applicable. What are those certain cases, sir? 127 says exemption from penalty comes in certain cases. Like what, sir? For example, dividend is not payable by the company due to operation of any law. Emergency is declared in the country, or post office is doing a protest and shut for next 6 months, or COVID. These kind of cases, operation of law, not fault of the company, then we will not pay. Second, shareholder has given some directions and those directions company cannot comply, and I have communicated the same to the shareholder. For example, shareholder is saying make this payment to my brother or mother. Company is saying I can't make such payment to your brother or mother, I cannot comply, but I have to communicate. Look at this, shareholder is giving me intimation to do something. I am not able to comply, it's okay, but I have to intimate. If I communicate back saying I cannot comply, then it's fine. But if I don't communicate back, then I am liable, guys. Next, dispute regarding right to receive dividend. For example, section 126 itself, if you see, abeyance because of dispute. So if there is any dispute, then you will not make payment of such dividend. Next, dividend is lawfully adjusted against the sum due from the shareholder. For example, shareholder has to pay me call money, I have to pay shareholder dividend. So this call money and this dividend will be lawfully adjusted, guys. Or any other reason where not to give this dividend within 30 days is not because of any default on part of the company, not company's fault. Therefore, I will not be punished for this. These are the exceptions. Be aware of these exceptions, guys. Next, 124, unpaid dividend account timeline. If you go to 124, the most important timeline in the chapter, the minute dividend is declared, what happens next, sir? The minute dividend is declared, you will be transferring it to a separate bank account within 5 days. Within 5 days, it goes to separate bank account and it has to be paid within 30 days. But if this doesn't happen, for example, if dividend is not paid or if dividend is not claimed. So know the difference between these two. If dividend is not paid within 30 days, company's fault. Dividend is not claimed within 30 days, shareholder's fault. For example, I gave you dividend, you change your bank account, you didn't claim it. So even if it's not paid or not claimed within 30 days, then within the next 7 days, such balance will be transferred to unpaid dividend account. It will go where, guys? It will go to my unpaid dividend account, which is a separate bank account that we have. Are you all following? Repeat with me. Those who are watching online, repeat with me. I'm going to ask the question, you're going to repeat. Once dividend declared, separate bank account within 5 days. One dividend declared, you will make the payment within 30 days. If it is not paid, not claimed, then within the next 7 days, I will transfer to unpaid dividend account. I am failed to do that, sir. I have not transferred to the unpaid dividend account. Then interest will be 12%. Interest will be 12%. Sir, how do I remember this 12%? 1 to 12%, 124, 12%, 127, 1 plus 7, 18% for penalty. The minute money comes into unpaid dividend account, the validity, the expiry is 7 years. Money will be in this unpaid dividend account for 7 years. Dhoni, think of Dhoni, guys. 7 years money will be in this account, and after 7 years, it goes to 125 IEPF. So money will be in unpaid dividend account for 7 years, and then it gets transferred to IEPF. At the same time, the minute money comes into unpaid dividend account, within the first 90 days, company has a homework. What is the homework? From the time money comes into this account, it's transferred to this account, they have to publish a report in the website with the name of the shareholder, amount payable to him, his last known details, his email ID, all those things will be published in the company's website and a central government website authorized by the central government, so that people can go check if their name is available over there. So let's quickly revise this provision again once, guys. Once dividend declared, separate bank account within 5 days. It has to be paid within 30 days. If it's not paid or not claimed within 30 days, repeat with me. Within the next 7 days, it will be transferred to unpaid dividend account. Failure of doing that, interest will be payable at 12%. Once money comes into this account, money will be here for 7 years. After expiry of 7 years, it will be transferred to IEPF. The minute money comes into this account, you will be preparing a separate report within 90 days, and that report will be published in central government website and the company's website. Last known details of the shareholder. The amendment over here in 124 is personal details of the shareholder, like his address, mobile number should not be shared publicly, guys. Next, with this we are done with section number 124, unpaid dividend account. Next is inadequate profits and 3 rules for dividend, section 123. Over here, let's start off dividend. Once I declare dividend, can I give it to you in kind like gold or apartment? No. Dividend should be in cash or bank only, especially through banking channels only. But now cash or bank is the way. Dividend is recommended by board of directors and approved by the shareholders. For example, if board is saying 10%, as a shareholder, can I ask for 12%? Can I increase it, guys? Answer is no. Shareholder cannot ask for an increase in dividend. No, he can only accept what is given. It's like if your parents are giving you pocket money, you accept what is coming or you tell you don't want. You can also reject it, but you can't ask for more. So shareholder can reject or ask for less, but they can't ask for more. Sir, what is the source for company to pay dividend? Company will pay dividend from current year profits earned, or they will pay dividend from previous year profits, or combination of current and previous year profits, guys, or money guaranteed by central or state government. This is easy. The catch over here is whenever company is going to pay from current year or previous year profits, I have to reduce depreciation. That means current year depreciation has to be reduced, and then only I can pay dividend. Simple. If current year profits or previous year is there, reduce depreciation, balance only can go for dividend, guys. Next, whenever company is going to use previous year profits, that means current year profits is not enough. Current year profits is inadequate. So I'm going to my previous year profits. That is when I will be following the rules. What are the rules, guys? This is section 123. 123 rule 3 has totally 3 rules. Are you following, guys? So easy to remember section numbers. So 123 is the section. Rule 3 will come when company has inadequate profits, and that rule 3 also has 3 rules, guys. So what are those 3 rules, guys? From this we are going to 3 rules. 3 rules are very simple. Rules are rule number, in some books they call it as 4 rules, but I'll tell you what it is. The first rule says, if you are using the inadequate profits, if I'm going to use my reserves, the rate of dividend to be declared now should not exceed average of last 3 years. the rate of this year should not exceed average of last 3 financial years final dividend, guys. Second, usage maximum, how much I can withdraw from my savings, my reserves. Maximum 10% of paid up share capital and free reserves only can be withdrawn, guys. And can I use revaluation reserve, capital reserve, CRR, securities premium? Answer is no, 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 no. So maximum I can withdraw 10% of paid up share capital and free reserves. Balance. What balance? Balance in reserves. So I will write here balance in reserves and surplus, which is my free reserves after the withdrawal. So from here I'm withdrawing. So after you withdraw, the balance should be at least 15% of paid up share capital, guys. These are 3 rules that we have to follow. So first one, repeat with me. Average of the rate to be declared this year cannot exceed average of last 3 years. For this year, I am withdrawing my balance from reserves. So that withdrawal can maximum be usage 10% of paid up share capital and free reserves. And after you withdraw, the balance in your reserves should be at least 15% of paid up share capital, guys. Now, very important over here, when you are withdrawing current year, when you withdraw current year from reserves, why I am withdrawing current year? Because current year profit is not there, only I am withdrawing from reserves. So that 10% withdrawn should first be set off with current year loss. For example, if current year loss is 20 and I withdrew 90, then I will minus this 20 current year loss and only balance 70. So after withdrawing 90, I will reduce current year loss if any, and balance 70 only I will use for making payment of dividend, guys. Now these four rules are not applicable to a 100% government company. If you are a 100% government company, 100% held by government, these rules are not applicable, because generally government will be not following these rules. But actual logic over here, I'll tell you in class, but logic is generally government companies are loss making. If I keep this rule, then government can never pay dividend. That's the simple point over here, but not relevant for exam, guys. These are the 4 rules that we have. So with this, all the expected questions of dividend is done. What I have not taken over here is 125 IEPF, but like I said, because this is an important chapter, please go learn IEPF also. Whole chapter is important for 5 marks. Let's move on to the next chapter now. Now let's start off the next chapter for our expected question marathon, which is preliminary chapter, guys. If you look at this chapter, this was not tested in the September 25 exams. So chance in Jan 26 is a little more chance, but even if it comes, maximum 1 or 2 questions. So let's start off with associate company and small company definition. This chapter predominantly has only definitions around it. The first one is associate company, guys. If you look at associate company, it says there is one company, that first company, let's call it the first company, which is the investing company. It becomes investing company in the other company if it has SI, which is nothing but significant influence. Now let me repeat the same thing again. The first company known as the investing company, I will call it the investing company in the other company if it has SI, significant influence. Then the other company is called an associate company, guys. So first company is investing if it has significant influence in another company, known as the associate company. The Companies Act does not define the term joint venture. Joint venture is included in this definition. Associate company includes joint venture, guys. Now the term significant influence definition has 2 parts. The first part says the first company has 20% or more of the total voting power in the second company. That means investing company has 20% or more of the voting power in associate company. Voting power means what, sir? Paid up share capital or preference shares or what share capital? Here they are including equity share capital and convertible preference shares. Very important exam testable worth area. Why they use convertible preference shares? Because preference shares can be converted into equity shares in the future. So if one company has 20% or more of the total voting power of the other company, then the first company is investing, second is associate, and the voting power includes equity share capital and convertible preference shares, guys. Again, significant influence without having even voting power. I can still have significant influence on other company if you control the business decisions of that company. So very simple, the investing company in the associate can have two things: 20% or more of the voting power, or they control the business decisions, and this is called significant influence in the other company, guys. With this, we are done with the definition of associate company. Next is small company, 2 subsection 85. For calling something as a small company, first it should be a private limited company. Only a private company can be a small company, guys. And for it to be a small company, there are two limits: turnover and paid up share capital. And I have to satisfy both. Turnover up to 40 crores, paid up share capital up to 4 crores. Let me repeat: turnover up to 40 crores and paid up share capital up to 4 crores in the preceding financial year. In which year, sir? It will be in the preceding financial year. In the preceding financial year, I will be having this. Now, the government, with just a snap of a finger, they can pass a notification by increasing this 40 crores. This 40 crores can be increased up to 100 crores, and this 4 crores can be increased up to 10 crores. Can be increased up to how much? 10 crores. Recently, an amendment also has come in this, but it's only for practical life, not for your exam. So for exam, turnover up to 40 crores, paid up share capital up to 4 crores, but this 40 and 4 can become 110 in the future. For this, government has instant power, guys. Then for me to call something a small company, this turnover and paid up share capital limits alone is not sufficient. Along with this, these checks also should be there. My small company should not be a holding or subsidiary of another company, should not be a Section 8 company, and it should not be a company incorporated under Special Act. Repeat with me, guys. Those who are watching online, repeat with me. It should not be a holding or subsidiary, should not be a Section 8 company, and it should not be a company incorporated under Special Act, guys. These are the first two definitions. Let's proceed further. The next definition is listed company and amendment of what is not listed. Important, guys. So come down. I have this in the material also, but let me give it to you in simple terms. 2 subsection 52 says what's a listed company. A listed company is a company not when the equity shares, they say when its security is listed on the recognized stock exchange, BSE, NSE, guys. And they also say unlisted is other than listed company. Here, sir, what is the amendment? Same thing is there in my book, guys. The amendment is very simple. For a public company, its equity shares is not listed. Let me repeat. The amendment says for a public company, its equity is not listed. But what is listed? Other than equity is listed. Other than equity shares is listed. Don't say debt. Other than equity shares is listed. It can be one of these three. It's non-convertible debt instrument on private placement basis, or non-convertible redeemable preference shares on private placement basis. If these two is there, what will happen, guys? So in these two cases also, case 1 and case 2 also, this is also not a listed company. So look at this. This is also not a listed company. So what they're trying to say, my non-convertible debt instrument, for example, 10% debentures, company has issued on the recognized stock exchange, but it is listed on the recognized stock exchange only. Debentures are listed on recognized stock exchange, but on private placement basis. For selective people, because it's on private placement basis, not available for public, it will be not listed. And non-convertible redeemable preference shares, if the company issues non-convertible redeemable preference shares on private placement basis, again not available for public, then in these two cases also, the company will be a non-listed company. It will not be called as a listed company, even though its securities here are listed. Why this exception is coming? Because listed company definition says security listed on the recognized stock exchange. And then they are saying, sir, my security is listed not on recognized stock exchange, but other than recognized stock exchange, near my house or somewhere it's listed, guys, not authorized by SEBI. That's it. It's not a listed company. Are you following, guys? This is with respect to public company. So again, let me repeat. Public company, equity is not listed. Okay. And the other debt and what to say, non-convertible renewable preference shares is listed on private placement basis, then I will call it as a non-listed company only. Sir, what about private company? For private company, they're including only the first point. Only the first point. If it's a private company, then non-convertible debt. So debentures of a private company listed on stock exchange on a private placement basis also, then I will call it as a not listed company. Same thing for students who are following my book, guys. The same thing is given over here. I've just summarized into our notes. So not considered as listed company, non-convertible debt, non-convertible renewable preference shares on private placement basis, and private company which has their non-convertible debt on private placement basis. Are you following, guys? This is the second next definition. Next is dormant company or startup company. Let me go to dormant or startup company, guys. So what is this dormant company? A dormant company is a company which is formed and registered just like another private company, but intention is not to do business. Intention is for a future project, for something for the future. I have an idea now, so I'm incorporating that company, and company is only holding asset or IPR. In the company name, summa some building, something is there, or some IPR is there, and it has no significant accounting transaction. So this is the definition which I have broken down, guys. So what is dormant company? Dormant company is a company which is formed and registered in India, of course, for a future project, holding asset or IPR, and has no significant accounting transaction. You write this, you will get half the marks. Then they are saying, what is no significant accounting transaction? These things, these 4 points over here. That means company can do only these 4 things. A dormant company can do only these 4 things. They can do payment for 3 reasons. Fees to registrar, ROC fees or to pay registrar, yearly I'm filing annual return, all those things. Any other requirement of any other law, PF, ESI, I will pay for that. Or maintaining office records, maintaining office and records, cleaning the office, maintaining office files, all of that. So payment for 3 things: payment for fees to register, payment for other requirements of any other law, payment to maintain office and records. And they can do allotment of shares, because without allotment of shares, you can't call it a company. So with me, guys, what's a dormant company? Dormant company is a company which is formed and registered for a future project to hold assets or IPR with no significant accounting transaction. If you keep repeating with me, by the time we finish this marathon, all these provisions will get into your head, guys, and then you can do the second revision after this. So keep repeating with me. Whatever you're doing, put everything aside and keep repeating with me. Drink some juice and get that energy, guys. Next, startup company. Startup company is a private company, and startup company, private company, these 3 points should be satisfied. Simple. It should be incorporated, of course, and not more than 10 years should have proceed. So startup company means a company which is in the first 10 years of incorporation. After 10 years, what, sir? No more call it a startup. Turnover in any of these 10 years, it should not exceed 100 crores. So if I'm seeing for current year, can I call me a startup? Yes, in previous year, my turnover should not exceed 100 crores. And lastly, it should receive a DPAAT certificate from the Ministry of Commerce. You should receive a, what is a DPAAT certificate, guys? This is startup company. Let me go to the next one. We have holding and subsidiary along with exceptions. So come over here. If you look at this, holding company and subsidiary company, a company is called holding of another company if one of these 2 points, here it is or, any one is satisfied. 1, it holds more than half of the voting power of the other company, guys. Has more than half of the voting power. Before it used to be paid up share capital, but now it's more than half of the voting power by itself or with one or more subsidiaries. So holding company, me by itself, I have more than half of voting power in other company, or by me along with few other companies, I am having more than 50% of voting power. Then this company is called holding. Or I'm controlling the composition of board of directors of the other company, then it becomes holding. You know, there are different ways we can draw holding, guys. Just know you finished accounts exam, you have studied AS 18, different chart will come. Now, can subsidiary company have shares in holding company? No, not allowed. But this has some exceptions. What are those exceptions, guys? I can have shares if the relationship or if the shares were held in that company before the relationship of holding subsidiary was established. For example, before holding company got more than half of voting power, subsidiary already had some shares in holding, then that shares can be still held. So you can have shares if this was purchased before the holding sub relationship is established. Or 2 other exceptions. Hold shares as a trustee. I'm holding shares as a trustee in the holding company or as a legal representative of the deceased person. That means, for example, the deceased person, I am their legal representative. So I'm holding it as a legal representative. Over here, if you see, point 2 and 3, holding share as a trustee and holding as a legal representative of deceased person. For these 2 cases, voting power will still be there. voting power will still be there. But for the first case where you're holding shares even before relationship is established, you can continue to hold those shares, but you don't have voting power. Intention is to make you sell those shares, guys. Next one, before I go to 1% company, let me finish off few more definitions. Definition of body corporate, financial statement, net worth, and managing director, guys. So look at this, and public financial institution. So public financial institution is nothing but combination of two types of companies, which is nothing but statutory company plus government company. If you add, you will get a public financial institution. Classic example is our LIC. So what is statutory company? Company incorporated under special act. What is government company? A company in which not less than 51% of the paid up share capital is held by central government, state government, or combination of both. So public financial institution is equal to statutory company and government company. Don't write that in exam. In exam you will write PFI is a company incorporated under special act and not less than 51% of paid up share capital is held by central government, state government, or combination of both. Sir, what is body corporate? Company incorporated in or outside India, guys. I can incorporate in India, Japan, China, wherever. It's called a body corporate. Basically a corporate entity with separate legal entity, artificial judicial person is there, means I will call it body corporate, and it includes even LLP. Now excludes what? It clearly excludes cooperative society incorporated under the Cooperative Society Act in India or any other body corporate. If notified by the central government, then I will not call it a body corporate. Next, definition of net worth. They have not asked in exam, but it can come suddenly. Very simple. Definition of net worth is paid up share capital plus free reserves plus securities premium, guys. This is what we take in every chapter. We take it in every chapter like deposits, everything. But here they don't use the word free reserves. Here they use the word reserves created out of profits. That means any reserve where it's transferred from P&L to a separate reserve, I will call it as free reserves. That means I will call it as free reserves for this section. That means based on this definition, can I include even CRR? Yes, CRR is coming from my profits. So it's a reserve created from my profits. So for this section of net worth, I can also include my CRR and other, for example, investment fluctuation reserve or export profit reserve. If this reserve is created out of profits earned by the company, then it's considered for net worth. Very, very important. If an examiner is very smart, he will ask this in exam. And net worth will not include three things. Aggregate accumulated loss, anyway we'll reduce it, we will show only net balance. Any deferred expenditure or miscellaneous expense not written off, like preliminary expense, all that will come over here. So what about revaluation reserve? This I will not take because revaluation reserve is not created out of profits. It's created out of change in fair value of assets. So this is the key. Reserves created of profits will be considered for net worth, guys. Next definition is going to be managing director. Who is a managing director? I am appointing you as managing director. I can appoint you in articles. I can appoint you through an agreement, or I can appoint you by passing a resolution in board meeting or general meeting, guys. To be a managing director, you don't have to be a director in the company. Remember, sir, I am a managing director, but I am not part-time director. I am not whole-time director. It's okay. I am not part-time director. I am not whole-time director. I can still be a managing director if one of these three is sorted. My name is there in articles, or through an agreement I am called MD, or resolution passed in general or board meeting, guys. So what does this person do? He has substantial powers with the management of the company. Substantial powers. You call it whatever name. Call it MD, call it CEO, whatever. But this person has the following four powers. He can use the common seal, put that seal wherever he wants. He can draw and endorse check or negotiable instrument. Of course, negotiable instrument includes check, but definition over here says you can draw and endorse check or negotiable instrument. You can sign the share certificate. Share certificate can be signed for you, or you can direct registration of transfer of any share. So if you want to transfer any share from X to Y, you can direct, okay, make this share transfer. I am giving the approval, guys. So I can sign the share certificate, at the same time direct transfer of shares between parties, guys. This with respect to managing director. Now before I go to the last thing, 1% company in just one page, guys, let me show you the definition of financial statement, because you would have anyway studied this. So I'm taking the definition from our material, guys. Definition of financial statement 2 subsection 40 says what? It includes those 5 things which we all know. P&L, balance sheet, cash flow. So profit and loss account, balance sheet, cash flow statement, and it includes two more things: statement of change in equity and explanatory notes. Statement of change in equity and explanatory notes, guys. This you prepare in your accounts exam itself. Sir, what is important over here? What is important is the exception. Cash flow statement alone, no. Certain companies need not prepare. It is optional. It's not exempted. It is optional. If I want, I can prepare. For example, I have a startup called the Mind and Company in mental health space. For my company, cash flow is not mandatory. It's optional. If I want, I can prepare because Mind and Company is a small company. So for whom it's optional, it's a small company, or it's a one-person company, or we just know so what's a dormant company and a private company. And private company also it's optional. If it is a startup which complies with section 92 and 137. What is section 92 and 137? 92 is annual return. 137 is filing of FS to ROC after the AGM is concluded, guys. So again, let me repeat, it's optional. It's optional in what all cases? Optional for small company, one-person company, dormant company, private company. And for these four cases, one person, dormant, small and private company, if it complies with section 92 and 137 where they file annual return and financial statement at the right time. So this is the area which is important for the exam, guys. Next, let me go to the next concept, which is nothing but my one-person company. In one-person company, I have simplified the limits for you. It is very clear. One-person company will have how many members, guys? It will have one member. At the same time, it will also have one nominee. So one-person company will have one member and one nominee. Here, let me start off with the smallest of time limit, 15 days. If the nominee leaves, or if member dies and nominee becomes the member, basically if there's a vacancy in office of nominee, the member should nominate a new nominee within 15 days. That is 15 days. What is 30 days, sir? Whenever somebody is withdrawing to be a nominee is not there, sir, I have to intimate withdrawal of nominee. I am the nominee. Now I am leaving to US. I am getting married. Question. I am getting married, so I am leaving to US. Then I have to intimate ROC in 30 days. But because I am leaving, I have to fill that vacancy within 15 days. I hope this point is clear. Next, what is the point of 120 days or more? This member and this nominee has to be an Indian citizen. Whether he is resident or not doesn't matter. I don't have to be resident. It's okay. I have to be an Indian citizen who stayed in India for 120 days or more in the preceding financial year. So I should stay in India for 120 days or more in the preceding financial year. Then only I can be called as a member or nominee. I didn't stay for so many days. Then you are no more a nominee. Intimate ROC in 30 days and appoint new nominee within 15 days, guys. What is this 180 days? For example, I am member in one OPC. For example, in OPC A, I am the member, me. In OPC B, I am the nominee. Allowed. I can maximum be member of one OPC and additionally be nominee of another OPC. So today Karthik Manikonda can be member of one OPC and nominee of some other OPC. Now let's say I am a member in OPC A. In OPC B, I am only a nominee. Some other member is there. That some other member died. So now I am going to become member in both. Now because of certain situation like this, in some other OPC where I was the nominee, I became the member because that member died. Therefore, what is happening to me? I am becoming member in both the OPCs. So in this case, within 180 days, I have to choose which OPC I want to continue. If I want to continue in OPC A, then I have to withdraw from OPC B. So for that, I'm given time of 180 days, guys. So 15, 30, 120, 180 are the limits over here. Other provisions over here. Can OPC change the name? Yes. But generally when a company changes name, it becomes alteration of MOA. Here, if OPC is changing name, it is not alteration of MOA. Few other points, an OPC can convert to a private company, but OPC cannot convert to a Section 8 company, and OPC cannot invest in securities, let it be equity or preference or debentures of NBFC. I cannot invest in an NBFC. At the same time, I can't invest in shares or securities of a body corporate also, guys. These are the key provisions with respect to one-person company. With this, we are done with expected questions of one-person company also, and we are done with the preliminary chapter. Now let's move on to the next chapter, guys. Now let's get to the expected question marathon of incorporation chapter, guys. This chapter also has not been tested in September 25 exams. So both preliminary and incorporation chapter is not tested in September 25. That means in Jan 26, one of these, at least one question will definitely come. So let's get to the expected question. Yes, I will keep using this word expected question again and again because it's important for you guys to note that I am not revising the entire chapter but only the expected questions as per my list. So what will happen to you at the end of this marathon? You will get humongous confidence because majority of the syllabus is done for you. All you have to do is go revise the other topics which I have not covered in this marathon and again revise what is there in this expected questions, and you would have revised the whole syllabus twice, guys, and that's the confidence you need before you go to the exam. The first one over here is the name clause, and especially related to reservation of name. If you go to name clause, few basic points over here they're saying is name should not be identical, it should not resemble the name of an existing company. At the same time, it should not be undesirable in the opinion of the central government, guys. Now what is the reservation of name over here? If it's a new company, once you apply for the name to be reserved, they will hold it in your place for 20 days. For 20 days, guys. For existing company, they will hold it in your name for 60 days, and within that time, all the other documents have to be filed. But actually, technically, no, both are 60. For existing, it is 60 days. For new company, it is 20 days. And they are giving you additional 20 days if you pay 1000 rupees and another 20 days if you pay 1000 rupees. That means within 20 days, you have to finish filing the other documents for incorporation. If you don't do it, you can extend by plus 20 plus 20. So totally it becomes 60 days in both cases. But in new company, you get the breakup of 20 plus 20 plus 20. You get the additional days if you pay late fees, guys. Next is section 3A, which is unlimited liability, and everybody knows this, part of your foundation syllabus. For any company, private or public. Private company means members should not fall less than 2. Public company means members should not fall less than 7 members. But in a case where the minimum number of members falls less than 2 for a private and less than 7 for a public company, then we are being given a grace period of 6 months. Within 6 months, they are saying increase the members back to what is required. Otherwise, liability of the company will become unlimited, and members or the shareholders, they will have liability becomes unlimited, who are the remaining members in the company. There is more like a punishment provision can come in your MCQ, guys. Next if you go, the next list is alteration of situation clause, any scenario long pending. Before I get to that, let me finish off this section 10A, commencement of business, and section 16, rectification of name, guys. Now section 10A is called commencement of business. Commencement of business. The moment company receives certificate of incorporation, that is not conclusive evidence companies are actually doing business. Because in classroom purpose, when I take regular class in front of students, simply I will show how to incorporate a company. And in some batches, I actually incorporate a company and left it. Now, I'm not doing real business with that company, no. So for that, what they're saying, once you receive certificate of incorporation, within 180 days from the date of certificate of incorporation, a company has to do 2 things. Both these are mandatory. A verification of registered office has to be done. Now, verification of registered office is different from establishing registered office. Registered office should be established usually within 30 days from the date of incorporation, guys. If you look at the material also, it says the registered office should be established within 30 days, but I have to verify with the ROC within 180 days by taking a photo with the Google Map location and send it to them. Additionally, I have to file a declaration by the director to the ROC that all the subscribers of the Memorandum of Association, whoever subscribed for the shares in the MOA, they have made the payment and for which I have allotted the share. So these 2 declarations have to be done. If I don't do this within 180 days, there is a penalty. And after that, still if you have not made the filing of this commencement of business, then ROC will remove the name of the company from register of companies that they are maintaining, guys. The next one I told you is section 16, rectification of name. Rectification of name comes in places. I have incorporated the company already, but after incorporating the company, the name of the company is identical to some other company. But ROC, without seeing that, they gave me that name. So what will happen now? The minute RD, the regional director, finds this out, they will order the company and ask me to change the company within 3 months by passing an ordinary resolution. So I have to pass an OR and then change. I have to change change my name within 3 months, and then I will intimate the regional director. Second case in section 16 is my name of the company is not identical to some other company, guys, but it's representing a trademark. For example, Tata is there. It's a company. Now, Tata with 4 A's I'm starting. That is an identical company. Name is identical. Representing a trademark, guys. Nike tick is there. I started another company with the same logo. Something similar to that. Or a trademark I have just copied. Domino's Pizza. Now, Domino's Pizza is not the company. The actual name of the company is Jubilant Foods Limited. So, now I am starting a company. Not in the name of Jubilant Foods. But I am starting a company in the name of the trademark, which is Domino's Pizza. I am starting Domino's with a double O. Now, in that case, what will happen if RD gets a complaint? See, in first case, RD will do it voluntarily. In second case, they will do it only if they get a complaint, guys. This will happen by voluntarily by RD. Second case, only if they get a complaint, and that complaint should be made by the original person who has the trademark. The person with the original Domino's Pizza name, no, they will make an application to regional director. They will make an application to regional director, and once they make an application to regional director, then RD, if they feel the name is identical, then they will order to change the name within 3 months. Same case here also, RD will order to change the name within 3 months by passing over. So first case, name identical, voluntary. In second case, if name is resembling a trademark, then the person whose trademark is copied, that original should complain within 3 years of what? Within 3 years of incorporation of the fake company. Within 3 years of incorporation of the fake company. So original Domino's within 3 years of incorporation of the fake Domino's should complain to RD, and RD will again order to change the name within 3 months by passing ordinary resolution. Once I make the change, the company, whoever made the change of name or trademark, will intimate ROC within 15 days, guys. After this also, if I don't make the change, there is some penalty for that, guys. So this is section 10 and section 16. Let me now go to alteration of registered office clause. I have the summary over here. So before I come to this change of registered office, let me show you the other one. Change of registered office, long due for a very long time, especially in new syllabus. Not even once they have asked this. So I'm revising the whole thing. If I'm changing within the city, for example, within Mumbai, within Delhi, or let's say within Chennai, very simple, because it's the same city, I will just pass a board resolution in the board meeting and intimate ROC within 30 days. Simple, guys. Within the state, sir, same ROC. Within Tamil Nadu, but same ROC as Chennai. Within Andhra, within Telangana, within Kerala, same ROC. Then I will pass along with board resolution. So board resolution also will be passed, and additionally I will pass a special resolution in the general meeting of the company, guys. So board resolution in board meeting, SR in general meeting, and then I will intimate ROC within 30 days. In both cases, I will intimate ROC within 30 days. Then this within the state is basically outside the city's local limits or outside the village or town, guys. The next two cases only are the detailed cases within the state, but same state, but ROC is changing. One ROC or ROC. For example, practically this is possible only for two states. Tamil Nadu, where we have two ROCs, Chennai and Coimbatore. Mumbai, where we have two ROCs. Maharashtra, where we have two ROCs, Mumbai and Pune. So Tamil Nadu and Maharashtra are the two states where practically this is possible. But in exam, they will tell you, they will create some state and tell this. Imagine this state has two ROCs. So within the state, and last one is state to state. For this only, for mainly the complicated areas only, I am drawing in the notes, guys. So it becomes easy for you. So within the state, this is nothing but Tamil Nadu or Maharashtra. State to state is change of jurisdiction. So in both cases, jurisdiction is changing. I will teach the time limit in both separately, and then we have some common points in both, and then I will tell you the unique points also. Fairly simple, guys. First, I am talking within the state. So keep in mind, within Tamil Nadu, let's say from Chennai to Coimbatore, or within Maharashtra from Mumbai to Pune. First, the company has to pass board resolution and special resolution, guys. Here the time limit is 30, 60, 30. 30, 60, 30. Okay. So first what company should do, within 30 days, they have to intimate, they have to file to the regional director. When they file to the regional director, they have to give a few attachments. That attachments only I'll explain later. Okay. Once they file to regional director will give us a confirmation within 30 days. Within 30 days, he will give us a confirmation, guys. Are you following? And sir, what is this 15 days? This 15 days is a very unique point which says RD will take a decision within 15 days. Practically, I can't know when he took a decision, but they are saying RD will decide within 15 days and intimate to us within 30 days. Once we are intimated, within the next 60 days, we have to intimate ROC. And once you intimate ROC, within the next 30 days after that, ROC will issue a new certificate of incorporation. So 30, 60, 30. I will intimate RD, wait for 30 days. Then RD will again, once they give me a confirmation within 30 days, I will intimate ROC within 60 days. And ROC within 30 days will issue a new certificate of incorporation. In second case, guys, same, I have to pass board resolution and special resolution. What is second case? State to state, Tamil Nadu to Jammu, Maharashtra to let's say Assam, like that. Here they are giving a simple 60 days time. So within 60 days, I have to intimate RD. But again, here when I'm intimating RD, I have to give some attachments, guys. I will be giving some attachments when I am intimating the RD. And then RD will give me a confirmation within 60 days. So basically, after I pass the board resolution and special resolution, I will intimate RD. Let this be very clear for you. I will pass the board resolution and special resolution. I will intimate RD. And then RD will give a confirmation to me within 60 days. Once RT gives me a confirmation within 60 days, again I will intimate ROC within 30 days, guys. In both the cases, I have to file some attachments to RD. So let me summarize the time limits again. In first case, it's 30, 60, 30. In second case, it is 60 and 30. So first case where it's 30, 60 and 30, it's very simple. I will intimate RD, wait for 30 days for confirmation. Once I get confirmation within 60 days to ROC and then intimate ROC for new, ROC will give me new certificate within 30 days. In second case, state to state, again board resolution and special resolution, and then I will file to RD. RD will give me confirmation within 60 days. Once they give me confirmation, I will intimate ROC within 30 days, guys. Now in both these scenarios, guys, there are a few common attachments that I have to give. These four are common in both. I have to give an attachment to RD that there is no default to workman. My workman's salary is paid fully. That will be authenticated by KMP of the company or two directors. So all the payment to workman is done. KMP or two directors will authenticate. Consent of creditors. Creditors are going to give me the consent. I should also tell no change of court. If my company has some pending legal case in the state where I'm operating, then I should tell I don't want to change the court just because my jurisdiction is changing, and a confirmation from the chief secretary of the state that employees will not be affected because of this. Employees will not be retrenched, guys. Next, if you see state to state, this is nothing but let's say Tamil Nadu to Maharashtra or Maharashtra to Assam. Additional, apart from other procedures, in the second case, state to state, these are three things which I have to mandatorily do. Above, I told you only creditors confirmation is needed. For state to state, along with creditors, I should also get debenture holders confirmation, and I have to get the confirmation of latest to 1 month. So if I am making the filing today, then the creditors and debenture list should be the latest month of not older than last 30 days. So for example, if today is 1st Jan, the debentures list should be not later than 1st December, 30 days, guys. Then such a list should be authenticated by CS or two directors who will verify the same. And the auditor also will verify the same, guys. Then I will advertise in the newspaper. E plus E means one English and one vernacular newspaper. I will make this advertisement before I file to the RD. All of this, guys. Clear, guys? So with this, we are done with shifting of registered office concepts, guys. Now let me go to the next set of few concepts over here. Now next, let me go to these two concepts. I'm going to take doctrine of indoor management, constructed roads and ultra wires, and I'll also be taking section 20, 21, 22, the last three sections that we have. So let me start off with this. Section 22 talks about execution of negotiable instruments. We all know negotiable instruments here is bill of exchange, promissory note and check. Foundation you would have studied. If not, no, only these three are negotiable instruments. Now, who will authenticate a check in a company? Because these three instruments commit financial liability payable by the company. They are saying this can be authenticated only by a person who can use the common seal. Who can use the common seal? KMP of a company or managing director only, they can use the common seal. So if company is having common seal, yes, then the negotiable instrument has to be authorized using that. But today now we are in digital economy, everything is becoming e instead of physical. So many companies don't have a common seal. So if company is not having common seal, then they're asking companies having a CSR. If CS is there, company secretary and director will sign. So repeat with me. Company has common seal, yes, use the common seal. Company is not having common seal, then CS plus director. CS also not there, very small company, then every company will have at least 2 directors. So 2 directors. So one last time, company has common seal, yes, use common seal. No common seal, then CS plus director. No CS, 2 directors. The same thing is there even in this section, and in share capital section, authentication of share certificate is there. No, authentication of share certificate, that also will be authenticated by the same set of people. Next, if I come to section 21, now I showed you authentication of negotiable instrument. Section 21 talks about authentication of documents. So document should be signed by key managerial personnel. Which document? It could be rental agreement, it could be any document of the company by key managerial personnel or officer or employee of the company. So 3 people. Who are the 3 people? KMP of the company can do it, or officer or employee of the company if they are authorized by the board of directors, guys. So KMP or officer or employee authorized by the board of directors. Basically, who has to be authorized by board of directors? Mainly officer or employee only if they're authorized by board of directors. We should also know who's a KMP. The definition is very simple. CEO or managing director or manager. Managing director definition we saw in the preliminary chapter. Then company secretary, whole-time director, CFO, or any one person who's one level, any person who's one level below the directors, who's below the directors, who's in whole time, below the level of directors, who's in the whole time employment designated as KMP. How to remember these points? Nothing to do with mug up. Look at these points, it will feel familiar, at least you'll remember till exam, that's enough. Repeat with me one more time. CEO, managing director or manager, guys. Company secretary, whole time director or CFO, or any person one level below the full time director, whole time director of the company, guys. Next, section 20, serving of documents. This is very simple and very important also. For serving of documents, in what cases? If ROC is giving any document to the company, how will they do it? So ROC to company. Same way, if company is giving any document to the ROC or to members, are you following? So ROC communicates to company communicates to ROC, and company also communicates to members. How will this happen? Basic stuff: registered post, speed post, courier service, leaving it at the registered office. ROC will come to the company, ring the bell, leave it there and go. Or electronic mode, which is email as prescribed, guys. For company to ROC also same thing. Company to ROC also what? Let's read again now. When company is sending to ROC, registered post, speed post, courier service, leaving it registered office, electronic mode as prescribed. These will come, guys. But additionally, they are saying one more thing is that additional company to members. Sometimes member will tell, send me in WhatsApp, send me in text message. So if any member specifies any mode, then in that mode, it will be sent to member. For the additional charges, company can collect. Member is saying send on WhatsApp. I will send on WhatsApp and collect the additional charges. And then they are saying where shares are held in depository serves as the primary form of communication, and they will communicate the things to us in electronic mode. So depository communicates in electronic mode. So what is this exception for Nidhi company, which is important? Now in a Nidhi company, the number of members are very high, and people can have transactions even for 50 rupees or 100 rupees. So just because you are a member with just 50 rupees, I can't send you notice. My post itself today will cost 20 rupees. So they're saying serve the document only on members. For every member, I will not serve the document. My postal cost will go up. Only on those members who is having more than 1,000. Look at this, more than 1,000 in the face value, or more than 1% of paid up share capital, whichever is less. So for a Nidhi company, I don't want to read WhatsApp. I'm telling you the logic, guys. Not for all members, but for some members who have more than 1,000 rupees in face value of the shares, or 1% of the total paid up share capital, whichever is less, only for those members I will send. Then for other shareholders, what I will do? For other shareholders, it will be served by a public notice in newspaper. I will keep it in newspaper so other members will see that, guys. Are you following, guys? That's how it's for Nidhi. For example, when this will happen, if a Nidhi company has to give, let's say, dividend to the, members. I will give dividend by post only for those people who have more than 1000 rupees in face value or more than 1 rupee of total paid up share capital if AGM notice is given. For others, I will just put newspaper notice, you see and come guys. This is section 20. With this, we are done with these three sections, 20, 21, 22. Now let's go to the incorporation related sections once. So in incorporation case, I have to cover two concepts for you. One is all the documents which is filed for incorporation and tribunal order in case of incorporation by false information. If you look at incorporation, I have given entire incorporation in one chart. Quickly to summarize what will happen, the first step is promoter under 2 subsection 69. Who is the promoter guys? Promoter is somebody whose name is mentioned in annual return or prospectus. Either in AR or prospectus name is mentioned as a promoter, or control over the company directly or indirectly, basically has voting power, or in accordance with whose directions board is accustomed to act. So second is controlling more than half of voting power. Third is controlling the board. This promoter will in step 2 make an application in form INC 32. This form is called a SPICE form, simplified performer for incorporating companies electronically. And when I am filling this form, few things have to be mandatory. I should have a DSC, keep your DSC ready. You should have a DIN number, keep your DIN number ready. Keep your MOA and AOA ready, and your name should be reserved. These 4 things should be done before you file to the ROC. What are the 4 things guys? Digital signature certificate, director identification number, MOA and AOA, and name reservation. Once these 4 things are done, I will file to ROC in the same jurisdiction. And this question I am referring to is section number 7. Section number 7 says what all documents will be filed. That is the important one. MOA and AOA, which will be signed by all subscribers along with witness. If subscriber is a body corporate, then director, officer or employee authorized by the board. If subscriber is body corporate, then director, officer or employee authorized by the board. If LLP, then partner to sign and authorized by all partners. Simple guys. For company subscribers, all subscribers will sign. If it is body corporate, then director, officer or employee authorized by board. LLP means all the partners will sign. Along with that, a declaration should be given by following people: advocate, CA, CS or CMA. That's where we get the fees. And any person whose name is mentioned in articles as the director, manager or secretary of the company. So this is the important one. First, who all will sign? Company means all subscribers. Body corporate means people who are authorized by director, employee or of thing. LLP means all the people. Additional signs will come by advocate, CS, CMA or CA and the person whose name is mentioned in the director guys. And declaration should also come from all subscribers and MOA. They should make the declaration of the following 3 things. What are declarations they will make? First, they will tell all information is true and correct. Fine. Then they will tell none of the promoters are convicted in relation to promotion, formation or management of the company. For example, Vijay Mallya is convicted in management of company. Ramalinga Raju is convicted in management of computers. So you should tell you are not convicted in promotion, formation or management of company in the past, and also not guilty of fraud or misfeasance. Misfeasance means taking bribe or breach of duty. For this alone they are saying in the last 5 years. It could be MCQ question. Maybe you were convicted of fraud 7 years back. Now you can start the company. So for this there's a time limit of 5 years. But if you are convicted for an offense of promotion, formation or management, you can forever in your life never start a company. Along with that, few more documents have to be given. What is that? Address. Because registered office is still not established, it will be established only 30 days later. So I will give the address now. Then address, surname, nationality of the subscribers of MOA, proof of identity if it's a body corporate. Basically your address, surname, KYC documents will be given. If it's a foreign director, then I'll give the which country he's coming from. And then every person whose name is there in articles and first director, their consent to act as directors. And if they are directors in some other firm or some other company, give their consent. For example, today I am director in 2 companies. Tomorrow I can start another company or I can be director in some other company, so that some other company will get my consent that I am okay to be director in this company also, because already I am director in other companies guys. Lastly, where subscriber is a foreign national, I need to get some more evidences. If he is residing outside India, his signature, address by and identified by notary public. And if he is coming to India, he needs to have a valid business visa. Somebody coming to India with tourist visa will not get incorporation. You should have a business visa guys. Once this is done, you will file to ROC. ROC will give you a certificate of incorporation leading to section 9, effect of registration. What is effect of registration? Company can now sue the third party can sue the company can own assets in its own name, company can incur liabilities, company has perpetual succession, all those will come. This is the important one. If company is incorporated by giving wrong information. What is the wrong information over here, guys? For example, the director is already convicted or promoter is convicted. I did not reveal that information. Then if tribunal finds out this later, they can do any of this 5. They did not do all the 5. They can order for winding up, or they will tell liability becomes unlimited, guys. So ask the company to close down or liability becomes unlimited, or regulating the management, change the management, alter the MOA for the benefit of the company members and creditors, or worst case, they will remove the name of the company from register of members of company. So no more you're a company. So very simple. Anyone, liability becomes unlimited, regulate the management, change MOA, repeat with me, guys. What to say? Remove the name from register of members, order for winding up, or any other order as it deems fit. Like this, keep revising with me, guys. So with this, we are done with this concept also. Just 2 more concepts to go, which I'm going to take it now, which is entrenchment provision and articles and section 8, full section 8 provisions. Let's get there now. So let's start off now with entrenchment provision. Everybody knows what is entrenchment provision. If they don't know, listen to it now, guys. Generally, for passing any resolution in the company, now let's resume with entrenchment provision, guys. Mostly everybody knows this, but for those who don't know, also listen. Generally, for making any decision in the company, the members will pass ordinary or special resolution. So the most strictest resolution the company has is special resolution. Do you agree, guys? Yes. But something more stricter than special resolution, more restrictive than special resolution is what entrenchment provision is. Certain specified provisions of articles can be complied only by passing an entrenchment, by keeping it in the entrenchment provision, you have to pass a unanimous resolution. For example, if a certain act requires special resolution, I will tell for this, it has to be more stricter than special resolution. It can be unanimous. It can be 90%. It can be 85%. I hope you are getting it, guys. So such provisions can be included in the articles at the time of formation of the company. For example, my company is there. In my company, in Mind and Company, I can put a provision in the articles that to remove me, without my permission, it can't be removed. Or to remove me, you need to pass a resolution with 95% voting power. I already have 7%. So without my consent, I can't be removed. Are you getting it, guys? So big companies do this to protect the core founder team. I can keep this provision at the time of formation of company. Or later also this can be altered. Subsequently also I can alter it. How I can do it? For exam, what to remember? For a private company, this can be added at the time of incorporation and articles, or later it can be altered subsequently in private company by passing a unanimous resolution, guys. Unanimous resolution. For a public company, this can be added at the time of incorporation, or it can be altered subsequently to change the entrenchment provision. If you pass special resolution, that is sufficient. So if I want to remove an entrenchment provision for a public company, first you have to pass a special resolution in general meeting, and then only you can even remove this entrenchment provision, guys. So this is there like an additional defense for companies. Generally for public companies, honestly not much of power, because by passing SR I can remove this, but this is a superpower for a private limited company. Now let's move to the last section, which is section 8 company, guys. Section 8 company, what I have done, first I'll give you some key points covering all some core concepts in section 8 company, and then I will go for what to say if you want to convert a section 8 company into other company, and lastly we'll have if you want to incorporate section 8 company, how we have to do it. Very simple. If you want to start a section 8 company, it is different from a public or private company. So some core concepts that we have learned are different. No minimum paid up share capital. For a private company, minimum paid up share capital is 1 lakh. Here no minimum. Dividend cannot be declared. So many times this came in the past, guys. Then what to do with the profits should be used for object of the business. What is object of the business? Charitable, art, or let's say religion promotion, or let's say to restore natural, what to say, heritage and all of that. So those kind of things, education, all those things is object. The name of the company will not use the word private or public limited, should not be used. It should not be used, guys, because it's not for commercial purpose. I'm not making profits. So what to use, sir? We can use like chamber, trust, association, club. For example, you have this Gincana club or presidency club. Just know New Year got over. I know you would have been in one club. Not that club place. This is a different club for charitable purpose. For starting a Section 8 company, there is an incorporation process. What is an incorporation process? So to incorporate Section 8 company, you have to file INC 32 to the regional director, and when you file to regional director, there are 4 attachments. Just these 4 attachments are enough. MOA and AOA of the proposed company. For any company we give this. CA, CS, CMA and advocate should give an authentication that Section 8 is followed. Same thing is there for regular company. For regular company, CA, CS, CMA, advocate will sign saying that normal provisions are true and fair. Here they will say Section 8 followed. So first 2 points are same. MOA, AOA signed by CA, CS, CMA or advocate. Next, what is unique over here is this. Estimated future income and expense for the next 3 years. What do you think will be my estimated future income and expense, and for what purpose I'm going to spend this income and expense? A projection should be given to RD at the time of incorporation itself. So this is the unique thing that we have over here. And lastly, declaration should be given by each person making the application. All the initial members should make a declaration that everything is true and fair, guys. So when you make an application like this only, the central government will give a special license to operate as a Section 8 company. Few other exceptions of what is different for a Section 8 company is, normally a firm cannot be member in a company, but firm can be member of a Section 8 company, guys. Normally for every company, private company, there are 2 minimum directors, public company 3 minimum directors. For Section 8 company, no minimum directors. Normally for any company, AGM notice is 21 days. Here AGM notice is 14 days. Now, I am not supposed to use profits for personal use. I cannot take for dividend. What if I am using profits for myself? What if I am not following the object? So if objects are not followed, what to do? If central government finds out this, they can take one of these 3 actions. First, they will tell, for you and all calling you Section 8 charitable no use, you are one fraud. So convert status and change your name. That means you become a private or public company. Central government will convert to you private or public. Second cases, they will tell, okay, fine. Instead of converting you to private or public, I don't want you to be in the picture itself. Amalgamate with company having similar objects. I will amalgamate with some other good company. You get out. That company will take over what you're doing, because what you're doing is not fully wrong. 50% good, 50% not good. So at least the 50% good, let them take over. Worst case, such a fraud fellow you are. Wherever you are, that place itself becomes like fraud. You are cheating everybody by saying Section 8 company. So wind up, they will wind up the company, and when you wind up, some surplus of assets and surplus of profit will be there. That surplus assets and profit will either be transferred to insolvency and bankruptcy fund, option 1, or I can transfer to another company having similar objects. Either this or that. I can transfer the surplus to company having similar objects or insolvency and bankruptcy fund. This is when objects are not followed, guys. Now, this is one. Next one. If you want to alter the MOA of Section 8 company, you have to file it to regional director. Before it used to be central government, now delegated to regional director. If you want to alter articles, you have to file to ROC. Simple. Alter MOA, RD. Alter AOA, ROC. Now, sir, all this so far I saw about my license being taken away by the central government if I am not following things. Now, I myself have decided enough of charity. I also want to buy one Rolls Royce car, sir. It's my dream. So let me convert to a public or private company. So if you want to convert to a public or private company, process is very simple. First, the company has to pass a special resolution along with explanatory statement, and they will file it to regional director. Regional director will intimate 4 respective stakeholders: income tax department, charity commissioner, chief secretary of the state, and central government or state government in whose department the company is operating. I will send it to these people, and if these people have any objection, they have to give the objection within 60 days. It's not RD to respond in 60 days, guys. These people, after I file to RD, if they have any objection, if they have any reservation, they will give the reservation within 60 days. Then after the reservation is given, objection is given, once we deal with it and satisfy these 4 departments, you know in real life how to satisfy these departments, guys, but in exam, don't write all those things. RD will give order. Once RD will give order, companies like Happa, I can convert to private or public company. They will pass special resolution, and that special resolution will be filed to ROC, and ROC will issue a fresh certificate of incorporation. That's it. I can now start making profits and buy Rolls Royce for myself. One more thing, when you apply to regional director, how will the world know that you're converting from charitable to private or public? So you have to give a newspaper ad. Whenever I say newspaper, English plus vernacular, and this should be given within 7 days after making application to RD. Let me repeat, once you make application to RD, don't wait for the order. Within 7 days of applying to RD, you have to do what, guys? You have to intimate all the respective stakeholders in the newspaper by public notice. Clear, guys? So these are the provisions with respect to Section 8 company. Section 8 company very important because what you see on screen over here has come in the past. What you see on screen over here has come in the past. But this concept of conversion of Section 8 to private public, no. And how to incorporate Section 8 company for attachments, no, has not come. With this, we are done with incorporation of company expected questions. Now let's move on to the next chapter, guys. Now let us start off with the expected question marathon for prospectus and allotment of securities, guys. If you look at this chapter, in my view, it's little less important for Jan 26 exams, only because in the previous exams they asked for more marks. That means, sir, I will skip this or no. That means what, guys? You will study the other chapters in this 1.5 day and study this chapter in the last, study it in the last. And in that, what are my expected questions for this chapter? First is red herring prospectus, and definition over here it's given as definition of promoters. Actually, it's definition of prospectus, small typo over here. So let me explain the definition of prospectus over here. So we'll start off with prospectus chapter. In that, let me start off with the definition of what to say, prospectus. Prospectus is defined in 2 subsection 70. Before I go to the definition, there are some ways how you remember section numbers. Look at this. 2 subsection 69 is promoter. We saw in the previous chapter. What is the way, sir? Now, promoter, why is he starting a company? Promoter is starting a company, and before he starts a company, promoter's goal is to issue a prospectus. So who is issuing prospectus? Promoter is issuing prospectus to raise money from the public. Are you following? Look at this. Promoter is issuing prospectus to raise money from the public. Correct? So look at the definition also. 2 subsection 69 promoter. In 2 subsection 70 will issue prospectus, and prospectus can be issued only for a public company, not for private. So 2 subsection 71 public company. How chronologically they are arranged? Promoter will issue prospectus for a public company. 2 subsection 69, 70 and 71, guys. Beautiful. Let's proceed. Next, guys. The next thing is going to be definition. The first part of definition is prospectus is basically any document described as prospectus. What is this document? Document takes the same meaning as we have in General Clause Act. In General Clause Act, they say document can be written on any surface. Basically, anything which is written as a document. That means document is written. Correct? That written can be on where? It can be on iPad. It can be on, let's say, wall. Anywhere I can write a transcript as prospectus. And they're also saying such a document which is written, it will also include notice. It will also include circular. It will also include advertisement, or it will also include any other document. So they are saying document described as a prospectus, and such a document also includes, you call it by whatever you want. Don't call it document. The document can also be called as including notice, circular, advertisement, other documents. Repeat with me again. The document includes by whatever name called notice, circular, advertisement, other document. For what purpose, sir? The purpose of this is to issue offer from public, to issue money from public. So document is issued in any form to issue, to collect offer from public. Then I call it as a prospectus, and prospectus also include a red herring prospectus and a shelf prospectus. It includes what all, guys? Red herring prospectus and a shelf prospectus. Are you all with me, guys? Next, what is red herring prospectus, sir? Red herring prospectus is basically a prospectus where 2 things are missing. What are the 2 things? For example, if company is issuing 10,500 crores as capital, then, or for example 10,000 can be arrived at multiplying 2 numbers in any combination, 1000 into 10, or anyway 10,000 into 1. In any 2 combinations I can multiply and arrive at 10,000. So those 2 things what I multiply to find the value, those 2 things are missing in red herring prospectus, which is nothing but price per share and quantum. Quantum is nothing but number of shares. So price per share and number of shares, which is quantum, is missing in RHP, which we will find out through book building issue. So what is important for my exam? This red herring prospectus Three concepts are important. Whichever book you are following, same points. First, the RHP should be issued prior to issue of the main prospectus. So before issuing main prospectus, RHP will be issued, and then you have to file this 3 days before opening subscription list and offer. So for example, if today is the day in which public can apply to the prospectus and get the shares, 3 days before itself, I have to file the RHP. So two things. File the RHP before issue of prospectus. File the RHP 3 days before opening of offer. Are you getting it? So first 2 points are before. Before what? Again, first 2 points. Before issuing prospectus, issue what? RHP. And RHP will be issued 3 days before subscription list and offer. When you keep repeating, it will get into your subconscious. When it gets into your subconscious, it will come out in your exam, guys. And after closure, because so far we saw until opening, during the days people will invest money. After closure, whatever variation is there between the RHP, what variation is this? Variation between RHP and prospectus. So whatever variation is there over here, guys, this variation will be filed, and the price details. What price details? The price per share and quantum. Price per share and quantum will be filed to ROC and SEBI, guys. So RHP summary, price per share, quantum not there. Issue it before opening prospectus, 3 days before opening subscription list. After closing, file the variation to SEBI and ROC, guys. Next concept that we have over here is basically fraud, section 447. So fraud is basically coming in many sections, not just over here, guys. It comes in many sections, but it's there as part of this chapter. For example, let's say deposits company is issued in the intention of fraud. They are not repaying deposits. In many cases, fraud will come. I will show you what all cases fraud will come now. So these cases are there in the starting of my material. I have a summary of cases where this section 447 will come. For example, incorporation of a company by giving wrong information, or incorporation of company after incorporation company has found out, or forming of company with charitable objects where company is formed for charitable purpose but conducted fraudulently, profits are used for personal use, or in prospectus chapter itself, criminal liability for misstatement in prospectus, that one, or in section 36, punishment for fraudulently inducing people to invest. So 34, criminal liability, or 36, fraudulently people investing money for price fluctuation, that section, or 38, personalization for acquisition. Like for example, you are not the shareholder, but you are trying to be the shareholder by changing your name, fictitious name, those cases, or certificate of shares by issuing duplicate share certificate. 56, transfer and transmission, again duplicate share certificate. 66, reduction of share capital, when fraud will come over here. If company, any officer knowingly conceals the name of the creditor, or knowingly misrepresents the name of the creditor in this case. Or section 76A, deposits, company has defaulted in deposits. Like this, we have a lot of sections. Last two sections, section 90, register of significant beneficial owner, willfully furnishes wrong or incorrect information for section 90. Or last section 40, removal or resignation of auditor, where auditor has involved in a fraudulent manner. Therefore, tribunal will remove the auditor, and auditor cannot be reappointed for 5 years. In all these cases, the same penalty of fraud will come. Now I hope you understand the importance of this section. Usually we skip fraud. This time you don't skip fraud. At least for these, we skip penalties. Here if you skip the penalty, it becomes a fraud for exam, guys. Jokes apart. So if a fraud is done, you have to ask yourself, this penalty, I am just going to read it out in the next 1 minute, but you have to mug up. But I will tell you what is the trick over here as to at least what is common over here. Involves public interest, does not involve public interest. You tell me which penalty is more. Does not involve public interest only, penalty will be less. Involves public interest means penalty will be high. So imprisonment, minimum 3 years, maximum 10. Fine, minimum amount involved in the fraud, maximum 3 times the amount of fraud, guys. Are you following, guys? So involving public interest, repeat with me, go to jail 3 to 10 years. Fine, minimum whatever fraud you did, maximum 3 times the amount of fraud. That's it. Simple if it is public involved. No public involved. Fraud is more than 10 lakhs or 1% of turnover, whichever is less. You have to compare. Keep 10 lakhs as one base. Take 1% of turnover of the company, whichever is less. Then you see where your fraud is falling. If your fraud is falling more, for example, my fraud is, let's say, my fraud is 7 lakhs. Okay. Now, the question is I have to compare with 10 lakhs or 1% of turnover. If my 1% of turnover of the company is, let's say, For example, 12 lakhs is the 1% turnover of the company. Now my fraud of 7 lakhs, I have to compare with whichever is lower. What is lower over here? 10 lakhs. The minute, what to say? So the 10 lakhs is lower. That means it's crossing 10 lakhs. No, it's not crossing 10 lakhs. So the minute it's not crossing 10 lakhs, I will come to the second bucket. What is second bucket? The fraud is less than 10 lakhs or less than 1% of turnover. Yes, it is less than 10 lakhs because I'm taking whichever is lower over here. So the minute fraud is less than 10 lakhs itself, not much penalty, imprisonment up to 5 years and fine up to 50 lakhs, guys. Fine up to 50 lakhs. Are you following? The minute the fraud is crossing 10 lakhs, guys. The minute the fraud is crossing 10 lakhs, I hope you're all understanding. Okay. If it's crossing 10 lakhs, penalty same as public interest. If it's crossing 10 lakhs or if it's crossing 1% of turnover, whichever is lesser. So whatever happens, either it will be 10 lakhs or amount lower than 10 lakhs. For example, in some other scenario, I will keep 10 lakhs over here. If 1% of the company is only 5 lakhs, then my base will become 5 lakhs. So if 1% of turnover of the company becomes 5 lakhs, and in this case, if my fraud is again 7 lakhs, that time the fraud will not fall in this bucket. It will not fall in this bucket. It will fall in this bucket because this time my revised base is 5 lakhs. I hope now you understood how this computation of fraud amounts will be done, guys. So in this case, if fraud is crossing 10 lakhs or 1% of turnover, then it's same as involving public interest. Fine, minimum amount involved in fraud, repeat with me, maximum 3 times. Imprisonment 6 months to 10 years. Here it's 3 years to 10 years. Here is 6 months. So the only difference is this, where public interest is involved, or if it's more than 10 lakhs without public interest, only imprisonment period is defined, changed. Less than 10 lakhs means imprisonment up to 5 years, fine up to 50 lakhs. That 50 lakhs is the amendment, but 2 years back amendment, but not yet tested in the exam. With this, we are done with section 447, fraud also. Next, let me go to underwriting commission, guys. If I go to underwriting commission, fairly simple. Underwriting commission, how do I pay this commission? This commission can be paid either by the profits earned by the company, or I am doing underwriting for what, sir? For some fresh issue of shares or debentures. So from this fresh issue, I will get some money. So proceeds of the issue also can be used. So source for paying underwriting commission is 2. Profits of the company or proceeds of the issue which I am doing now. For shares, it is 5% or what is mentioned in articles, whichever is lower. For debentures, it's 2.5% of what is mentioned in articles, whichever is lower. That's it, simple. Underwriting, remember this, 5% for shares, debentures 2.5% of which articles mentioned, whichever is lower. And it can be paid out of proceeds or what to say, profits of the company, guys. Next, let me go to the next question where we have irregular allotment. The next one is irregular allotment. This concept of irregular allotment, guys, we don't have it in the act, but this comes basically from previous case laws. Ideally, I should be teaching this to you in the end of the chapter, but since you guys know the syllabus, you know everything, I'm only revising. So irregular allotment is a question which has come in past exams. So basically, in this chapter, if different provisions are not properly followed, then it becomes irregular allotment. For example, company does not issue prospectus under section 23 when issuing to public. So I am getting money from public, but I did not issue prospectus. It becomes irregular allotment. Or contents of prospectus in section 26 is missing, or misleading information is given. All the contents of prospectus like last 5 years financial information, company's directors details, what is the future production, what is the risk of this project, how much money I am raising, for what purpose I am using. Like this, we have a list. That list properly is not disclosed. Or prospectus is not filed. Just now we saw in RHP and other sections, prospectus has to be filed register, not filed. Or minimum subscription 39 is not received. What is the minimum subscription? 90% should be received. That is not received. It becomes irregular allotment. Or minimum amount on application receivable is less than 5% of nominal value. You know that application money should at least receive 5% of nominal value. That also is not received. Or lastly, when you finish the allotment, you will file to stock exchange, SEBI, to get the shares listed in stock exchange. For example, I am making application in 3 stock exchange. I got in 2. In 1 I didn't get. Still allotment becomes irregular. Allotment becomes void. The entire money has to be refunded because a stock exchange did not give you permission. So approval from recognized stock exchange has not been obtained for listing. So if any of these points across the chapter is not followed, allotment becomes an irregular allotment, guys. Next, we will go for the remaining concepts in this chapter now, which is starting off from this variation of shareholders section, variation of concept section 27. So let's start off with variation as discussed, guys. Variation of object of prospectus. When will this situation come? For example, let's say I'm a company. I raised 50 crores of money from the public to build a hospital. But I finished the hospital in 40 crores itself, for example. The remaining 10 crores is there, no. I am telling them, instead of building a hospital, in this 10 crores, I want to build an apartment and get into real estate business. But the public did not give me money for getting into real estate. They gave me for hospital. So whenever I want to vary the object for which money in prospectus is raised, the process is very simple. First, the company has to pass special resolution through postal ballot mechanism, and for that special resolution also we have to give an explanatory statement. I will come to the ES in the last. So special resolution in postal ballot, then I have to advertise in the newspaper. You know how many newspapers, guys? Newspapers comes itself 2 newspapers, English plus 1 vernacular, and company should also give the notice on the website of the company. Still, even though I pass special resolution, it is, let's say, more than 75%. Still, there are some people who are not happy with this. But just because others agreed, the ones who are not happy, I cannot force them to invest in real estate. So I have to give exit opportunity to dissenting shareholders. That's it. These are the 5 points, guys. Let's repeat again. Special resolution along with explanatory statement in postal ballot, newspaper, 2 newspapers, notice on website, and exit opportunity to dissenting shareholders. What is there here? Only I have summarized it for you. This is nothing but your section 27 along with rule 7. 27 rule 7, guys. And over here, the special resolution I told you is along with explanatory statement. No need to mug up this. Explanatory statement will give what details. Why I raised the money, original purpose, total money raised 50 crores, how much I used 40 crores, object achieved, yes, hospital built, details of unutilized money 10 crores, variation, real estate, reason and justification, real estate will give me more returns over here, time limit within which variation will be achieved within the next 2 years, risk factors, real estate, people may not invest, other relevant information. Like this, general points will be given along with the explanatory statement, guys. Next, let's go to section 29, DMAT and private placement. These 2 provisions, guys. DMAT. Today, all the securities will be in DMAT form, guys. Especially if it's a public company, mandatory everything has to be in DMAT only. But if it's a private company, in fact, my company, I don't have it in DMAT. I have to keep it in DMAT only if I'm doing one of these 3. If I'm going to issue a bonus share, or if I'm going to issue rights share, or if I'm going to do buyback. In this scenario, these 3 will not be allowed if I'm not having shares in DMAT. And that's why if at all if any private company wants to do these 3, they have to have it in DMAT, guys. Some other general points what's important is, since this DMAT is maintained by depository, share transfer agent, we have to pay them some deposit. So security deposit of not less than 2 years has to be paid with them. And then PAS 6 has to be filed within 30 days of the end of half year. So I have to file PAS 6 twice every year, which will be signed by CA and CX, giving details of what details I will be giving in this PAS. I'll be giving the following details. I will be giving basically a reconciliation. A reconciliation of what, sir? Reconciliation of how many shares are in physical mode and how many shares are still in DMAT, because for companies not everything may be in DMAT. So how many are in physical, how many are in DMAT? Some shares of some shareholders who had in 1980s yet to convert. So those kind of reconciliation I'll be giving it. And then any grievances which is there, anything which is addressed, any grievances which shareholders have raised against the company and complained to SEBI, how did the company address them? Are they addressed or not? These are the key provisions that we have in section 29 with respect to DMAT, guys. Next, I told you we're going to go to private placement. So if you go to private placement, let's quickly finish this private placement. It's big provision, but I have summarized notes over here. Generally, private placement can be given to maximum 200 people. 200 people in how many days, guys? This is 200 people in one financial year. So this is 200 individuals only maximum I can give private. I can do private placement even 4 times in a year. It's totally fine. But in that 4 times in a financial year, maximum I can give it to 200 individuals and apply limit individually to each security. That means equity shares 200, preference shares 200, debentures 200. That means in a year, I can do multiple private placements to ensure I can give up to 600 individuals. 200 for equity, 200 preference, 200 debentures, guys, because each are different class of securities. When I am counting this 200, I should not count two types of investors, which is nothing but my QIBs and my ESOPs, to whom employees, these two will not be counted in my private placement. Lastly, limit of 200 for certain type of companies, 200 limit will not be counted. What are they? NBFC and National Housing Bank. For these two type of entities, the limit of 200 will not come for private placement. That means they can give for more than 200. So quickly, let's revise. 200 is in one financial year. I can do multiple times of issue, but only one financial year. And then this 200 will not include QIB and ESOP. Apply for each security individually. This limit itself is not applicable for NBFC and National Finance Bank. And lastly, for doing private placement, company has to pass a special resolution, and this special resolution will be valid for 1 year. So within this 1 year, you will be doing how many ever private placements with this one special resolution. So let me repeat that again, guys. I will pass SR, and that SR is valid for 1 year, and within that 1 year I can do multiple private placements in such a way that maximum I give it for 200 individuals, guys. Next, if I come down for the time limits, if you see, first I told you company has to pass SR. Whenever SR comes, because it's a special business, explanatory statement also will come. Now what is the time limit? First, the company will have some identified people to whom all I want to give private placement, whom all I want to give the offer. So whomever I've identified first, offer should be given to them within 30 days. For example, if I've identified Dhoni, if I'm saying Dhoni, I want Dhoni to invest in this company, I'm giving him an offer. I've identified him. The minute you identify him, offer should be given to him within 30 days, and offer will be given in the form called PAS4. Once offer is given, that should be filed to ROC within 30 days, guys. PAS5. What I will file to ROC? To whom all I gave the offer. So for example, I gave offer to 10 people. I identified 10 people over here. Once I identified 10 people over here, guys, to those 10 people, I have to give offer within 30 days in PAS4, and within the next 30 days, I have to intimate ROC who are those 10 people. That list should be given to ROC. Then once offer is given to them, they will take their own sweet time. And once they give the money should come to me only in banking channels. It should not come in cash. It should come only in banking mode. Once the money comes, I have to allot within 60 days, guys. Are you following? I have to allot the money within 60 days. And once I allot within 60 days, PAS3 will be filed to ROC within 15 days, guys. So 60 plus 15, 60 days for allotment, and then you will file to ROC within 50 days. After allotment, if you have not filed to ROC or you have not allotted itself, then you will refund in 15 days, and interest is at 12% from the 61st day. No grace period. So let me revise this fully again. For private placement, the time limit process is over here. I will pass special resolution, of course, with explanatory statement. Once I do that, I will identify people in the special resolution to whom I want to give the offer. Once I identify them, within 30 days, offer has to be given to them in PAS4. Once I give them offer within 30 days in PAS4, immediately intimate ROC within 30 days in PAS5. What I will intimate ROC within 30 days? I will intimate ROC list of people to whom the offer is given, guys. Once offer is given to those list of people, next money, when they give the money, that money will be collected by me only in banking channels. And once the money is collected in banking channels, I have to allot the same within 60 days. I have to allot it, guys. And this allotment will be done in PAS3. So once I allot in 60 days, after I allot, I'll have to intimate ROC within 15 days. So it's going to be 60 plus 15, guys. Allot within 60 days and intimate ROC within 15 days. If I fail to allot, refund in 15 days at 12% interest from the 61st day. If I'm giving private placement for people, anybody who's sharing land border with India, amendment, Which are the countries sharing land border with India? Pakistan, let's say Bangladesh, Nepal, Bhutan, all these countries wherever there is land border. For example, let me show you what are those countries with land border, guys. All these countries with land border: China, Nepal, Pakistan, Bangladesh, Myanmar and Bhutan. So from these countries, if you're issuing private placement, you have to get FEMA approval. FEMA is a favorite chapter waiting separately, guys. Are you following? And few other provisions over here. No form of public advertisement is allowed. You cannot tell the public or anywhere put in newspaper that I'm doing private placement. Come ask me, I will give you the offer. No, it should be only within your private close circle. Next, company cannot make fresh issue unless when a pending issue is, when I'm already eating biryani, already biryani is in my mouth, I can't eat biryani again. For that, either I should swallow the biryani or I should spit it and eat. Same thing over here. Company cannot make a fresh issue unless the prior offer is, what to say, prior offer is made. That means prior offer is completed. So prior offer is completed or existing offer is withdrawn, guys. If I have to rewrite this over here, in better words, I can write here until the prior offer is completed. Are you following, guys? So only when the prior offer is completed, I can make a fresh offer or existing offer is withdrawn. This is the summary of private placement. In just 5 minutes, beautifully we completed the whole thing, guys. And private placement, it was not tested in last 2 attempts, so it becomes a little more important. Criminal and civil liability, this also came recently in few, these are all past exam questions. So if I go to criminal and civil liability, remember this, that people are giving their hard-earned public money. Hard-earned public money is given, and in that prospectus, we expect only truth and only truth to be given by the company and prospectus. But certain cases where truth is not given, criminal and civil liability will come. What is criminal liability? The person will be imprisoned, bye Tata, in jail. 35. Civil liability means whatever loss is sustained by me because of your wrong information, you have to compensate that loss. So when will criminal liability come? Simple points I have given in the book, guys. If the prospectus includes any statement which is misleading or omission of any statement in the prospect which is misleading. For example, I told something which is wrong, point 1. Or second, I forgot to tell something. I'm again repeating. First point, I told something which is wrong. Second point, I forgot to tell something which is important. So first includes any statement which is misleading or omission of something which is misleading, then liable under section 447. I already showed you what is 447. What is the defense available to party? The party who is saying that no, I am not at fault, he has to prove that such a wrong statement is immaterial. It is very immaterial. Or the omission, by not telling this, nothing is going to happen, that is immaterial. Or the person has to prove, what he has to prove, that he has reasonable ground to believe that statement was true. The person who was included this feels that, hey, I really thought this is needed, somebody else fooled me. Or he is believing that this omission was necessary. In his view, he feels this is important. He feels this is not immaterial. He feels this was true. He has to prove this. The judge will decide, guys. In civil liability, what they are saying, every person who has authorized the issue of such prospectus, who are they? Promoters, directors, existing and proposed future directors, experts, or every other person who has authorized the issue of prospectus, they are liable to pay compensation to every person who has sustained loss. See, you have signed. Looking at your side only, I came in. So you have to compensate me the loss. And therefore, and they're saying if the intention was to defraud, hey, I signed by knowing it's fraudulent only. How I am revealing? 4 times if I hit you with belt in the jail, then you will tell, oh, sorry, I did this for cheating people, please forgive me. That time if intention is to defraud, you are personally liable. You have to pay the full loss, whatever the person has suffered. Now, what is the defense for civil liability? 4 defenses there. All defense look similar, but let me explain, guys. Director withdrew his consent before issue of prospectus or issued without his consent. Self-explanatory. The above director who signed, he's saying I didn't sign it. He's saying it was issued without his consent. I didn't give my consent, or after giving my consent, I withdrew the consent before issue of prospectus. What is first one? My consent is not given, or consent is given, I withdrew it. Second, prospectus was issued without the person's consent. Hey, I was just sleeping, I went for a vacation. When I went for vacation, other directors issued the prospectus, and on becoming aware of this, immediately I gave a reasonable public notice in newspaper, everywhere, Instagram, everything possible, that it was issued without my knowledge. So please don't penalize me. I have given as much as possible, I made the public aware. Third, I signed based on some expert. So expert gave a report. How can I be liable? So therefore, a person who made statement expert report is not liable. If I relied on the expert, I signed relying on the expert. So if the expert made a mistake, you punish the expert and don't punish me. And also, expert has not withdrawn the consent. So the mistake in the prospectus is because of the expert. Punish the expert, not me. And last one, the person who made the sign has reasonable ground for believing that the statement was true and believed it to be true until the time of allotment. This is basically in Contract Act misrepresentation. What is misrepresentation saying? Intention is not to default, but what is the intention is not to defraud, sorry. But I thought it was true, guys. I really thought it was true. I'm very sorry about it. So like this, if you can prove in these 4 cases, then you have a defense. So come back over here. We are done with civil and criminal liability also. Along with this, I would like to add this concept also. Section 36, punishment. It's not there in the expected question list, but I want to add it in the marathon if you're watching, guys. Punishment for fraudulently inducing person to invest. Where one person induces somebody else, I am inducing you, or somebody is inducing you for these 3 things. For getting loan from a bank, those credit card call people, or entering into underwriting. To make you enter into underwriting, I am fooling you, or by securing profits from sale of securities through price fluctuations. I am making you buy shares, saying the profit price will go up and come down. I am doing all this wrong information by making you take loan, by making you get into underwriting, by making you purchase shares, and I am earning profit from that. I'm giving this wrong information, wrong forecast, deceptive information, then such person is liable under section 447. Now getting into the next set of questions, guys, which is section 30, 33 and 38. These 3 are basically there in the study mat, never tested, small concepts. Let's quickly get there, and with that, prospectus chapter will come to an end. So let's quickly get there, guys. First is section 30. Advertisement of prospectus. If a company is going to advertise the prospectus in newspaper, for example, sometimes you will see in Hindu or Times of India front page, this company is going for prospectus issue. If they are doing advertisement, they have to give the following information. In simple words, the points you're going to see here is similar to the clauses of MOA what you will see in a prospectus. MOA clause are here. What are this? You will find basically here object clause, liability clause, amount of share capital and signatories of, so object clause of the MOA, liability clause is there, amount of share capital, signatory subscription clause and capital structure. Basically except name clause, all the other clause of MOA will come. That's it. Very simple, guys. 33. In certain cases, abridged prospectus is not needed. What are those 3 cases? Very important for exam. So basically, every application form shall be accompanied with an abridged prospectus. What is the abridged prospectus? Another smaller version of prospectus. And this prospectus will basically be attached always, but in certain cases not needed. What is it? In underwriting agreement. In underwriting agreement for shares or rights issue. So basically underwriting of shares and debentures, no need abridged prospectus because underwriter will anyway read the whole thing and it's only one party who's a QIB. Rights issue not needed because my existing shareholders already know about me. And last, shares or debentures not issued for public. So these 3 cases, repeat with me, guys. Section 33, repeat with me quickly. Don't lose the energy, guys. We're only 1.5 hours into the marathon. So in these 3 cases, no need abridged prospectus, underwriting agreement, rights issue and not issued to public. Okay, wow. Next, 38, last one. Punishment for personalization for acquisition of securities. Sometimes, today in IPO, you will see in reels, everybody will want to issue for IPO, get the allotment because you have IPO listing gains. So for that, what people used to do in earlier days, just to get the IPO, we used to do multiple applications. When I used to go for college, I didn't get seat in Laila College, guys. So that time what I did, Anosyama, I wasted money. I bought 4 applications. I don't know what I thought that time. I told Karthik Manikonda, Manikonda Karthik, Karthik M Karthik. Like this 4 applications. In one I gave one number, one I gave one more number, one I gave my dad's number, one I gave my mom's number. 4,000 rupees I spent and put 4 applications. Nothing they called. And finally okay, that's it. It didn't happen, guys. Okay, didn't have the right didn't get good marks in 12th and I didn't have the right contacts. That's very important in life. Remember, build your network, build your contacts. You never know when they'll be helpful. Okay, because of that only, because of the contacts that I have built, the next set of batches that I'm doing for CA Inter, guys, for May 26, September 26 and Jan 27, every student who's buying recorded class with the CA classroom, because of the network I've built, what I'm giving them, guys? Along with the class, you get these 5 things. I have done a collab with this company called Gooey, where students will be given free AI course for students of CA classroom. How did this happen? It's because of the network I have built. For every student, we are doing factory visit to A to B, big company, other on the one factory visit. Next, with IIT Madras, AI course is being given for free. With Intel, AI course is being given for free. With one of the top LinkedIn personality who makes resumes, with them for every student of CA classroom, after your exams, resume building will be given. So along with the class that you buy with CA classroom, you're getting other added benefits like AI courses, resume building, factory visit. How did I do this? And how did I get all this? Because of the network I built with all these people. I just called them and told, hey, I'm taking class for CA students in 2026 and 2027. For all my students, can you do all this? They just said, yes, we will do it for you. So all this I'll be announcing it after exam separately. But suddenly, sorry for distraction, guys. Already we don't have much time. Getting back to the subject. So section 38, when you're applying for allotment of shares, anyone applying for securities in fictitious name, fake name, instead of Karthik, I'm applying in some other name, let's say Kaka, so fictitious name. Applying in multiple applications or different combination of surname. So multiple application, and I told you example, Loyola College example, or directly or indirectly inducing a company to allot or register transfer of securities to him in a fictitious name. Basically, I'm using a fake name to get the shares allotted to me. In simple words, anyone using dummy identity to get the shares allotted during IPO or make multiple applications to increase their chances of allotment. In this case, whatever gain and what is the consequence of above registration, the person getting allotted in fictitious name is liable as a shareholder. I am liable, and the court will order for disgorgement of gain. What is disgorgement of gain? Basically, whatever gain is coming, this will be transferred to IEPF. Affected people in some other case will get this money that you have earned, guys. So with this, we are done with prospectus and allotment of securities. Now let's go for share capital and debentures, guys. If you go for share capital and debentures, this chapter is very important, guys. Look at this. In September 25, 15 marks came. Okay, 15 marks came in September 25. And previous attempts also, MCQ or main thing, somehow this chapter comes. So some big chapters, for example, in income tax, will you skip PGBP and capital gains? Maybe TDS, you may skip, that also you should not. But PGBP and capital gains in income tax, or exemptions in GST, do you skip it? No. Like that only we have share capital and meetings chapter. So here in expected questions, what I have given are the important questions. Let me go through them, guys. Alteration of share capital, section 61. Rights issue, amendment, 7 days not yet tested. Or procedure related concept and bonus issue. Reduction of share capital, due for long time. Differential voting rate, 43 rule 4. Concept of forced transfer and rectification of name. Sweaty equity shares and securities premium, and deemed redemption of preference shares, section 55, and debenture related concepts. For very long time this is due, especially in new syllabus. They have not asked the question in debentures except in 2024 May, I think. Then issue of shares with discount and small sections 49 to 51. Now how did I map these three questions, guys? How did I map these set of questions? These are areas which are not yet tested in new syllabus. For example, section 66, reduction of share capital, not yet tested. And some areas like rights or bonus or sweaty equity or securities premium or debenture related provision, tested long back, it has been tested, guys. So it's been tested long back. So I have kept this based on past trend. But for these kind of chapters, my suggestion is, at least when I am revising, I want to revise all the sections from section 43 to section 72. Fully I want to revise till end of debentures, guys. So who will be learning these expected questions? Sir, I skipped share capital chapter. I don't have time to study share capital chapter. Then at least these concepts you will learn and go to exam if you are lucky. But now in the expected question marathon, I will be revising the entire share capital for about 40 minutes. And this 40 minutes alone for share capital and debentures chapter, guys, I'll be giving you a lecture which I took for September 25 exam as part of the Gen Z marathon. And I personally believe that 40 minutes, how I revised share capital and debentures, I revised it in front of some students in offline class, in front of some 50 students. And many students told me, sir, in that 40 minutes, how you revised share capital and debenture chapter, it was amazing, sir. It was too good. So I don't want you to miss those 40 minutes. Even if I redo it again now, all these 10 concepts, it might be 30 minutes. So in this video, in the expected question marathon you're watching now, for the share capital 40 minutes, I will be attaching that video alone, guys, that chapter. So that time you will be seeing me with long hair, so you can easily identify. Don't skip. If you have not watched that, those 40 minutes you watch it. And if you have also watched it in the past, no harm watching those 40 minutes to revise the whole chapter, guys. With that, let's move on to the share capital and debentures, and then we'll go on to the next chapter after that.
Hi guys, let's do the Gen Z revision of the big monster chapter, share capital and debentures. Gen Z notes itself will run to about 7 or 8 pages. We will try to close this in less than 30 minutes for the whole chapter. Okay. First, it is from section 43 to 72. There are two types of shares, you all know, equity and preference. Equity has what advantage? Voting rights. And equity also, there is equity with differential voting rights. In preference, preference for what? Preference for dividend and preference in repayment of capital and preference in surplus after distribution of all liabilities and capital. After paying capital, if I still have surplus, they will take it. This is section 43, kinds of share capital. 44, 45, not there in syllabus. Because I go in section number, I will just keep taking that way. Next to 43, 43 rule 4 talks about conditions for differential voting rights. Differential voting rights, today practically company can't do it, but it's still there in our syllabus. Simple. Always you start off any procedure with the approval that is needed. Approval, default in the company, approval that you need from members, from company articles and ordinary resolution in general meeting. Such a resolution you should pass in postal ballot method. Postal ballot method, are you following, guys? After passing resolution, the post issue maximum DVRs in a company can be 74% of post issue capital. Are you following, guys? So AOA, ordinary resolution, maximum is 74% post issue, pass in postal ballot. Postal ballot will come if it's a listed company. Listed company, I have to do in postal ballot over here, but others also postal ballot only actually. Next, they are checking about some defaults. You should not have defaulted and not been penalized. Last 3 years, let me finish off, sir. I will split this into 3 years and 5 years. In last 3 years, no default in filing financial statement and annual return. And again in last 3 years, no default in RBI's, SEBI's, CRA and FEMA. Are you following, guys? So these are Gen Z notes that we actually give in class, guys. Okay, I make students do it. And last 5 years, only 1 point, no default in all types of debt and equity. Look at this. What is debt? Deposits, equity, preference, dividend, no default, interest on deposits and debentures, repayment of loan, no default in basically principal and interest or repayment of preference and dividend or buyback. Okay, next, IEPF transfer should have been done correctly. If there's any IEPF transfer, they didn't transfer to IEPF also, this provision will come. Are you following? Next, other points what they're saying, these are base points. So approvals 3 years and 5 years. After that, what they're saying, DVRs, next, existing shares cannot be converted to DVRs. Only fresh issue you should make. You can't do any conversion. And then you should maintain details of DVRs in a separate register called register of members. You have to maintain it. Are you following, guys? Then some more points I will add here. Company should also give an explanatory statement, section 1 or 2. Company should give what, guys? Explanatory statement as to why they are doing that. And also company should disclose in the board's report. Company should disclose what, guys? In board's report as to why we are doing DVRs. Are you following it? So 1 or 2 is explanatory statement, 134 is board's report. All other rights about getting bonus, rights issue, all those other rights are pari passu. So there are 3 more points I will add over here. So separately, these are the points, guys. Are you following, guys? So these are the points for DVRs. Can you recollect, guys? 1 or 2, 134 explanatory, board's report, and all other rights should be pari passu. Next, to proceed, section 46, share certificate. Share certificate is mandatory. It can be signed using person authorized or with common seal. Who has to sign this? Just like what we saw in section 22, authentication of negotiable instrument. If company has common seal, I will sign using common seal. If common seal is not there, CS plus director, CSA ilana 2 directors. Are you following, guys? 1% company, if 1% signs, it's enough. This is section 46, share certificate. 47, voting rights. You tell me, equity shares, 1 share is 1 vote. DVRs can be different. Preference shares, can they vote? No. But they can vote in case of, if it's going to affect their rights. If it's going to affect their rights, they can vote. Or If dividend is not declared for 2 years, 2 years I didn't give dividend. If it's a cumulative preference share, then they can vote on all resolutions. But even if dividend is declared, dividend not correct kudutna sir, okay, they can still vote on winding up and reduction of capital because that's going to affect their rights. So basically they can vote for anything affecting their rights. What's going to affect their rights? Winding up and reducing capital, so they can vote there. Dividend not paid for 2 years, they can vote on all resolutions. This is section 47. Are you all with me, guys? 43 to 47 done. Next is 48, variation of shareholders right. If you want to vary any shareholders right, first I told you always source. MOA and AOA should provide for the same. If it is not provided in MOA, at least the terms of issue should not prohibit the same. Are you following, guys? So MOA or terms of issue should provide for the same. Now that approval is there, sir, source of power is there. How to do variation? Very simple. They are saying for doing the variation, first you have to check if it's affecting only one class or if it's affecting more than one class. If it's affecting only one class, yeah, okay. So they are saying, sorry, affecting other class. This other class affecting only that one class. If it's affecting only my class, then consent of 3/4 of members of that class or by passing a special resolution. So if it's affecting only my class of shareholders, 3/4 of consent or by passing a special resolution. If it's affecting other class, sir, then additionally apart from this, consent of 3/4 of members of such other class should be obtained. So my class now it's going to be 3/4 in special resolution. If it's affecting some other class, then I have to get the permission of other class also. In book it will be used as 75% both in value. Are you following, guys? Now if somebody is having dissenting shareholders, they are not happy with this. Rights of dissenting shareholders. One shareholder, I can't do anything. You need at least 10% of dissenting shareholders. Such 10% dissenting shareholders can apply to tribunal within 21 days, and tribunal will pass an order. That order you have to file to ROC within 30 days. Are you following, guys? Very simple. So dissenting shareholders 10%. They have to appeal within 21 days. Once the order is passed, you have to intimate ROC within 30 days. Whatever tribunal is passing, that is final. This is section 48. Are you following, guys? Next, 49 came for 5 marks once. Very small section. Calls to be made on uniform basis. Section itself gives the answer. Meaning, if I'm making a call to a particular class, I have to call everyone to make the call money payment. I can't ask specifically only Vishnupriya you pay or only other person pay. Everyone should make the payment. Otherwise, don't call itself. Next, calls in advance, you know. It's optional. If company wants, a shareholder wants, he can pay. Now, for the excess, will he get voting rights? No. For the excess, will he get interest, sir? Interest can be maximum. Not max. Interest can be 12% as per articles. But I can remove this. I can make it 0 also. It's only optional as per company's choice. This is section 50. What is section number 51? Payment of dividend. Sir, I have shares of rupees 10 each. Face value. Paid up value is 8. Dividend will be paid on face value or paid up value? At the option of the company. So you can pay in face value. Here I mean is nominal value. So dividend can be paid on nominal value or paid up value if articles authorize. That means company's option. So default nominal value, but I can also pay on paid up value if articles is going to authorize. This is section 49, 50, 51 related to your calls in advance and calls in arrears and dividend over there. Next is section 52, guys. Exam porthodukku 52 is simple. If they ask you, they will ask you straightforward question. What is the usage of securities premium? 5 points, 5 marks. You will be lucky if that comes. They can use for buyback and bonus, and you can do write-off of 3 things. Writing off preliminary expense, writing of commission or discount allowed at the time of issue of shares, or premium on redemption of preference shares and debentures. How to remember? Buyback bonus. Then one is preliminary expense. Then at the time of issue of securities, there is discount and commission at the time of issue. At the time of redemption, preference. At the time of redemption, premium. Are you getting it, guys? At the time of issue of securities, at the time of redemption, whatever cost comes, preliminary expense, buyback and bonus. Are you following, guys? This is section number 52. 53 next says, can I issue shares at discount, guys? No. It is issuing at discount is void. But beyond that, I like to do only void things, sir. I am issuing at discount. Then you have to pay interest at 12% for the entire period in which you collected the shares. There is no grace period. From the entire period you have to pay. Exception is what, sir? 53 or exception is 54. Sweat equity shares can be given for discount, or if it's for a scheme with creditors, debt reconstruction scheme under statutory resolution plan. Basically your internal reconstruction chapter, but don't try internal reconstruction here. Debt reconstruction scheme under statutory resolution plan with court approval. Then I can go issue at discount. Sweat equity shares, again we have procedure guys, follow. Sweat equity shares, always I start off with approval guys. That's make it a habit. What resolution? Special resolution should be passed. That is valid for 1 year. Why sir it's valid for 1 year? In that 1 year I can give to any employee. To whom I can give sir? Employee or directors. Now I don't want to give restriction. Anybody can be smart. I can't tell only people in Chennai are smart, people in Bangalore are smart. So they can be located in India or outside India. Such employee or director can be holding companies or subsidiary. I can give the ESOP to my holding company's director also, because he only was the brain. Are you following guys? Clear? So you know approval. Special resolution valid for 1 year. Keep repeating with me. What are you all looking at me repeating? I can give for employees in India or outside India, holding or subsidiary. Once you give, lock-in is for how many years? 3 years. Percentage. I can maximum give for 15% in one financial year or 5 crores, whichever is higher. But overall, lifetime should not cross 25%. So in a year 15%, lifetime 25%, startup company now 50% of paid up share capital can be given. Are you following guys? Clear? Again, here some points we have. Company has to have, give explanation 1 or 2 why we are doing this. 134, and also I have to maintain section 88 register. These 3 points will repeat 43 rule 4 and here. Points are going to repeat. What are the points that's going to repeat guys? Explanatory statement is 1. 88. Register of members details should be given and both reports should be given. Are you following guys? Then additionally we have one more point. Again this point also is repeat from previous. Rank pari passu with other shares. That means all other rights for employees like bonus, dividend will be same as other shareholders. Are you all with me guys? Hello. Then additional 2 more points. There should be valuation report given by a registered valuer for giving a discount. And they are also saying company has to follow guidance note on ESOP. Here and there 1-2 points missed. I remember now I'm writing it. Are you following guys? Okay. Company has to follow what guys? Guidance note on ESOP. So look at this. ESOP law, what are the new common points from DVRs? 88 register of members. 1 or 2 explanatory statement. Boards report disclosure and pari passu. These 4 points are coming in 43 rule 4 DVRs and it's coming here. Additionally, what are the new points beyond limits sir? Valuation report by registered valuer and guidance note on ESOP should be followed by company. This is section 54, sweat equity shares. Are you following guys? Next 55 is issue and redemption of what guys? Preference shares. So we talk about issue, we talk about redemption. Repeat with me guys. For again, we start off with power. For issue, articles should authorize. You should additionally pass special resolution and no default should be there. In what? Previously paying any repayment. Previous dividend there is no default. Previous redemption there is no default. Are you following guys? And section 88 means register. Company has to maintain register when they are issuing. Period of preference shares is 20 years. Infrastructure now 30 years. Are you following guys? This is for issue guys. Sir, what about redemption? Redemption can be done out of free reserves, fully paid up and sources, fully paid up shares, free reserves, fresh issue or CRR can be used. Are you following guys? For redemption, they are trying to say I can use my existing reserves, free reserves, or I can do a fresh issue and pay. And they are also saying whenever you are doing redemption, the face value of amount redeemed should be transferred to CRR, but this will come only if you are using my reserves. If I am doing redemption from reserves, I will transfer to CRR. Sir, if I am doing redemption using fresh issue, then no need to transfer CRR. The idea is, if paid up share capital is decreasing, to the extent of decrease, I will transfer to CRR. If there is no decrease, it will remain as it is. Are you following guys? Clear? Next, premium on redemption. Premium on redemption is there, correct? 100 rupees share, I am repaying at 120. That extra 20 premium, can I adjust with securities premium? Answer is no. You can't use securities premium. You should use only free reserves. Here it does not include securities premium. Are you following this? These are accounts points, not law. So what is the sources? Sources, free reserves or fresh issue. Then if you are using reserves, you will transfer to CRR. Premium on redemption, you cannot use securities premium. All of you with me, guys? Sometimes if company is not able to redeem, then I will pass an entry, old preference shares to new preference shares. That's called deemed redemption. I am not paying money. It's a book entry. For doing that deemed redemption, I need to get permission of 3/4 of the preference shareholders in writing. I need to get 3/4 consent in how, guys? Writing I have to get, and I should get approval of tribunal. Double approval, guys. Sir, what is deemed redemption? Very important. Irukra preference shares come again giving preference shares to preference shares, 3/4 in writing, and tribunal should pass an order. If there are dissenting shareholders, throw them out, give them exit opportunity. Are you following, guys? This is transfer and transmission. Issue and redemption. This is the biggest chapter. This will take a lot of time because procedures will keep coming over here, guys. Next, transfer and transmission. Little less important for exam, but we will quickly run through, guys. If you want to transfer shares, the transferor of the company who wants to transfer to transferee, he has to submit to the company a transfer deed within how many days of execution, guys? Within 60 days of execution. Sir, can I go beyond 60 days? Yes. If you want to go beyond 60 days, you have to give an indemnity form. This transfer deed will be signed by both the parties and duly attached with a letter of allotment or share certificate. Share certificate proof or letter of allotment with the share transfer deed, we will sign and give within 60 days of signing. That's called execution. Beyond 60 days, you will give something called indemnity form. Are you following, guys? Clear? Once you send it to company will cross check with you if I have to do allotment. When company will do cross check, company will send notice to check, can I do the allotment and transfer? Only if the shares are partly paid up, because I'm going to create a liability for somebody else. If it's fully paid up, the company will not cross check. They will go ahead and do the allotment. This is section number 56. Next to 57. Sir, I am not the shareholder, sir, but I am acting as if I am the shareholder because my name is same. I put some makeup and I'm going and saying I am only that person, creating fake ID. That's called personalization, or trying to behave as if you are not, trying to impersonate somebody else. For that, enjoy the penalty, go to jail. Okay. Next, 58, guys. 58 talks about you want to transfer the shares, but the company is not letting you transfer for whatever reason. Refusal for registration and appeal against refusal. So, we have to file to company within 60 days above. We have to file within 60 days. After you give to company should intimate to you within 30 days if they are going to do transfer or not. Are you following, guys? So company has to intimate within 30 days. If not within the next 30 days, you can go ahead and do the appeal. Are you all with me, guys? So let me explain that here. See, company has to tell you within 30 days. Within 30 days, they have to tell you, am I going to register or I am not going to register? If they are not registering within 30 days, then within the next 30 days, you can appeal. That means totally you have 60 days, correct? So if I have to put the timeline, simple timeline, look at this. From the date of transfer deed, you have to file within 60 days. After this, company should tell you within 30 days. If not, within the next 30 days, you can go and do the appeal. First 30 days, they should tell you why they are doing refusal. That's why both read together, you have 60 days from the date of submitting the transfer deed. Are you following, guys? From your submitting transfer deed. Same thing if it's for a private company, guys. If it's for a public company, it will be 60 and 90 days. 90 days. That means what they are saying, if it's a public company, this 30 will become 60. Therefore, this 60 will become 90 days. Are you following, guys? So company should reply within 30 days, but I have time for appealing 60 days to appeal, and overall 90 days from the date of filing it. Are you following, guys? All of you with me? Hello? Clear? Okay. Next. If at all, then tribunal will pass an order. Once you pass appeal to tribunal, they will pass an order, and that order, they will tell to do something. The company has to do it within 10 days. Within 10 days, company has to do it. Are you following, guys? Next is section 59. Rectification of name of in register. My name is Karthik, but in register they put Karthik with some wrong spelling, 2K, whatever. Or intentionally company is not putting my name. Whatever the reason, if the name is delay in entering, omission, wrong name, you can apply to ROC for company for rectification. If company is not changing, now your aggrieved party, the aggrieved party can appeal to tribunal. This talks about rectification of name and appeal. And then you can appeal, and then tribunal will pass an order. that order you have to follow. Are you all with me, guys? Clear? Swift 9. 60, not in syllabus. 61 is alteration of share capital. What are the alterations I can do? Increasing authorized share capital or stock split or subdivide. 1 lakh shares of 10 is going to become 10 lakh shares of 1. Next, consolidation of shares. 1 lakh shares of, let's say 1 is going to become 10,000 shares into, what to say, 10. Are you following, guys? Consolidation, conversion of share into stock, and cancellation of unsubscribed shares. This is alteration of share capital. For doing all of this, you have to pass ordinary. But if you want to do authorized capital increase alone, you have to pass special resolution, because this leads to alteration of MOA. It leads to alteration of MOA, so special resolution. Are you following, guys? Whenever you do increase of authorized share capital, MOA is changing. If you do redemption of preference shares, again MOA is decreasing. In these cases, within 30 days, you have to intimate ROC, that is section number 64. So whenever I increase authorized capital or do redemption of preference shares, I have to intimate ROC, add-on points. Following, guys. Now remaining all are big procedures. I will quickly run through, guys. Section 62 talks about rights issue. What are the key points for rights, sir? First, always approval. Board resolution and special resolution. You have to pass board and special for rights. Then, once you give the offer, once I give a letter of offer, the other party can accept or reject. Correct? For him to accept or reject, I should give minimum 7 days, maximum 30 days. Within this time limit, I can choose. It's not 7 to 30 days. I will tell 10 days, 12 days. Time to reply should range in 7 to 30 days. In that time, he can accept, reject, or renounce. That renunciation can be done either to existing shareholder, or it can be done to other shareholder also. Renunciation not mandatory to be done to existing shareholder, can be done to any person. Then, if there are any unsubscribed shares, sir, everybody rejected, nobody bought the shares, that should be disposed of by the company in a way which is not disadvantageous to shareholders. Meaning, I gave you rights offer for 60 rupees, sir. Since all of you are not buying, only some of you bought, and now I will give to somebody else for 40 rupees. That's disadvantage for you. Are you following, guys? That's all about rights. Now you want to give the same rights further issue to employees, means you can do that if the company is only in existence for 1 year. All the other points, just like 54, you have to follow section number 54. Okay, are you following, guys? Yeah, so 54 points will again come over here. Look at this, board and special resolution. Then company will have the same, what is the registration of ESOP, then explanatory statement. These are pretty simple points, guys. Like, see, for giving to employees, additional points on death. Basically, I'm giving employees option. So if employee dies, then the option will be vested immediately. This is not that important, guys. Come back. 62 subsection 3. We are still in 62. If company takes loan or debentures, if the same is not repaid, then the same will be converted into shares. Will be converted to what, guys? Shares. But for that, company at the time of issuing debentures or issuing the loan, they should have passed the special resolution to get permission of members for such conversion in the future if there is going to be a default. Are you following, guys? Same section 62 subsection 456 is saying what? If I take loan or debentures from the central government, and if I did not repay, the central government can convert such loan into what, guys? Equity. Are you following, guys? Now here the very important point is they can convert this loan into shares, not just in case of default, even if company is paying, but if company is acting against public interest. Company is acting against public interest, against the public, then central government can still order, no need to pass any special resolution. Look at the difference above. For debentures and loans, you need to pass SR before issue, then only you can convert. When I can convert? Only if there is default. Here, nothing like that. If I have taken loan debentures from central government, no resolution passed, it's okay. You are going against public interest, I can convert to shares. Not fair, no. That's why the aggrieved party, they can appeal to the tribunal. They can appeal to tribunal, guys. Within how many days they can appeal? Sure, I just check 60. Booklet 60 only is given. Sure, I just have small note. Yeah. So appeal within 60 days. See, wherever I am not convinced, I will check, guys. 60 days you will appeal. If they are not satisfied, they can appeal to tribunal within how many days, guys? 60. Sure, Reshma, 60 only is there. Fine. Then pakka, you can appeal within 60 days. Clear, guys? This section 62. Next section 63 talks about what, guys? Bonus issue. Very simple. Again, approval. You need authorized by articles and recommended by board. What resolution, sir? Ordinary resolution. Now this bonus will be given from what source? Basically, what is bonus? Conversion of reserves into share capital, capitalization of profits. So which reserve I can convert, sir? I can convert, free reserve, securities premium or CRR. Which to use first? First CRR, then SP, then free reserves. Are you following, guys? Sir, but I cannot do bonus, sir. I cannot do bonus if there is default in payment of deposits. Deposits, there is default, or statutory dues of employees like PF bonus is not paid, then you cannot make a bonus issue. So what are some other points, sir? Once you committed, once you made the resolution, once you make a promise, honor that promise, try your best to honor, guys. So once issued, it cannot be withdrawn. Then last two important points, I can't tell the shareholder, hey, I will give you dividend. Instead of dividend, I can't give you bonus. So bonus cannot be given in lieu of dividend. Dividend sonna give dividend. Bonus sonna give bonus. I can't interchange both of them. Last very, very important point, bonus shares should be issued only for fully paid up shares. If I have partly paid up shares, I have to convert them to fully paid up shares. There's an amazing logic for this, why I should make the conversion, but that's about it. Are you understanding till here, guys? So partly will be converted to fully paid up. Fully paid up shares only I should give bonus. Otherwise, if it's partly paid up, your partly paid up will double into two partly paid up. Liability also will double. That's the logic, why they are not allowing for partly paid up shares. This is section 63. Now coming to 64. 64 is basically in 3 cases within 30 days you have to intimate ROC for change in share capital. 2 I already told you. Alteration of share capital 61 subsection 1. Authorized share capital has changed. Or central government loan. Just now we saw 62 subsection 4, 5, 6. Central government is converting loan debentures to equity, increasing the authorized capital, or redemption of preference shares, you have to intimate to ROC, because all these 3 leads to change in MOA. Sir, how, sir, central government conversion leads to change in MOA? Even if company is not having authorized capital, such conversion is deemed to convert authorized capital. Sir, company is having loan of 100, share capital is 100, authorized share capital is only 150. Okay, only 150. Now if I convert loan to capital, capital becomes 200, but authorized is only 150. Such conversion is deemed to increase the authorized share capital because central government is doing it. Are you following, guys? This is section 64. 65 not in syllabus. Next we will proceed. Let me do one small section 69 just to quickly close this. 69, what they are saying, in 2 cases you have to transfer to CRR. One, in case of buyback of equity shares or redemption of preference shares. In both cases, capital is decreasing. How much I will transfer? I will transfer only amount equal to nominal value, face value, if it is done out of free reserves or securities premium. SP allowed only for buyback. Sir, if I am doing from fresh issue, no need to transfer to CRR. Are you following, guys? In this, sums are there in accounts itself. Now before I go to reduction, let me go to buyback, let me go, guys. 68. Now we have only 2 concepts, buyback and related provisions and reduction of capital. Both are separate. In both, company's capital is decreasing, but in buyback, company is voluntarily giving it back because I'm a profitable company. In reduction, company is a loss-making company. Company kita kaase illa, I'm begging you to sacrifice. There's a huge difference. Profit to loss. First we'll do buyback. Now look at buyback. We'll start off, guys. Now if I come to buyback, first I've just given it, this one alone I've given in terms of timeline. See if you're understanding, guys. First, always I tell you, start off with power, resolution. Onnu pandradhukku you need power in life. So here, if for doing buyback, if I do board resolution, you can buy back how much, guys? 10% of paid up share capital and free reserves. If I do special resolution, you can do buyback of 25% of free paid up share capital and free reserves. Very, very important to note. Only for this section, I repeat, only for this section, free reserves includes securities premium. In this section, I will treat SP as free reserves. That means redemption of preference shares, you can't use SP. Here, I can use SP. Why, sir? Logic, we see in regular class. But what is the logic? Who gave SP? Equity shareholders gave us the SP. Are you following, guys? Clear? All of you with me? Hello? Okay. Next, once I pass resolution, now follow guys, once I pass the resolution, the buyback should be completed within 1 year. That means from the start of end to end, look at this, from the start to end, completion of buyback from the date of resolution, it should all get over within 1 year time limit. In this 1 year time limit, what they are saying, I can give the offer anytime guys, I can give the offer anytime. In rights, for members to accept the offer, they have minimum 7 days, maximum 30 days, minimum 7, maximum 30. Yeah. Here minimum is 15, maximum is 30. Sir, I want to reduce below 15, sir. Rights to 7 you are allowing. Here I want to reduce below that. Okay, you can reduce by passing a unanimous resolution. You can reduce it less than 15. Are you following? In the one point exam la 5 mark 15 days how to reduce unanimous resolution. With this, buyback is done. Within how many in this 15 to 30 days gap, you have to reply for offer. Buyback should be completed within how long guys? 1 year from resolution. After completion, there are 4 timelines. After completion, I have a 3 days timeline, I have a 7 days timeline, I have a 6 months, and I have a 1 year timeline. What is that? After buyback is done, within the next 3 days, you have to file return of buyback to ROC. Whose shares I bought back? What are the details? Within next 7 days, destroy the share certificates and put it in the dustbin. Are you following this? Destroy it, you will properly destroy it. Today, DMAT sir, computer, those days I will destroy it. Within next 6 months, you should not make an issue. They are saying, are you a fool? Just now you did buyback. Now you want to make fresh issue. Buyback you repaid. Again you want to make fresh issue. Have some sense. So next 6 months you should not make fresh issue. For this, what is the exception, sir? Fresh issues allowed for ESOP, bonus, convertible shares or convertible debentures. Why, sir? Logic. In these fresh issue, I am not getting money. ESOP is for employees, different purpose. Bonus is giving for free. Convertible, I already committed long back. Allow me to do my old commitments. Are you following? Another 6 months. Sir, next to 1 year, no new buyback. Just now I finished buyback, no buyback again. Just now you got married, no. Wait for some time. That's what they're trying to say. Are you understanding, guys? So next to 1 year, you can't do any buyback. So let me just summarize the time limits of buyback because it's one of the biggest procedures that we have, guys. Very quickly, you will participate with me. Resolution. 10% board for 10%, special for 25% of paid up share capital and free reserves, including securities premium. Recording, tell with me. Once you pass resolution, buyback should be done within 1 year. In that 1 year, I will give offer. You have to accept within 15 or 30 days. Less than 15. Unanimous resolution. Excellent. Once buyback is completed, you have deadlines. 3 days. Return of buyback. 7 days. Destroy share certificate. 6 months. No new issue except ESOP, bonus, convertibles. Next to 1 year, no buyback should be done. Are you following, guys? Then, so that means in 1 year, we have 3 1 year points in the same provision. One question 3 1 year points. So I summarized all the 1 years. Complete within 1 year of resolution, and next 1 year, no buyback. And in case of a listed company, they have to file something called declaration of solvency. Declaration of solvency signed by a CA that for next 1 year, company will remain solvent. Are you following? This company will remain solvent in case of a listed company. These are what we have in law. Now, what are the famous accounts points? Accounts points is this 25% and 10 points, 10% will come over there. Additional points. How many shares I can buy back, sir? 25% of number of shares outstanding, and debt equity ratio post buyback should not exceed 2:1. These 3 points anyway you learn in advanced accounting. So by the time you come for law exam, nee parthirpa accounts la. Accounts you particular, sir. Accounts 8 marks gone. Law also I didn't study, sir. 5 marks gone. See you in the next attempt. Okay. Now, are you following, guys? Clear? What are the 3 conditions? The resource test la 25% I will take or 10% depending on resolution. Number of shares, 25% of number of shares outstanding, and debt equity should not exceed 2:1. Are you able to recollect fully, guys? Hello? Understanding? Clear? Next. With this, we are done with buyback. Now, there are 2 protection of section 68. Okay. What they are trying to say, you section 70, after 68, 70 says, you still cannot do buyback. Indirectly or directly, company cannot do buyback. How, sir? I am not doing buyback, sir. My company shares, my subsidiary is buying. I am not doing buyback, sir. My holding is doing my buyback. I am not doing buyback, sir. My investment company is doing my buyback. Like that, they are saying directly or indirectly, you cannot do buyback with your own subsidiary or through an investment company you use panni, you cannot do buyback. Then if company has the following defaults, you are not able to repay deposit interest, redemption of preference shares, repayment of dividend, repayment of loan. All these if you are not able to do, then don't do buyback. If you have these defaults, then for the next 3 years, how many years guys? Next 3 years buyback cannot be done. You have to rectify that. Are you following guys? And if you have default in section 92, filing annual return, 123, dividend declared not paid, 127, penalty, dividend not paid in 30 days, 129, FS is not prepared, 137, filing of FS. If these things are also not complied, sorry, buyback cannot be done. Additional conditions in buyback. Next is section 67, another, what to say, extension of buyback. No company, private or public, can give loan to somebody to buy back. So look at this. ITC wants to do buyback. They are giving loan to SBI. ITC is giving loan to SBI to buy back. SBI is buying shares of ITC. Now later to get the loan back, instead of getting, now SBI should repay the loan. Instead of repaying loan, they are repaying. Instead of repaying loan, they are repaying the shares of ITC. So I gave loan, but when I'm getting the money back, I'm not getting loan. I'm getting my own shares. Are you following guys? Got the scammer? Like this they are trying to say, no company, public or private, should not give loan or guarantee or security or any other financial assistance to anybody for buying my own shares. Are you following guys? Because if I give loan or security or guarantee, when I get it back, what you will tell? Give my shares. It becomes buyback. So asset side, when I get my loan back, I'm getting my own shares. Liability asset. Are you getting it guys? Not allowed. They are saying restriction. You cannot give loan or guarantee or security to anybody else for you to buy back your own shares. But this has two very, very important exceptions guys. You can't tell a bank not to give loan. Bank or work is to give loan. I can take loan from SBI and buy SBI shares. How can bank control? So for a bank in the ordinary course of business, they can give what guys? Loan can be given. And employees, very important for exam, a company can give loan to employees. Employee can do whatever he wants. He can even buy shares of the company. But they are saying such loan can be given for other than KMP or directors. Other than KMP or directors. And that loan shall not exceed the salary of last 6 months salary. And when employee is buying back the shares of company, he can buy back, but he should only buy back fully paid up shares. Beautifully drafted provision guys. Why not partly paid up shares here? Employee will buy partly paid up. I will give him loan. I will take it back in terms of call. Partly paid up shares, I will give him loan. He will buy partly paid up shares. Then I will make call. He will give the money back to me. Look at the route. So to avoid all this, whoever drafted told, I can give loan to employees, but not allowed for KMP and directors. Why they need loan? They are already very rich. Don't give loan to them. And for buying back, and they can purchase only fully paid up shares, and maximum loan you can give them is how much guys? 6 months order salary. Are you following guys? This is section number 67 and 70, prohibition and restriction on buyback. For doing this, for giving loan to employees, you have to pass special resolution in general meeting, and employees can buy in terms of ESOP also, they can buy. For this again, company should not have defaulted in repaying deposits. Okay. Next, last one, 66, reduction of share capital. Sir, what do you mean by reduction of share capital? 10,000 shares of 10 is now becoming 10,000 shares of 5, fully paid up. I am reducing the face value itself fully. So when you are doing reduction of share capital, what they are saying, very simple. What this reduction is explained over there. Okay, that is fine. Basically, or they will adjust, for example, company in balance sheet. Look at the balance sheet. They will have 10,000, 1 lakh shares. Okay, or 1,000 is shares. Reserves loss is 100. I will set off both and tell my new capital is 900. Instead of showing 100 loss, I will set off my reserves loss with my share capital. Instead of showing 1,000 positive, 100 negative, I will show 900. For all these comes under reduction, sir. Sir, what is the procedure for reduction? Very simple. You have to apply to the tribunal. Once you apply to the tribunal, again what resolution? I do start off with resolution, sorry. Board and special, and then tribunal vandale pass special, go to tribunal. Tribunal will forward the application to other concerned stakeholders, guys. Who are the concerned stakeholders here? Central government, SEBI, ROC and creditors. It will go to all these people to send their representation. Within 3 months, I will wait for 3 months if they have any objection. So to whom I am sending for objection, guys? I am sending for central government, SEBI, ROC and creditors. And they have to wait for objection for 3 months. Now this creditors should be a latest list. Should be a latest list of creditors of last how many days? 15 days. The list of creditors to whom I am sending should be latest creditors in last 15 days, and I will wait for 3 months. If there is no objection, I will proceed and go ahead with what, guys? Reduction in 3 months. If there is objection, every time objection comes, company should try and rectify within 7 days or longer period. That's about it. Are you following, guys? Once the reduction order is coming, you have to publish in newspaper also and website, all of that. Are you following, guys? Clear? Effect on members and creditors. What is this? Look at this. Effect on members. Now they have new liability. 10,000 shares of, let's say, 10 each is now becoming 10,000 shares of 5 each or 3 each. Now new liability comes. Effect on creditors. Creditors, main point over here. If some creditor's name is missed out in this list of last 15 days, then they can still come and claim. They can still come and claim from the company. Company is closed down, sir. I will claim as if the company is still open from those shareholders who were supposed to pay. Are you following, guys? Clear? This is section 66, which talks about reduction of share capital. With this, we are done with full share capital provision, guys, from section 43 to section 70 is fully done. What is left is debentures, which is 71, which we'll be seeing next. Okay.
Let's start off with the expected question marathon for our charges chapter, guys. Important for Jan 26 exams. Definitely we can expect this in exam, because in the previous attempt they have skipped this chapter. That means automatically becomes a little more important for you. For that reason itself, it is preferable to learn the whole chapter fully, because this is a kutty tiny chapter just like dividend. But over here I will be revising only what I have mentioned over here in the expected questions. The first one, I want to start off with section 77, charges time limit, and all the provisions in section 77 along with section 87, guys. So if you look at 77 over here, they are saying whenever a company takes a loan, from the date of loan of the company, whenever the company takes a loan, within the next 30 days, within the first 30 days, the company has to register the charge. What they have to do, guys, they have to register the charge. If they fail to register in the first 30 days, then in the next 30 days, they have to register with additional fees. Sir, next 30 days also I missed out, sir. Then the last 60 days, you have to register with ad valorem fees. Sir, what is this ad valorem fee? Ad valorem fee is a percentage of the value of the loan. So more and more delay happens, the percentage, when the percentage comes on the bigger amount of loan, the party will get scared. So they will register instead of paying a higher fees for registration. Sir, all this irrelevant, sir. For exam, what remember? From the date of loan, register within 30 days. If you fail in 30 days, within the next 30 days with additional fee. If that also you fail, within the next 60 days with ad valorem fee. Now in registration of charge, there are some key points. If charge is not registered, what happens? The charge will be treated as void, but the loan will still be valid, but it will be treated as an unsecured loan. That means, what's the meaning? I have to wait in queue at the time of liquidation of company. After paying all other parties, I will be paid in the last case. Next, charge registered first has right over charge registered later. This is very, very important. In fact, the most important in this chapter, guys. So to explain this in little more in detail, imagine there are two loans. One loan is on 1st July 2026, and let's say another loan is on 10th August 2026. But imagine the date of registration. First loan is registered on, let's say, 10th September 26, and second loan is registered on 5th September 26. So even though this loan is taken first, because the second loan is registered first, the second loan will be given the first priority over the first loan. Are you getting it, guys? So in terms of ranking of repayment, what will happen? I will repay this loan, second loan first, and this loan will be repaid next. That is what is given in this point. Lastly, when a loan is being registered through a charge, it's a secured loan, correct? So for that security, some proof, for example, if I'm taking a housing loan, the house document is security. So for that, those documents have to be verified. How will I verify? If my security, if the property is outside India, they are giving three options. Follow either option A or option B or option C. Under the common seal of the company, register by putting the common seal of the company, or the director or company secretary of the company will sign, or the officer of the charge holder, guys. That means officer of the bank. One seal of company or authorized person, director or CS of company or office of charge holder will verify the document. Or third, any other person who is interested in the charge, somebody who was already signed in the previous bank, someone of that sort. If the property is in India, or if it is partly outside India, if it is in India, or it is partly outside India, partly in India or partly outside India. So let me just rewrite this, guys. If the property is in India is the first one, or if the property is partly in India and partly outside India. If these two situations come, so property outside India means outside India, property in India means inside India. What do you mean by partly in India, partly outside India? Border as a bathroom is that side, bedroom is here. Not like that, guys. Let's take a flight. Flight is sometimes in India, sometimes outside India. So in those cases, they are saying go with option B, director or CS of the company or officer of the charge holder, guys. This is important for exam. It can come in MCQ or separate standalone question. After this, let me come back to next. I will go to section number 80, date of notice of charge, and I will be going for section 78, duty of charge holder to register the charge. So if I come back over here, look at this, guys. I told you, usually who will register the charge? It will be registered by the, section 77 says it will be registered by the bank. Usually in section 77, the charge will be registered by the party who has taken the loan. Guys. For example, if Vijay Mallya has taken the loan, Vijay Mallya will register the charge in section 77. But wherever Vijay Mallya has failed to register, 77, application for registration of charge by the charge holder, where the company, here the Vijay Mallya has failed to register the charge, then what happens? Let us see that. So let me explain what happens in section 78 with diagram, guys. Usually once the loan is taken, it has to be registered within 30 days. Till 30 days, both the parties will wait. The charge holder, aka the bank, will hope that the party, Vijay Mallya company, will register. If he doesn't do it in the first 30 days, then after that, any time after that, the charge holder, bank will apply to registrar to register by himself, because bank is the one who gave loan. Bank is the one who is at risk if you don't register. Then my loan, which was supposed to be secured because of your fault, may become unsecured. So charge holder will apply to registrar. Then ROC, what ROC will do? ROC will give notice to the company saying, hey, for your company, some loan is pending. I got a request for registration. Three things can happen over here. ROC will not register after giving notice also. In this gap itself, if company registered by themselves. For example, the bank didn't wait. After 30 days, 31st day itself, bank applied to ROC. But on 32nd or 33rd day, Vijay Mallya, the company itself, registered by themselves. So ROC will not consider your application. They will go with the application of the company and register it. Second case, if the company is responding, then we will proceed with the response. What is the objection? No objection. We will go with it. If company is not responding within 14 days, then ROC will register within 14 days. Are you following, guys? To summarize the whole thing, within 30 days, if the company is not registering, then the charge holder will apply to registrar by themselves. ROC will send notice to company. Three things can happen. ROC will not register if company registers it by themselves. Or if company responds, then that response will go on. If no response comes, then ROC will register within 14 days, guys. So with this, we are done with section 78. Let me go to section number 80 now. What is section number 80 saying? When a charge, section 80 says, when the company, just very simple small section, where the company creates and registers the charge. Company is creating and registering the charge, and if any person acquires the interest in the asset charge, it is deemed that he has knowledge of the charge from date of registration of such charge with ROC by the company, which is nothing but doctrine of constructive notice applies over here. Meaning, you go and buy a house. In that house, already one loan is there, and that loan charge is registered with ROC. After buying the house, you are saying, "Ayo, I didn't know this house had a loan charge. No, I have to pay this." The party, you, is not aware of the charge that has been registered. Company is not responsible for the loss suffered by you. Are you following, guys? Because charge is a public document. So small section, it has come in exam many times. So just to revise section 80, what they are saying over here, if a charge is there, it is deemed that the world knows it. If you don't know it, you have to suffer the loss. Next is section 79, modification of charge. Now, when it comes to modification, let's say a charge is already registered in 2026. Now, you want to modify in 2028. Can you modify it? Yes. For the modification, time limit is same as what is given over here. For modification, instead of date of loan, what will be written over here? Modification. The minute modification is done, within 30 days you will register. If you fail, 30 days plus additional fees next 30 days. If you fail there also, 60 days with ad valorem fees, guys. Then what is important? What is modification, sir? These are the cases which you should remember for modification. Modification are simple things like change in interest rate. For example, 10% loan is becoming 13%. Modify the terms and conditions of existing charge through an agreement. For example, existing terms, they are saying, let's say I will repay in 6 years. That is being changed to 9 years. Or some other terms, some qualitative features like building should not be painted in this time or building should not be renovated. Those kind of terms are being changed. Next, modifying by enhancing or decreasing limit. Earlier 10 crores loan, now made as 12 crores. Next, change in repayment schedule. 6 years is now becoming 8 years or 9 years. Partial release of charge on property. I gave my property which is 3 floors. The third floor I am releasing from the loan and only first and second floor will now be part of the loan. These kind of things. Or modification is done by creating a pari passu charge. What is a pari passu charge? If for the same property, same house, there are 4 loans. Let's say loan 1, 2, 3, 4. First, if let's say the company has not paid to any bank, the first bank will take the payment from the asset, then second bank, then third bank, then fourth bank. So each bank will go in order and wait for the previous bank to get their payment cleared by selling the asset. Pari passu charge means all the 4 banks will become equal and all the 4 banks will have an equal right on the asset on a proportionate basis, guys. So these kind of changes will come under modification. What is important over here? 2 things. Other than bank rate, if RBI or bank is changing rate for everybody, then this is not modification. And change of limit up, increasing or decreasing in case of working capital loans repayable on demand, this is not modification, because working capital loan limit changes every week. Every day I will keep going up and down in this, then every day I can't file to ROC for modification. So 2 exceptions, other than bank loan, other than bank rate by bank or working capital loan repayable on demand. In that case, then I will not consider it, guys. So let me come back over here. I am done with modification 79. I am done with 77. We are also done with section 78, duty to register. What is left is 87 and 81 or 85. Let me quickly finish 87, another small section. That's why I'm showing in the book itself. So 87, what they are saying, in certain cases, what cases? If charge is created and not filed, 77, we just now saw, first section. Modification, just now we saw, 79 in case of modification. Satisfaction, 82. What is satisfaction? Loan is repaid, and after loan is repaid, you did not intimate ROC or you intimated. Or any other omission or misstatement of entry, wrong property details or spelling mistake or some address has to be changed. In all these cases, we have time limit 30, 30, 60, or in satisfaction of charge, we have 30 days. Those 30 days, if on 300 days comes over, 300 days comes over there in satisfaction, guys. If you don't within this time limit intimate ROC, condonation of delay. Requesting ROC, please allow. They will allow if it is a just and equitable ground, or any rectification by central government, any rectification, any change in terms or any mistakes is there. If they feel it is accidental, then we will allow such change. But these rectification will not affect the rights of the parties. For example, a charge which I am supposed to register in 2026, because of delay, I registered only in 2030, sir. Then what will happen? This charge will be considered as unsecured loan until it is registered, and it will be considered as secured only from 2030 and onwards. That means retrospective effect is not possible. Retrospective effect is not possible. Lastly, 81 or 85. Let me go to the new additions that we have. 81 and 85 and new additions. Very simple. Both are simple. We have two parties. One is ROC, one is company. Whatever loan is taken, ROC has to maintain register of those charges for all the companies across India. That is section 81. Register of charges to be kept by registrar. So ROC will maintain this. So for example, today if you want to know how much loan Reliance has taken, how much loan Adani has taken, you can freely see this by going to the MCA website and paying a small fee, sir. You can see loan taken by any company in India. So it's a public document, register of charges maintained by ROC for all companies. A similar document should be maintained by company. That is section 85, guys. For example, what are the documents over there? All the documents will be maintained for modification, satisfaction, or any floating charges. And such document will be authorized by director or secretary of the company or any person authorized by the board. They will maintain this. For this will be maintained. For example, Reliance means in Reliance registered office. Adani means in Adani registered office. Any member or creditor of the company, not third party, only shareholder of the existing company or creditor of the company can inspect this during business hours without any fees. Sir, I am not a member, sir. I am not a creditor, but I still want to inspect this companies by going to the company. Then you have to pay some applicable fees. Now, what is important over here in register of charges? Look at this. Such register, that register which has all the details, that book will be preserved permanently. Whenever you apply for a charge and get a certificate CHG1, CHG2 from the government, such an instrument will be preserved only for 8 years. Are you getting the difference, guys? The register of the charges, meaning what all charge company took in its entire life, that register with details of charges taken by the company will be preserved permanently. For each charge taken, one certificate will be given, proof of the charge, that will be maintained only for 8 years, guys. That is the difference over here. So with this, we are done with what, guys? We are done with the entire charges chapter. Quickly go through. Now we'll move on to the next chapter. Yes, guys. So we are now finally done with the share capital chapter. Full revision. Now I am back, guys, again with deposits chapter of expected question marathon. In deposits chapter, we're going to take 3 key questions. The first one is going to be circular for deposit issue and its validity, and also concept of debenture trustee. The concept of debenture trustee, I will take it a little bit towards the end. Let me start off with circular to be issued. Now, if you look at this, whenever a company is going to issue deposits from its members or public, how will the members or public know that company is going to issue deposits? For example, if you know Jananayagan movie is going to come on 9, because someday they announced it 6 months back, 3 months back, they announced it. Same way, if a company is going to go for deposits, how will you know about it? So for that, this chapter has totally 2 types of deposits, guys. The 2 types are section 73 and 76. 73 and 76. 73 is deposits from members. 76 is deposits from public. In both the cases, circular has to be issued, and these are the prerequisites for them. In 73, A and B are enough. What is A and B? They are saying the circular has to be issued to members or public, whichever case it comes, with the following details. Financial position of the company, FS details should be there. Credit rating obtained by the company, and also details of deposits in respect of previous deposits. So that circular, like how prospectus is there for share capital. So for share capital, we have prospectus. Here we have what to say, circular, and this circular will have financial position, guys, credit rating, and previous deposit details. And then this deposit should be circulated to members in speed post or electronic mode or registered post. It has to be sent to all the members, guys. Next, a few more things over here. Common website and newspaper will always come. So I will publish in the newspaper. I will also publish in the website of the company. And lastly, they are saying the filing of the circular at least 30 days before issue of circular shall be signed by majority of directors. That's it. Fairly very simple. So if I have to summarize all the point, if you're issuing this to members or public, you publish in the website, you publish in the newspaper, you send it to them in speed post or electronic mode if it is for member, and this circular should be authorized by majority of directors, and this will majorly contain 3 points. What are the 3 points? Financial position of company, that financial position authorized by credit rating, and lastly, amount of deposits, what is previously issued and what is the due, and validity of advertisement. Now look at this. I don't have to give advertisement for deposits every day. Today if I make a circular and today if I make advertisement, for next certain period it is valid. That means you can deposit today, you can deposit next week, you can deposit after 1 week also. This circular concept they have not tested even once in new syllabus, guys. So validity of the advertisement is earlier of these three. This provision you will see even in meetings chapter. They are saying validity of advertisement is up to 6 months. 6 months from the closure of the financial year in which it is issued. So for example, 31st March, from 31st March up to 6 months. So from 6 months from closure of the financial year where it is issued. Second, date of AGM where FS is held. Generally when AGM will happen around 6 months from end of financial year. And last one, where no AGM is held, the last day on which AGM should have been held. So in simple words they are saying, you issue the advertisement anytime, but it is valid up to whichever is earlier of 6 months from date of end of financial year or date of AGM or the date on which AGM should have been held, whichever is earlier. Basically, if you actually diagnose and break this point, they are saying the advertisement is valid till date of AGM. It's valid till which date, guys? It's valid till date of AGM. Are you following? So simple, you will issue this advertisement for members or public anytime during the year and it's valid till date of AGM. But we should not write valid till date of AGM. We should write either 6 months from end of financial year or date of AGM or date of which AGM should have been held, guys. This is the first point. Second, procedure to accept deposits. Now if you come to deposits chapter, actually there are only 2 types of questions which will be tested in every attempt, guys. 2 types of questions. One is procedure to raise deposits from members or public. Second is what is not a deposit. That's it. Only these are the 2 types of questions. What is not a deposit? I will come to this in the ending. Now I'm getting into procedure, and in our expected question, I am not discussing procedure from members. I am only discussing procedure from public by an eligible company. So if you look at deposits, now I'm discussing procedure from public. So I am discussing section 76. Remember guys, I am doing expected questions. So in this 76, how I have broken down the concepts. I have broken down the concepts for you guys. Book has lot of points. I have broken it down into 4 sets. Key provisions from the entire chapter. This I will discuss fully. Full common key provisions from entire chapter. Then certain things are unique for section 73, certain things unique for section 76. This is how the entire procedure I have broken down in my book. Again, let me repeat guys. This deposits chapter has only 2 questions. Procedure for issue, what is not a deposit. Procedure for issue and what is not a deposit. What is not a deposit we'll discuss in the end of the chapter. In procedure for issue, we have 2 types of procedures, from members and from public. From members and from public. In both these cases, I have broken this down. Basically into one small set of discussion, which is nothing but from the entire chapter, what are the key provisions I will be discussing. Unique points for section 73, deposit from members, there are some 3-4 points. Unique points in 76, deposit from public, there are some few key points, and common for the whole chapter. In our expected questions, I will be discussing the key provisions. I will be discussing what is unique for deposit from public and what is common for all, common for the whole chapter. So what I am not discussing in expected questions is the unique points that we have in deposits from members, because it's not in my expected questions as per the list, guys. Okay. So to start off, first, what is the key provisions in this chapter? Look at this, guys. This is the key summary table, guys. Follow carefully. Now, we categorize this deposits into two types, correct? Deposits from public, deposits from members, correct? So, if I take deposits from members, that will be section 73. If I take deposits from public, that is going to be section 76. Now, how do we read this table? Very simple. Can a private company get deposits from members? Yes, it can get deposits from members. How much? It can get 100% of something. What is that something? I will tell you in some time. Can a public company get deposits from members? Answer is yes. Answer is yes. But in this chapter, public company is broken down into two. Eligible public company and non-eligible public company. I hope you are following, guys. So, first, can a private company get deposits from members? Answer is yes. They can get 100% of something. Is that clear? Can a private company get deposits from public? Answer is no. So with respect to private company, we are done, guys. I'm again repeating. I'm looking at it from the company angle, so it's easy for you. For a private company, can they get deposits from members? Yes. How much, sir? 100%. 100% of what? I will tell you in some time. Can a private company get deposits from public? Answer is no. How can private company get deposits from public? Answer is no, guys. Next, if I come to public company, before I even ask questions for public company is again subclassified into two types, eligible and non-eligible. What is eligible, non-eligible? There is some turnover limits which we will see sometime. So I have to again look at this question for eligible separately, non-eligible separately. Can a public company which is non-eligible, eligible or non-eligible for what? For the purpose of public. So, can a non-eligible public company get deposits from public? Answer is no. Are you following, guys? Are you following? Now, can a non-eligible public company get from members? Yes. Private company can get from members. How much, sir? 100%. Here, non-eligible public company can get from members 35%. That means only one company can get deposits from public, which is nothing but an eligible public company, where they can get 25% from public and 10% from members, guys. Now, how do I read these limits, sir? Here, from members, it is maximum 35% and from public, it is maximum 25%. To summarize again, one last time. Now you will get the full clarity. I'm slowly developing it, guys. So in a private company, can it raise from public? Answer is no. A non-eligible public company, can it raise from public? Answer is no. So a private company can raise only from members. How much? 100%. A non-eligible public company can raise only from members. How much? Maximum 35%. This is clear. So both these companies cannot raise from public. So who can raise from public? Only an eligible public company. Only an eligible public company can raise from public. How much, sir? Maximum 25%. Why maximum 25%? A public company can maximum raise only 35%. Out of this 35, if 25 goes to public, what is left? 10% is for members. That means this 25 and 10 can be mixed among itself in such a way the maximum here is 25. If here I have 20%, here I can have 15%. If here I have 15%, Here I can have 20%. Like this, any combination I can switch. But in such a way, maximum for public can be 25. Can public be 30%? No. Can public be 35%? Answer is no. That's why it's going away. Are you following, guys? Are you understanding? So if I ask you a question, an eligible public company, how much it can get from public? Maximum 25%. Eligible public company, how much it can get from members? It can get from members 35. But here, because 25 is there, here it is 10. Together, total cap, the total of this should be 35, but public maximum should be 25. I hope you are getting it now. The total for public company, whether eligible or not eligible, is 35%. But when it comes to public, maximum is 25, therefore members is 10%. But when it comes to an eligible government company, they are saying you get from both in any ratio up to 35%. That means only an eligible government company, instead of 25 here, over here, they can have 35%. Are you all with me, guys? So let's revise the percentage again fully once. Private company from members 100%. Public non-eligible from members maximum 35%. Next, private company from public, no. Public non-eligible from public, no. Next, public eligible from public maximum 25. Therefore, public eligible from members balancing figure is 10. Eligible government company 35 in any ratio, guys. Now, what is this percentage? This is a percentage of, it's a percentage of paid up share capital plus free reserves plus securities premium. For example, my paid up share capital, let's say, is 100. Free reserves, let's say, is 100. And let's say securities premium is again another 100. So my total net worth is 300 for this chapter. So this 300, if this is my 300 net worth, 300 crores, then for private company, I can get 100% of 300. For here, 35% of 300. 10% of 300, 30. 25% of 300. So the percentage I'm going to apply is going to be percentage on paid up share capital plus free reserves plus securities premium. This is the first limits. Very, very important. Most common question they asked in exam. I hope you understood, guys. If you understood, let me know in the comments. Okay. Next, time limit. What is the time limit for deposits? Minimum 6 months, maximum 36 months. That's it. Let me repeat. For deposits, minimum 6 months, maximum is 36 months and repayable on demand. Whenever they ask, I have to pay. But however, in certain case of short-term requirements, I can issue for more than 3 months, less than 6 months. Are you following, guys? Minimum 6 months, maximum 36. But sometimes I can issue for less than 6 months, 3 to 6 months, which is 10% of paid up share capital plus free reserves plus securities premium. Above we saw 100%, 25%, 35%. Now it is 10% of paid up share capital plus free reserves plus securities premium, guys. Are you following? Now a private company is coming and arguing, telling me, sir, why should I only issue 100% of paid up share capital plus FR plus SP? I am a private company. I have my own members. We will take the risk between ourselves. It's my family. Why can't I raise deposits? For example, if a private company's total value is only 1 lakh, share capital plus free reserves plus SP. Even deposits is 1 lakh. My uncle is ready, who is a shareholder in the company, is ready to give me 100 crores for free or as deposits, as loan. Why can't I take it? They're arguing. So they're saying, in case of a private company, some companies can issue without any limits. That means more than 100% they can issue. What are those two type of companies? One, startup company for 10 years from the date of commencement. So any startup company or any other company which fulfills the following 4 points. The same points comes in share capital section 67. It comes over there. What is that? Such a company is a standalone company. Sir, what do you mean by standalone company? Such a company is not an associate or subsidiary of any other company. My company is not an associate subsidiary of any other company, guys. Standalone company. Then has not defaulted in borrowings at the time of accepting deposit. Whatever borrowings I had, I never defaulted in that. Has not defaulted in filing of annual return on FS. So no default in borrowings, no default in annual return on FS, and it's not an associate or subsidiary of another company. And then they are saying whatever borrowings I have from banks or any other body corporate. So in my balance sheet, my company will have some borrowings from bank or any body corporate, which should be less than twice its paid up share capital of 50 crores, whichever is less. So this is very important. Again, let me read. This shall be less than this borrowing amount. This borrowing amount should be less than twice its paid up share capital or 50 crores, whichever is less. For example, if borrowings is 30 crores, if paid up share capital is, let's say, 40 crores. Now, what is 2 times paid up share capital? 80 crores or 50 crores, whichever is less. So, if you look at this, 2 times paid up share capital is 80, 50 crores, whichever is less. What is less? 50 crores is less. My borrowings is less than 50 crores, so allowed. If you actually read this clearly, whatever happens, your borrowing should not cross 50 crores. So it's keeping an upper limit. So in the question, if you see borrowings more than 50 crores, this exception cannot be claimed, guys. Next, what is an eligible company? If you look at what is an eligible company, it's a public company. It's a public company having a net worth of more than 100 crores or turnover of more than 500 crores. So let me write that down again. Net worth more than or equal to 100 crores or turnover more than or equal to 500 crores. Are you following, guys? So net worth more than or equal to 100 crores, turnover more than or equal to 500 crores, we call that as an eligible company. So with this, if you see, we are done with the first part, key provisions. Second, in deposits from public, what are the key points in material I just showed you in the table, guys? Second is unique points, only unique to deposits from public. First, such company should get credit rating on yearly basis because I am getting money from public. I need to gain public's trust. Credit rating on yearly basis. Because it's a deposit, I have to create charge within 30 days. What is important over here for MCQ? Such a charge has to be created only on tangible assets, guys. So key point, what is unique points over here? Credit rating on yearly basis. Repeat with me guys, even now. Credit rating on yearly basis and the charge should be credited within 30 days only on tangible assets. Again, let me repeat. Unique points, credit rating on yearly basis, charge within 30 days only on tangible assets, and the amount of charge should be more than value of deposit. For example, if value of deposit is 100, amount of charge should be at least 101, and such a security or such a charge should be valued by a registered valuer, guys. Are you getting it? These are some unique points that we have over here. So if I come back over here, unique points are also done. Now let me go to common points in this chapter. Now coming to some common points, guys. From the date of deposit, the company has to make entry in the register of deposit within 7 days. So if anybody is making deposit in the company will register that in the register of deposit within 7 days, guys. Such a register will be maintained for 8 years. Remember, in the Companies Act, most of the documents or registers will be maintained for 8 years. Then the deposit receipt should be issued within 21 days. Follow, the company has to give deposit receipt within 21 days. So the minute one deposit holder is coming to the company, his entry will be made within 7 days, and I will give him register within 21 days, maintain the register for, give him the deposit receipt within 21 days, and that receipt details in the register will be maintained for 8 years. If I don't repay deposit on time, interest will be 18% per annum, guys. Next, deposit time period, we saw 6 months to 36 months. But before 36 months, after 6 months and before 36 months, if somebody is pre-closing, like closing FD before, you have to reduce 1% on actual period as a penalty, guys. 1% will be reduced as penalty. So from whatever interest is payable to you, for example, 7% is payable, I'll make it 6%. Exception, in 2 cases, no need to reduce interest. Because of war risk or due to emergency, army or defense, they are closing the deposit. Don't reduce or don't punish them. Or second, to comply with the prescribed limits. What do you mean by this? I told you deposit for a private company has to be 100% of paid up share capital, or it has to be 35% of respective limits. Now, suddenly what happens if paid up share capital or reserves or free reserves or SP this year because of loss is reducing? For example, let me explain that point, guys. Look at this. Let's say in my balance sheet, if my net worth is 100, my deposits also for a private company will be 100%. Now suddenly I have loss because of 20 loss this year. My net worth became 80. My deposits are still 100. So it cannot be 100 now. So because of this, I have to keep it at 100% of 80. My deposit also should come down to 80. Now company is forced to reduce its deposits from 100 to 80 because of maintaining with the prescribed limits as per act. I have to reduce it. Are you following, guys? Next common point. Maximum in a deposit, joint deposit holders will be 3 members. Can I have 4 members? No, maximum is 3. And then there are some important terms for you to learn over here, guys. So if you look at this, what are the important terms? The important terms will be more like, so I told you deposits can be held not more than 3 members. In that, the 3 important terms are jointly, either or, survivor, first name, survivor, anyone. So what is jointly over here? For example, if I have 3 people, A, B, C. If they use the word jointly, I will pay to A, B, C jointly in whatever proportion it's given. If I use the word either or survivor, first I will tell, if I use the word either, pay to A or B, either A or B. If A or B die, then only I will pay to C. That is either A or B or survivor. Next is first name or survivor. So I'm first name or survivor means they will tell, first you pay to A. If A is not alive, pay to B. B is not alive, pay to C. If they use the word next to anyone or survivor, company's choice, I can pay to C or I can pay to B or I can pay to A. It's my choice case. So these wordings have come in MCQ in the past, which is important for us. That's what I said over here. Some terms like survivor you should see in material. Next, the company has to file DPT3 every year before 30th June of every financial year, giving updates of new deposits and deposits paid until from the previous return till this year's return, guys. So these are few key provisions in deposits, guys. With this, we are done with what all? We are done with the key provisions. We are done with unique for 76. We are done with also common points. Now some more common points, and this common points I want to teach you by doing a comparative analysis of debenture and deposits. Let us come to this in the ending because it is very important. So before I go to this comparative analysis, I want to show you some other points as what is not a deposit. So if you come back over here now, in our expected question for deposit, we are done with procedure to issue deposit by public company. Focus on small concept within this. That is also done for us. And deposits from members. Deposits from members. When to issue deposit receipt. When to make entry in register. Very important. So deposit from members. Those unique points also I have covered, guys. Now I am going to go to what is not a deposit. Not important this time for May and September, so I'm going to be very fast over here. Why not important? Last 2 attempts it came back to back, so learn this in the last. I'll be quicker, and once that gets over, I'll come to the most important area, comparison between deposits and debentures. First time I'm even teaching this on YouTube. So first let me finish off this part of what is not a deposit quickly. So if you see what's not a deposit, guys, in the book we have detailed notes. So we have detailed notes like this in the book. Basically, you have to be clear with all these 14 points. Let me quickly run through these in 5 minutes. The first thing is basically, if a company is getting borrowing from anybody, that is not a deposit. That's what is given over here. If you look at this, company is getting borrowing from local authority, foreign bank, foreign government, international banks, or let's say loans from banks, public financial institution, loan facility, or intercorporate deposits, or where repayment is guaranteed by central or state government. So the first 3 points is basically any form of borrowing is not a deposit. Second, where company has received application money for shares, generally we have to allot it. If you don't allot, we have to refund it. So normal application, it will be how many days? It will be how many days, guys? Normal application is going to be 30 plus it will be 30 plus 15 days, correct? Normally within 30 days will allot and plus 15 days for refund. So up to 45 days I will wait from the 46th day, and private placement is 60 plus 15 days. So basically from the 66th day. So from the 46th day and from the 76th day, if the refund is not made, then I will call this also as a deposit, guys. Then the next one is any kind, what to say, debentures or bond, including from directors and their relatives. So look at this, application money up to 45 days, up to 75 days, not a deposit. From the 16th day after expiry, it becomes deposit. Then from debenture holders, secured or unsecured, not a deposit, guys. Non-convertible debentures without a charge on the asset, and from directors and relatives of directors of private company, not a deposit, guys. Are you clear with this? Next, let's go to some important points I've highlighted in orange over here. security deposit received from employee without interest not exceeding 12 months of his annual salary. This becomes a very important point, can be a separate question for 2 marks. Security deposit sometimes employees will pay when they join a company. So such security deposit received from employee without interest, not exceeding his annual salary. Are you following? So if employee's salary is 15,000 per month, maximum he can pay is 15,000 into 12, whatever that amount comes, that can be the maximum deposit which is without interest. If I pay more than this, then it becomes a deposit, then amount held in trust. Next point, promoter's loan by way of unsecured loan due to stipulation imposed by lending institution and loan by promoter and their relatives. This is not a deposit until the loan is repaid. Sometimes some companies will tell, or some banks will tell, for example, Adani is saying I want 100 crores loan. Bank will tell, I will give you 100 crores loan if you, Adani, give the company 5 crores loan. So Adani is giving 5 crores loan to the company only because of a stipulation, a condition imposed by the bank. So bank will give Adani 100 crores and then Adani will give the company another 5 crores. So this 100 plus 5, both are not a deposit because the 5 crores given by Adani is for a condition given by the bank and not a deposit that he is giving to the company. That is point number 7, guys. Next, if you go, sometimes for certain services, before the sale takes place, we will give advance. So if you give advance for goods or services, and such advance should be adjusted within 365 days. So until those 365 days, we will not call deposit. But if the advance is not adjusted within 365 days, then it becomes a deposit, guys. In case of immovable property, if you are giving advance, then such an advance should be adjusted as per the terms and conditions. What's there in the particular contract. Look at this, guys. In case of immovable property, in case of immovable property, appropriate as per terms of the contract for supply of goods. Not 1 year, guys, not 1 year, as per terms and conditions. So only for goods and services 1 year, 365 days. For immovable property, sometimes they will tell 3 years, sometimes they will tell 5 years, the project will get over. Until that time, it's not a deposit. If the construction delays beyond the time given by the company itself, then it becomes a deposit. Then few other common points over here which you will be knowing. I'm going to be very fast over here. Security deposit received for performance of goods, not a deposit. Any advance received by sectoral regulator, for example, advance tax in income tax department, those kind of advances. Any subscription towards publication of print, electronic media to be adjusted against this. Netflix 1 year subscription, or newspaper 1 year subscription, or e-mint 1 year subscription. Those things will come here. Next one is AMC, for warranty or maintenance service. In our house, we will pay AMC for AC. For all those kind of AMC housekeeping services, you can pay advance, but such an advance should not exceed 5 years. Or the general period as per the trade practices, whichever is lower. So if general practice as per trade is, let's say, 3 years, then it will be 3 years or 5 years, whichever is lower, guys. Are you following? Understanding? Sometimes in this case, where goods and services advance up to 365 days, or capital goods up to 1 year, capital goods as per the terms of contract, in these two cases, point 9 and 10, 365 days in terms of contract, goods and services and immovable, suddenly during the advance period, if this contract becomes illegal, or if the contract becomes void and it's cancelled, I have to refund the money suddenly, then the money should be refunded within 15 days, guys. For example, I paid advance now 6 months in advance, but within 1 month I understood the service cannot be provided. So they're saying they cancel the service. They're saying give the refund. Then refund should be given within 15 days. Up to 15 days grace period, it's not a deposit. After 15 days, it will become a deposit, guys. Last one over here. Very common point. We would have studied multiple times. Amount accepted by collective investment scheme, alternate investment scheme, or domestic venture capital real estate fund. All these funds, we call it as a deposit. Then mutual fund registered with SEBI. Guys. What is registered with SEBI? Then, for example, you are paying to mutual funds through Grow app. All those money you pay through Grow app for them to buy mutual funds for you is not a deposit for the Grow app. And last important point, startup company, which is before that amount received by chit fund. If you look at these words in exam, not a deposit. Chit fund, Nidhi company, not a deposit. Last one, startup company, more than 25 lakhs from a single person in a single tranche. Why they are paying startup company? I am a startup company. I have a mental health company called Minded Company. So in my company, if I am receiving money which is convertible into equity shares or repayable within 10 years, it's not a deposit. It's not a deposit if my startup company from a single person, I am investing in a single tranche more than 25 lakhs, guys. Again, I'm repeating, a single person for my company in a single tranche is giving more than 25 lakhs for the purpose of conversion into equity or repayable in 10 years, then this is not a deposit. Sir, what if he's giving 3 times 10 lakhs plus 10 lakhs plus 10 lakhs? Then yes, it becomes a deposit because it's less than 25 lakhs. Sir, what if he's giving 30 lakhs plus 30 lakhs plus 30 lakhs? No, not a deposit because it's more than 25 lakhs. I hope this point is clear, guys. Now finally, with this we are done with full deposits chapter, guys. What is there in expected questions for us? Now what is left is in share capital. If you noticed, I wouldn't have taken debentures over there, and in deposits also some concepts are kept pending. So those concepts are comparable concepts. So over here, debentures and deposits, I will be teaching you in a comparative basis for these comparative provisions. So to start off these, guys, deposit versus debenture. The first thing, in debentures, we create something called DRR, which is called debenture redemption reserve. In deposit, we create something called DRR again, but it's called deposit repayment reserve. In debentures, in general, it is 15%. In deposits, in general, it is 20%, guys. Now, how is this created? Look at this DRR. I am taking 15% of debenture example, but the same principle applies when you are doing deposit also. So in debentures, what I have to create every year, I will be transferring from my P&L account debit to DRR. Debentures means debenture redemption reserve. Deposit means deposit repayment reserve. Every year I will transfer 15% for debentures, and for deposits, how much I will transfer, guys? 20%. Respectively, I will transfer 15 or 20% of debentures or deposits maturing during the financial year of 31st of next year. So in simple, whatever debentures or deposits is maturing next year, no, before this year ending, 15% of that value I will transfer to DRR. For example, if next year 500 crores is maturing, 15 or 20% of that this year before 30th of April, I will transfer it to P&L. And then the balance in the DRR should not fall below 15 or 20% of debentures maturing in current year. Imagine in current year, 400 or 500 or 600 is being matured. So what is being matured this year, in that 15 or 20% balance should also be there. So basically what will happen, guys, when you transfer over here for the next year, this is basically a check for the next year. Meaning, look at this. In year 1, I will transfer year 2's balance and check year 1's balance. Year 1's balance is still there. In year 2, I will transfer what is maturing in year 3 and check whatever is maturing in year 2 is still available. That means what I transferred previous year for year 2, I will still check in the current year if it is still there. Are you following, guys? So far, they have not asked this kind of a question in law. That's why I'm not going in depth into this. Of course, this topic requires hours of explanation, but I've given you an overview. I hope you got the logic, guys. Next, if I proceed, again in debentures, there is some percentages that you should remember, guys. So what are these percentages, guys? Usually in deposits, it's flat 20%. But when it comes to debentures, in certain cases, it becomes exempted, and in certain cases, percentage changes. If you see the word All India Financial Institution, exempt. If you see the word banking company, exempt. If you see the word listed company, also, then it is exempted and exempted for both. If you see NBFC not registered I will create DRR at 15%, create DRR at 15%. Unlisted company, 10%. Are you following, guys? Unlisted means 10%. You be clear with this. In unlisted, if it's NBFC registered with NBFC finance company, means again it becomes 15%. So this table alone, you have to be very clear for your exam. Okay, fine. Let me come back over here. In both the cases, here debenture trustee is needed, here deposit trustee is needed. In debentures, the debenture trust deed will be created after the issue, 3 months after closure, because in debentures, who are the debenture holders is clear. So I will create the trust deed 3 months after closure. In deposits, deposit holders will keep coming up after 1 month, 2 months. Every time someone new will come. So this deed will be created 7 days before opening the offer itself. Look at the difference, logical difference. In debentures, after offer is closing, within 3 months, create the deed. In deposits, 7 days before offer is opening, you will create the deed, guys. Are you following? Next, in certain cases, the debenture trustee is not needed. Companies issuing prospectus are not needed. Public issue are not needed. Offer up to 500 debenture holders are not needed. In these 3 cases, it is exempted. No need to issue debenture trustee. So let's see now in what cases the debenture trustee is mandatory or deposit trustee is mandatory. For deposits, it's always mandatory, guys. But over here, it's mandatory only in certain cases where companies issuing prospectus, public involved are, so mandatory. Public issue are mandatory. Offer more than 500 debenture holders, mandatory. That means less than 500, it is not mandatory. Resolutions. Here, this resolution is not applicable. Resolution 3/4 in value. If the debenture holders who are having 3/4 in value pass a resolution, any of this can happen. Either you can remove the debenture trustee or the debenture trustee is exempt from damages. Let me repeat, guys. If you pass a resolution 3/4 in value, I'm repeating 3/4 in value, such a debenture trustee can be removed if you want to remove him, or if you can exempt him from damages, 3/4 in value. Next, what happens if you pass 1/10 in value in both? In both, if you pass 1/10 in value, you can call meeting of debenture holders or you can call meeting of deposit holders, guys. Casual vacancy. In deposits, if there's a casual vacancy is leaving, board will fill the casual vacancy. Over here, if there is a casual vacancy, then in deposit, if it's because of resignation, then majority of the members will fill. Majority of the debenture holders will fill it, guys, because it's resignation. If it's others, then board will fill. Okay, clear, guys. Next, who cannot be a debenture trustee or deposit trustee? Let me show this to you in the points over here itself. So who cannot be a debenture trustee? Look at this. Now, in debenture trustee, who cannot be a debenture trustee? Basically somebody who has some kind of a close relationship with the company. He is beneficially holding shares in the company. Basically shareholder of the company. Next, promoter, director, KMP or officer or employee of the company. So any top level or any close employee of the company. Look at this. Promoter, top level, director, top level, KMP, top level, or any other officer of the company or the company is holding subsidiary associate. So company is holding subsidiary or associate. Next, they are saying this top level, promoter, director, KMP and their relative. To somebody the company is indebted to company holding subsidiary or associate, and then they are saying you have a pecuniary relationship with the company amounting to 2% or more of the gross turnover or total income or 50 lakhs, whichever is less during the immediately preceding 2 years. This point only is not there in deposit. In deposit, they are saying you have pecuniary relationship. That's it. So in deposit, they are saying you have pecuniary relationship means you cannot be. But here, the first 4 points are common. This 5th point alone in debenture, this is debenture, this pecuniary relationship has a limit. The limit is 2% or more of the gross turnover, total income or 50 lakhs, whichever is less during the immediately preceding 2 years. And last point guys, has furnished guarantee in respect of principal debts. One more point which is not there in deposit is relative. This relative point also is not there, which is nothing but this point. So this relative of the promoter director KMP is also not there in deposit. So point number C and point number F alone, there's a small change. Remaining points for debenture and deposit are same. So if we learn like this in a comparative basis, it becomes easy. Now in debentures, let's look at some last general points for debentures, guys. Debentures can be issued for a duration of, repeat with me guys, I know we're in the end of this chapter, already gone for 40 minutes. Debentures can be issued for a maximum period of 10 years, additional 20 years in case of infrastructure products, guys, projects. Convertible debentures can be issued, yes, if you pass only special resolution, because they will be converted to equity. We need to get shareholders permission. Next, the charge. Companies can create charge on the company or the company's holding subsidiary associate. Company can create charge on the company's holding subsidiary associate. Company can create charge on the company's holding subsidiary associate. And lastly, if central government or state government gives guarantee, no need to create charge. That means for me to repay these debentures, guys, follow. To repay these debentures, if central government is giving some guarantee, then no need to create the charge. With this, we are finally done with deposits and debentures concept also. I have explained to you in expected question marathon. This whole page is now done. We will move on to the next set of chapters. Now, as I already told you guys, we are going in order. I told you some chapters which are very important, especially like this share capital and management and administration. If you take, now let's go to expected question of management and administration. Look at this. This chapter also is important because last time it was again tested for a lot of marks. If you look at this, I have given few concepts over here as important, which is, yeah, these expected questions. Actually, last time in September 25, the significant beneficial owner and beneficial owner came. I gave an expected questions and gave in 5 marks in 5 minutes. But I still kept it because sometimes some concepts repeats. And this concept many students missed in the last time. So I say may smartly repeat it again. And that's why I have it over here. Other points are annual return, section 92. Report on AGM, never tested, section 121. EGM related provisions been almost 3 to 4 attempts. Then circulation of members resolution, section 111. 101 notice, 103 quorum, long due. 101 has been tested many times. Quorum has been tested many times, but a long gap is there. So repetition possible. Minutes 118 and 119. Postal ballot 110. And then concept of chairman along with special or ordinary resolution for vote count. Chairman, that point is coming. Then AGM related concepts, long due, and explanatory statement and e-voting, guys. Now this list again as usual is prepared based on long due questions and untested areas. For big chapters like share capital and debentures, meetings, management administration, I want us to learn the whole thing because you're going through this fully. So if you don't have time, at least learn only these concepts. After this, what I'm going to do, I will be attaching, just like share capital and debentures, one amazing video I took for the previous attempt because there is absolutely no amendment. This will be for the next 30 minutes. Quickly we will revise management administration using my Gen Z notes, guys. If you have not watched this revision, in this I'm going to revise the whole management administration, or if you have already watched it, no harm, watch it again with me as a revision now, guys. And then we'll move on to the next chapter after that. So believe me, if you are watching, if you find it useful till now, if you have already watched it, just push yourself maybe for another 2.5 hours if you can finish the whole thing, and then it will be very good for you to go and sleep tonight. Or if you feel it's very heavy, you can take a break, but ensure you finish it, guys. Trust me, in this 4 hours or 5 hours, how much ever time it takes, if you travel with me fully and finish off this marathon, tomorrow or next when you're doing the revision before law exam, it automatically becomes your second revision, guys. You will end up doing 2 revisions. And what I'm doing now, I'm not teaching you everything. I'm helping you recollect what you already know in quick span of 4 to 5 minutes, so that when you revise later, it becomes very easy for you, guys. So let's move on to the next chapter.
Okay, hi guys. Now we are going to revise full meetings chapter 88 to 122 using our Gen Z notes. Please refer to your Gen Z notes. We will start off in the same order. 88 talks about register of members. What are the key points here for exam? Update in register within 7 days after any transaction. Where will I keep the register? Registered office. Can I keep anywhere else? Yes, you can keep anywhere else in India if company passes a special resolution and if 1/10 of members reside in that location. That is which section? 94. Okay. Anywhere else in India, and this register will be kept for how many years? 8 years. Other points in this, in the register, if there is any charge, lien, or if any security is enforced, you have to update in the register of members. If there's any death, insolvency, or any transfer to IEPF, that also will update in register of members. Last one, if the number of members are less than 50, then no need to maintain index. I hope you're able to recollect the points. That is more important than being able to tell all the points. Next, 88 subsection 4 talks about foreign register, which is same as Indian register. Only difference is, once you establish a foreign register, you have to intimate ROC within 30 days and then backup that should be sent back to the principal location within every 15 days. Signing difference, the CS and director will sign for both 88 and 88 subsection 4, but the difference is he has to append on every entry. Foreign register, every entry you will sign there, page wise, it's enough. Next, 88 over, then we went to 94 also. Again related to this, we are going in the same order how we took the class. 91, closing of register of members. Can you close? Yes, maximum 45 days. At one stretch, 30 days. Before closing, notice of 7 days. Perfect. Then we saw two sections, 89 and 90. BO and SBO, beneficial owner and significant beneficial owner. BO, they are saying, what they are trying to say, the registered owner will intimate the company within 30 days when he appoints a beneficial owner in form MGT 4. Same way, beneficial owner also will intimate company within 30 days when he is appointed MGT 5, and the company will inform ROC within 30 days in MGT 6. This concept of BO is not applicable for a government company or a mutual fund or venture capital fund. Are you able to recollect, guys? That's it. Next, 90 also same thing, but here what they are saying, an SBO will intimate company within 30 days in form Ben 1. Registered owner will intimate company within 30 days when he appoints an SBO. They have not given the form number. Company will intimate ROC within 30 days. Who is an SBO? He has 10% or more of voting power or paid up share capital or getting the dividend or has control or significant influence. Any of the one. Then exception. This SBO is again not applicable to a government company. Additionally, central or state government and your mutual fund, venture capital fund and REIT. Two new points added in our syllabus here is Ben 3 and Ben 4. What is Ben 3? Register of SBOs. So company has to maintain register of SBOs open for inspection for 2 hours. Ben 4 is very important. If somebody is not reporting to the company, if company has a doubt, I can send them a notice asking them if they are an SBO. So notice to doubtful individuals in the last 3 years, even if you are not shareholder in Ben 4, if they are not responding to the Ben 4 notice, then you can apply to tribunal within 15 days. Are you following us? This is section 90. Then this were the procedures. So we finished 88, 89, 90, 91, 92, 93, 94, 95, except 92. We will come back to that in some time. Then we went to meetings. First is 96, which talks about AGM. What are the key points here? No need to mug up all. Like I'll ask questions, you will answer. Where will be the AGM? Registered office. Same city, town or village. What time? 9 a.m. to 6 p.m. I can start anytime between 9 a.m. to 6 p.m. Where can I keep anywhere else in India? Yes, if company passes a unanimous resolution. Which day can I keep AGM? Any day except national holiday. If it's government company, central government can keep it anywhere in India. Next, time. First, AGM will be held within 6 months from end of financial year and maximum 15 months time gap between 2 AGMs and one every calendar year. You have to satisfy all the points. But if it is first AGM, instead of 6 months from end of financial year, they are giving time of 9 months from end of financial year. Next, ROC can grant 3 months extension. So 6 months can become 9 months, but extension is not allowed for the first AGM because first AGM already has 9 months. Section 8 company, time, place, date of the AGM is decided by the board of directors. One more thing for section 8 company, for AGM instead of 21 days notice, 14 days notice is sufficient. Next, 97, 98. 96 is again what guys? AGM. 100 is what? EGM. 97, 98 is tribunal to call for AGM. Tribunal to call for AGM. Even if one member attends, it becomes a valid meeting. Even if that one member is a proxy, we will consider as a valid meeting. Next, 99 is penalty for not holding AGM or EGM. Then EGM we will take in the last guys. We are going in the same order how it was taken for us in class. We can't go to EGM after 98, 99 because you should know about notice. So for every AGM, notice is mandatory. So 101 talks about notice. What are the key points here? No need to mug up all points. Notice should be 21 days before AGM. 21 clear days. That means date of AGM, date of sending notices not counted. If it's postal, additional 48 hours will be given. If it is less than 21 days, yes, you can give a notice less than 21 days. If 95% of members agree in writing or electronic mode, latest RTP question. Section 8 company we already saw, 14 days notice. Such notice should be clear, explicit, unconditional. I can't give any conditions. Next, intentionally I didn't give the notice. Deliberate omission to give notice to any member makes it void or invalid. If it is not deliberate omission, genuine cases, then the meeting is valid. Company will prove with the postal challan. Then to whom the notice will be sent? Shareholders, legal representative of deceased, auditors, assignee of insolvent member, directors. Don't mug up, just think shareholders, directors, auditors. If shareholder dies, legal representative. Shareholder becomes insolvent, assignee of shareholder. Then the notice will of course have details of place, date and time. Otherwise it's not even a notice. Then we went to the important section for us, section 102, explanatory statement. Let me revise this point again. In AGM, 4 businesses: adoption of FS, declaration of dividend, appointment, reappointment of directors, appointment, reappointment, remuneration of auditors. These 4 business are what guys? Ordinary business. For ordinary business we have only ordinary resolution. All other business in the AGM is called special business, and special business can be ordinary resolution, special resolution or unanimous resolution. In EGM, all business including those 4 business are called special business. What this section says, learn what is special business. AGM other than those 4. In EGM, all business. For every special business you need an explanatory statement is mandatory to be attached along with the notice. What is explanatory statement? Giving more details about the transaction, with whom I am entering the transaction, how much is the transaction, party, all those details. Okay. Next we jump to section 114 because it's related to resolutions. 114 talks about ordinary and special resolution. Whenever you pass a special resolution or board resolution, you will intimate ROC within 30 days in form MGT 14. That is given in which section? 117. So resolution, special, board, intimate ROC within 30 days in form MGT 14. This will come in every point wherever you write about special or board resolution. Be careful, not for ordinary resolution. Then we jumped again back to meetings chapter, main core meeting, section 103, which talks about quorum. What are the important points? Exam ku what to remember for quorum. Private company, 2 or AOA, whichever is higher. Public company up to 1,000, 5. 1,001 to 5,000, 15. More than 5,000, 30. People are personally present. We do not count proxies, but you will count representatives. Representative under 112 and 113. 112 we have 2 people. President, governor. 113 we have 3 people. Central government, state government, company. This representative is counted for quorum. Are you following guys? Now if I am representative for 4 companies, I will be counted as 4. Next, this quorum should be present within the first 30 minutes. If not, meeting will be adjourned. Secretarial standard recommends that quorum is present at the time of passing every resolution, not the act. Standards recommends that. Okay, next, if there are joint owners, you will count as 1. Will I count preference shareholders for quorum? No, but I will count them if they can vote. So in a meeting of preference shareholders or dividend is not paid for 2 years, for cumulative preference shares, I can count them. Next, if the meeting is adjourned, when it will be adjourned for? Board will decide when the meeting will be adjourned if the quorum is not there. If board is silent, it is adjourned to next week, same date, time and place. In the next meeting also quorum is not there, then the members present will be quorum. For example, for my company I need 30 members, only 20 are there. It becomes the quorum. Then for the adjourned meeting you have to give a 3 days notice to all the members or publish in 2 newspapers. What if it is an EGM which members called and EGM is adjourned because there is no quorum? No, that concept is not there. EGM cannot be adjourned when members call for it. If quorum is not there, meeting is cancelled. So adjournment comes only for AGM, and even for EGM if it is called by the board of directors. Next we went to section 104. Simple. Chairman. What is important? Chairman has the power of casting vote, second vote in case of a tie. Who will select the chairman? The board among themselves will select the chairman within 15 minutes as per articles. If everybody is okay, the chairman will continue. If somebody is contesting, no, I am not okay, then members can elect a chairman among themselves, but that members can protest only if they can demand for a poll. To demand for a poll, you need to have 1/10 of total paid up share capital, otherwise you can't demand for a poll. 105 again big section. Proxy. What all we saw in proxy? Proxy can be proxy for maximum 50 shareholders, plus that 50 put together should be maximum 10% of voting power. If one person has more than 10% of voting power, then you can be proxy only for one person. What proxy can do? He can do only one thing: vote by poll. He is like a postman. Don't write that in exam. What he cannot do? He cannot talk. When I say he cannot talk, he can't ask questions to chairman. He can talk among themselves. Okay. He cannot vote by show of hands. 107 voting he can't do. He is not counted for quorum. And if member comes, then member will vote. Proxy cannot vote. For all of this we saw the logic. Here we are focusing exam points. What are the timelines for proxy? Before AGM, 3 timelines. 24 hours before I can start inspecting who are the proxies. 48 hours before you can appoint proxy. 72 hours before you can request for inspection. That means I can request for inspection 72 hours before and start the inspection 24 hours before the AGM. Are you following, guys? Then if I appoint multiple proxies, who will be valid? Last one who is appointed 48 hours before AGM. After that I will not count. Next, proxy. Should he be member of company? Can be member, cannot be member. There is no mandatory rule over here. Is this clear, guys? Proxy important. 106. Who? It's not about who cannot vote. Somebody who is eligible to vote cannot vote if he has calls in arrears or there is a right of lien on shares. Are you able to recollect the points, guys? Otherwise revise and then watch this. Okay. Show of hands. Now section 107 talks about show of hands. For all resolutions you will do only by show of hands unless it is voted already under e-voting in section 108, or if somebody is demanding for a poll under section 109. That means already we saw you can demand for a poll in 104 for chairman, or you can demand for a poll in 107. So 109 has intros even 104 and 107 itself. Now coming to what is 109 poll. To call for a poll you need to have 1/10 of total voting power or 5 lakhs paid up share capital face value, whichever is less. Any one irtha podu. Whichever is high means you should have higher. Any one 1/10 of voting power or 5 lakhs face value. Then you can demand for a poll. Once you demand for a poll, when the poll will happen? It will happen that time itself. If you are asking for 2 things, electing chairman, if you want for adjournment, because that should happen that time. So electing chairman, adjournment happens that time. Other cases it can happen within 48 hours of AGM. Once poll is done, that scrutinizer will show the dabba, all of that key points. Within 3 days you have to give result. Within 7 days you have to give report. Report says how many votes in favor, how many against, how many not counted, all of that. Then we went to section 110 which talks about postal ballot. In certain cases or in certain resolutions have to happen in postal ballot. A few of those what we saw, or the whole list is: alteration of object clause, 27 variation of objects unutilized money, 43 rule 4 DVRs, 48 variation of shareholder rights, 14 alteration of AOA, in that conversion of public to private or private to public, both are considered. Then section 12, shifting of registered office outside the city. Section 68, buyback. So if any of this happens, then you have to vote only by postal ballot. Then they're also saying postal ballot is deemed to have been complied if you are voting under section 108 in electronic voting. So no need postal ballot. Additionally, if you are a one-person company or members are up to 200, here they are not saying private company up to 200, can be private, can be public. If members are up to 200, no need postal ballot. If postal ballot needed, you can vote under e-voting. What is the timeline for postal ballot? Once you get the ballot, you have to reply within 30 days. Once you reply, all the from cutoff date, the last postal ballot, company should give report within 7 days and advertise 5 days before voting period is starting. What do you mean by voting period? The time when company starts opening all the ballot papers. Next to 108. 108 comes when postal ballot section itself tells it is enough if you do in electronic voting. Here only key timelines are important for me. If this is the date of AGM, you need to give report after 3 days and voting should be open at least for 3 days before AGM. In such a way it closes at 5 p.m. before the date of AGM. Cut-off date should be 7 days before AGM. That means if you are a shareholder up to 7 days before AGM, it's enough. On that day, if you are a shareholder, you can vote. Then 21 days before AGM, you are anyway giving notice. When you are giving that notice, you should also publish in 2 newspapers that we are going for electronic voting, so people are aware. Is this mandatory electronic voting? Not mandatory for all companies, but if you are a listed company, that's it. You have to follow electronic voting. Or if your company has 1,000 or more members, you have to go. That means public company having more than 1,000, private can't have. Next to section 100. Now you can understand section 100 better because we finished notice. Simple. EGM, who can call for it? 3 people. Tribunal can call under section 98. Board can call by passing a board resolution. Shareholders can call if 1/10 of paid up share capital if they are calling. That means that same provision of 110, not 110. 109, that 1/10 of paid up share capital if you have, you can call. That means you can call for a poll, or you can call for EGM, or you can call for chairman for poll. All the same is 1/10. Where I will have EGM? Anywhere in India, not the registered office. Of course, first try registered office, not possible. Anywhere in India, we have many case laws for that. Which day? Any day except national holiday, just like AGM. Next, once they make the request, people making the request are called requisitionist. The EGM should be held within 3 months. Within 3 months, EGM should be held. First to 45 days is for board. If board fails, then members will try to collect the details of members and try to conduct within the next 45 days. Any expense for conducting EGM will be reimbursed by the company. Are you following, guys? I will wait for the first 21 days. If no notice comes, then I will start initiating the process. These are the next, all the big sections. Then we saw some small sections. 116, very small. If a resolution is passed at adjourned meeting, it is treated as if it's passed on that day and not any previous day. That's it to remember for exam. 120, all documents and inspection required in this chapter, not act, in meetings chapter, can happen in electronic mode. Applicable, same 108 applicability, listed or any company having 1,000 or more members. Next we saw 121, 122, 120, 121, 122. 121 important. For every listed company from date of AGM within 30 days in form MGT 15, you have to file a report of AGM to the ROC. This report will be signed by the same people who signed the FS in section 134. Chairman, if not chairman, 2 directors where one is managing director and CS will sign. CS is additionally will sign here. What will be reported? AGM actually took place. What is the proof? When was the note? Give attached copy of notice. Attach quorum details. What resolution is passed? If meeting got adjourned, details of adjournment. Who is the chairman? Photos, documents will be filed to ROC for proof that AGM actually took place. 122 small section. OPC chapter is not applicable for. AGM is not applicable for OPC. But what? How will I pass resolution? Ordinary, special, or board? I will intimate company, and company will just update in the minutes and they will sign. Are you following, guys? Then we saw 2 sections, 111 and 115. Both are similar. 111 is for circulation of members resolution. 115 is for special notice. Now 111, what they are saying, from the date of AGM, you can circulate a resolution if you give to the company at least 6 weeks before AGM. If you just want to give information about a business in the AGM, give it 2 weeks before. If you give it 6 weeks before, it gets added into the notice. Members can circulate resolution included as business. If you give 2 weeks before, only information. Again, for this circulation, you need to have 1/10 of paid up share capital. Same thing 115, special notice for two things. If you want, a retiring auditor shall not be reappointed. I don't like existing auditor, I don't want him first. Or appointment of somebody else other than the retiring auditor. I have nothing against existing auditor, I want somebody new. For this, you can again send a notice, special notice, for which you should have 1% of voting power or 5 lakhs paid up value, face value, paid up value, whichever is first, 1% or 5 lakhs. Here you should send it between at least 14 days before you have to send, or 3 months before you should send. In this time gap you have to send. If I send before 3 months, it is deemed to be sent within 3 months. Once you send this 7 days before the AGM, the company has to circulate this to all the members. If they are not able to circulate, at least publish in newspaper and website. This is section 115. Are you actually able to recollect, guys? 3 months, 14 days, then above 6 weeks, 2 weeks, all of that. Okay. Next, 118, simple, minutes. What they're saying in minutes, I'll ask questions, you try to answer. Minutes are kept for how long? Permanently. Who has the custody? CS or director or any person authorized by the board. Where I will keep the minutes? Registered office. They have not given any provision to keep anywhere else, so I will keep it registered office. Separate register for each class of meetings, shareholder, debentures, all of that. Minutes will be numbered consecutively. Minutes should be signed within 30 days of conclusion of AGM or board meeting. Board meeting or AGM, within 30 days I will sign. Who will sign? Chairman only has to sign. If chairman is not able to sign, then board meeting means chairman of next meeting can sign. Reason? Because board meeting will happen soon. If it is general meeting, then director authorized by the board. If the chairman is not able to sign, death, then some other director authorized by the board will sign. This is 118. Here in 118, for section 8 company, minutes is optional for whatever reasons we discussed, confidentiality, all of that. Last section that we have, we've actually revised all the sections. 119 talks about inspection of minutes. Inspection of minutes, who can inspect? Only members can inspect. That too, they can inspect only for general meeting. Members cannot inspect for board meeting. When you can inspect? Business hours. Any 2 business hours you can inspect. Inspection, how much to pay? Free. If you want copies, you should get the copy within 7 days. For copy, company can charge maximum 10 rupees. Are you following, guys? But now section 120 says you can keep in electronic mode. Therefore, if the minutes are in soft copy, how much you will pay? Nothing. It is completely free. But soft copy can be given only for last 3 years. If company defaults, of course there is a penalty, and tribunal you can apply to them and they will order the company to provide for the same. Are you following, guys? Let's revise the section numbers alone once from first. 88, register of members. 88, subsection 4, foreign register. 89, BO. 90, SBO. 91, closing register of members. 92, annual return. 93, not there. 94, place of keeping, register of members, that 1/10. 95, register as an evidence. Then we saw 96, AGM. 97, tribunal to call AGM. 98, tribunal to call EGM. 99, penalty. 100, EGM. This is one set. Then we saw 101, along with notice you send 102, explanatory statement. Once you send both of this, 103, quorum will come. Once quorum comes, chairman 104 will come. If the quorum is not able to come, you can appoint proxy. Why all of you are coming to vote? Who cannot vote? 106, who can't vote? 4 types of voting. 107, show of hands. 108, e-vote. 109, poll. 110, postal ballot. Then some other miscellaneous sections. Here, 111, circulation. 115, special notice. 112, representative of governor, all of that. 113, representative of company, central government. Next to 114, special or ordinary. 117, file to ROC within 30 days. So 2 sets. Then one leftover section. 116. What is 116? Adjourned meeting, that resolution will be passed. Then 118 and 119, minutes, inspection of minutes. Then 120, 121, 122. 120 is documents in electronic mode. 121, listed company, report on AGM. 122, OPC, not applicable. Whenever we tell a section, are you able to recollect the provision? 20 minutes we revised meetings, but if you are doing it by yourself, a little more detailed, 45 minutes or 1 hour with our Gen Z notes, you should be able to easily revise one of the biggest chapter. Are you feeling confident now, guys? Yes? No? Fine. Thank you. Yes. So follow, guys. In meetings chapter, we have so many timelines from 88 till 122. Within 7 days, 3 days, 30 days, this, that, where we get confused. So this is one timeline where everything is covered of the whole chapter. That means 10 minutes before exam, this is enough for me. Now I am going to scribble on this and explain. Sir, already it looks like scribbled only. Don't worry. That's why I have another copy, image, which you can copy, or image also I will send it to you. Therefore, don't have stress. Let me scribble on this. Okay. First, this is the date of AGM. Is it visible or shall I zoom in a little more? Okay, when I will zoom in and I will move out wherever needed. Okay, fine. This is the date of AGM. What all timelines comes before and after AGM? Look at this. First, let me finish. After AGM. It's mix of all sections. So before this, you should be able to revise meetings chapter. From AGM, within 3 days, you should give that result in section 108 for e-voting and even for, look at this, and even for poll in section 109. Within 3 days, 108 and 109 result has to be given. Correct? Next, within the next 7 days, in 109, you have to give report of poll. We will give report of poll. If we miss anything, let me know, we will add. This is the summary what I did. Then within the next 30 days, there are so many things in next 30 days, guys. Lot of things in next 30 days. What are all of that? All those summary I have put over here. Within 30 days of AGM, 118 minutes has to be signed. 121 report of AGM for listed companies. 137 FS to ROC in section 137 and also related point 135 CSR 2 should be attached with this within 30 days of AGM. Within 60 days of AGM, annual return 92. Here we have those three things: MGT 7, MGT 7A and MGT 8. Whichever it is, wherever applicable, 60 days only time limit. Correct? This is after AGM. When should AGM be held? Within 6 months from end of financial year. First AGM now 9 months. One in every calendar year. Maximum 15 months between 2 AGMs. Are you able to recollect, guys? This is when AGM will be held. Then let me see what happens before the AGM. Before the AGM, 24 hours before, we will start inspection. I can also add here 5 p.m. before voting has to end. Voting has to end. Then 48 hours before submit proxy form and 72 hours before request for inspection. All three proxy sections. Actually, I wrote the 5 p.m. It's on top. E-voting period is minimum 3 days and section 108 closes 5 p.m. on previous day of AGM. I wrote on top. Are you able to follow, guys? Next, if I go a little more this side. Yeah. Next, if you see, we are going in same sequence order. So up to 72 days over. Next 2 weeks before AGM, 2 sections comes. Just now we saw 111 circular resolution. Same 14 days. 115 special notice. Are you following, guys? 2 weeks. Both 2 weeks I wrote again as 14 days. Then if I come down to 21 days before AGM, lot of things have to happen. 21 clear days plus 48 hours if it is post for section 101. Then less than 21 days now members have to give consent in 95%. Also 21 days before in section 108, the details should be given in advertisement, correct? E-voting advertisement should be given in section 108, and in section 102, what is this? Explanatory statement should come for special business, and one more thing, 21 days before, 136, circulation of financial statement to members. Do you remember, guys? 21 days, all the related points we have put over here. Of course, you won't understand, guys. You need to write it. When you write, you will write more points. I'm just telling you how we are summarizing. This is not Gen Z notes. This is Gen Z or Gen Z. Summary of full meetings in just one side, guys. Okay. 136 now, what they are saying, 21 days before, along with the notice, you should also send a FS, circulation of FS to members. Then what else is there before the meeting? 6 weeks is that special notice, correct? 6 weeks is that circulation 1/10, and 3 months before only special notice. This is section 111, circular resolution, and 115 is 3 months before, which is 1% or 5 lakhs, whichever is lower, for special notice. That auditor, removing auditor. Are you following, guys? All sections, all timelines we wrote. Is there anything that we have missed out according to you? Anything you can quickly think of from 88 till here? I'm not putting BO, SBO here, because that is not to do with AGM. That is any time. Anything before and after AGM we have covered here. Who will take care of all these complaints? CS. Now don't think CS will put stamp, CS will sign. This and all who will do? CS. Are you following? இதெல்லாம் கரெக்டா இருக்கணும் sir. Every year company secretary simply is not passing. I'm also a CS guy, so I'm saying fine. Okay, understood, guys. Are you following? Clear? That's about it. So ensure you have this in your notebook, guys. Make a copy. I will just alt tab to the better version of this. I hope you will be able to understand. That's why I read everything. Pause it. I will send the image to you guys also offline from the team. Make a note. See you after lunch. Recording. Thank you. Offline. Thank you. Bye bye.
Now let's start off with the expected question marathon for accounts of company and audit and auditors. Have you seen an attempt without these two chapters coming in exam, guys? At least one question of 5 marks will come, and that's why I've given all the important questions in this chapter over here. And maybe what is there in September or very less important is only what I've removed over here. Otherwise, you will easily find significant of the chapter. Now, ICA shocked us in the last 2 attempts by asking us a question from NFRA. ICA does not like NFRA, but ICA asked a question on that. That means this time, cost audit has an amendment and ICA does not like cost audit. So what if they're going to test us in cost audit? It's just a guess feeling, guys. So in that, cost audit is nothing that difficult. The amended limits are much more easier. So let's quickly revise that. Cost audit is applicable if domestic or foreign company. For any companies, that means they're saying domestic and foreign company, only one limiter. Before we had 4 limiter. They used to say regulator, non-regulator. All that nonsense gone away. One limit. Overall turnover of products or service exceeds 35 equal to or more than 35 crores in the preceding financial year. Let me repeat. Remember this. This can come in MCQ or in the main thing. Overall turnover of products and services. Let me repeat. Overall turnover of products or services more than or equal to 35 crores in the preceding financial year. Are you following, guys? If this is applicable, then cost audit is done by a cost auditor, and such cost auditor will submit the report to Board of Director in form CRA 3 within 180 days from the end of the relevant financial year. So the minute financial year gets over, within the next 180 days, there is nothing but within the next 6 months, I will submit the report, and the cost auditor shall within 30 days, the company, once I get the report from the cost auditor within 30 days from date of receipt, and CRA forward it to central government. So if you look at the timeline, it will come like this, guys. If my financial year is ending over here, 31st March 2025, within the next 180 days for this financial year, for 1st April 24 to 31st March 25, for this period where the cost audit is being done, the report of this will be given before 180 days from end of financial year, which will mostly be 30th September 25. And from here, within the next 30 days, the company will forward this report to the central government, guys. This is the timeline. So for this financial year where cost audit is done, cost audit will be done for this financial year. If the turnover of the preceding financial year, for this preceding financial year, if the turnover is more than or equal to 35 crores. So if it exceeds 35 crores, then I will be doing cost audit for this financial year. Within 180 days from end of financial year, I will be giving the report to the company. And once company gets the report, I will be giving to central government within 30 days. If the timeline is clear, let me know in the comments, guys. For this year, I will do cost audit looking at the previous financial year's turnover, overall turnover of all products and services, if it crosses 35 crores or if it's equal to 35 crores. This is the timeline, guys. Let's go to other expected questions. Now look at all these concepts over here. Accounts of company, whatever I've given here, audit and auditors, whatever I've given here. If you're planning to skip these chapters, at least learn this. At this point, give more importance to all these chapters. So what I have done for these two chapters, guys, sorry, for these, some throat issue for me. I've been recording continuously for the past 4 to 5 hours. I don't know if you've noticed a small crack in my voice, but I can feel it, guys. But I'm thankful this happened now, because after this, I don't have any more videos to record. I finished recording all the videos. I will take break for 1 week because Niveda ma'am will take over for group 2. Niveda ma'am will handhold you for audit, SM, everything, guys. So now all these videos, I'm going to take it from the previous, all these topics, because there is no amendment apart from cost audit, and the quality of auditors and books of accounts in the previous set of recordings for September 25 came top class. I'm going to add that. So both these put together is only going to be for 30 minutes. It's only going to be for how long, guys? It will be only for 30 minutes, both the chapters put together. If you have not watched those videos, you're going to enjoy those too. Or if you have already watched them, spend this 30 minutes, again watch them and revise both these chapters. With that, accounts and auditors chapter will come to an end, and then we'll move on to the next chapter after that, which will be foreign company, which I'll be taking. Okay.
Okay. Back to our Gen Z notes. This time we're going to revise accounts of company. Let's target to do as soon as possible. Okay, what are the important points for exam? You might have spent 2 hours, 5 hours, 7 hours for studying this chapter. For exam, what to remember? Quickly we will revise together. Loudly, guys, I want you all to be very loud. Section 128 talks about accounts of company should be maintained in accrual basis, double entry. Can shareholders inspect? No. And it should be true and fair view for every year. Where will the books of accounts be kept? Only at ROC. Can I keep it anywhere else in India? Yes, by passing a board resolution, intimate ROC in 7 days and file form AOC 5. What, can I keep books of accounts at foreign branch? Yes, if I have a foreign branch, books of accounts will be in the foreign location. Then you have to send summary returns on a quarterly basis to the registered office. Sometimes the director will ask for written request that should be given within 15 days. Who is responsible for maintaining books of accounts? We saw managing director, CFO and whole-time director in charge of finance. Then within books of accounts we saw, can the director inspect books of holding? Yes. Can the director appoint agent to inspect books of accounts of holding? Yes. Now same thing but with subsidiary. Can director inspect books of subsidiary? Yes, but company has to pass a board resolution. Can director appoint agent to inspect books of subsidiary? Yes, company has to pass a. Of course, inspection is only in business hours, so you can't expect night inspection. Okay. Next, within 128, we have some rule 3, which talks about electronic mode books are maintained. Now, what are the key points? Audit trail should be there. For that, backup should be there. Good backup, storage, legible form, printable and accessible. There should be some good security and firewall. It should be complete and unaltered. Okay. If you are altering, we should know who is altering, how they are altering. Very important. Server should always be in India, and for that you have to intimate ROC proof, IP address and name of service provider, address of service provider. If you are using any cloud service like Google Cloud, etc., details and address of the service provider. With this, we are done with section 128. Then 129, if you look at section 129, which talks about preparation of financial statement. What is financial statements including? P&L, balance sheet, notes to accounts, cash flow statements, statement of changes in equity. This financial statement should be in true and fair view. 133, if there's any deviation from accounting standards, you have to disclose that deviation. Next, we also saw for cash flow statement for some companies it's exempt. They don't have to prepare cash flow, which is 1% company, small company, dormant and startup, exempted to prepare cash flow statement. Next, if financial year is incorporated on 1st Jan or later of any year, then the financial year can end on the same financial year or next financial year. Mostly if this happens, you will choose the next financial year, you will save cost. Next, 129, okay, foreign subsidiary. If I have a foreign subsidiary for the purpose of consolidation, if you are doing consolidation, dollar will be converted to rupees, language should be in English, financial year is different now, you will try to convert, if not get central government approval and do consolidation with different financial years. Okay. Next we have a new concept called periodical FS in 129A. What to remember here? This is called limited review audit for any period which is not yet notified. Once you do this audit, inform ROC within 30 days. This is applicable for which company? Unlisted companies, not listed companies. Consolidation is mandatory, but some exceptions. Unlisted companies, one exception. Then ultimate holding, if they are doing consolidation, if H is doing consolidation, then S1 need not do consolidation unless H is in foreign country. You have intimated subsidiary in writing and they have not given any objection, then don't have to do consolidation. Next, 138 talks about internal audit. In internal audit, who can do it, guys? I want you to be loud. Who can do it? Anyone. Then that report will be given to management, appointed also by management. Applicability for listed companies, then unlisted public company limit is 200, 100, 50, 25. 200 is turnover, 100 is borrowings, 50 is paid up share capital, 25 deposits. For borrowings and deposits, it's not previous year, it's any time in the previous year. For private companies, same limits, but they have only 200 and 100. Are you following, guys? Then 133 is nothing, accounting standards. Then 130 talks about very simple, any person or statutory authority, SEBI, central government, RBI, if they feel something is wrong in a company, they will intimate tribunal. If tribunal feels company is operated by fraud or mismanagement, then they will reopen books for the last 8 years. Okay. Next, 131 is similar, voluntary reopening of books of accounts. Here, if the company wants to reopen board's report or financial statements, then they will pass a board resolution and apply to tribunal NCLT within 14 days. Tribunal will take its own time, get representation from 3 main people, central government, income tax department and original auditor, and they will pass one order. Once they pass the order, within 30 days you will intimate ROC by filing the revised financial statements and board's report. Can you keep revising whenever you want? No, only once in a year, and maximum you can do for last 3 financial years. 3 years over now you can't do revision, you have to apply to central government, different procedure, not in syllabus. 134 talks about signing off financial statements and board's report. Who will sign financial statement? Chairperson or 2 directors. One of them shall be a managing director, and CEO, CFO and CS if applicable, if they are appointed, that means applicable. Next, board's report, we saw other contents has lot of points like dividend declaration, related party transaction, loans, holding subsidiary details, CSR details, dividend details, risk, environment details, all of that. In that, key point was, if you are a listed or a public company with a paid up share capital of more than 25 crores, you have to do a self-evaluation, how I performed. And one more key point in that is DRS, Director's Responsibility Statement. Points are very key here. In that, first, accounting standards should be followed. If there is a deviation, disclose. Accounting policies should be followed consistently. There should be sufficient care for safeguarding of assets, then safeguarding of accounting records and detection of fraud. Going concern should be taken care. Laws and regulation should be followed. If you are a listed company, additionally, internal financial controls. Are you able to tell without seeing, or at least by seeing, I will recollect, guys? For exam, what are the points? Beyond this, they can't ask. Next, 132, NFRA, quickly. NFRA head office is in Delhi. What they will do, they will prepare accounting standards, auditing standards and oversee quality of professionals. They will report to two House of Parliament. The committee includes 3 full-time and 9 part-time members. In that full-time there is one chairman also. If any disciplinary action is taken, what is the penalty? For individual, 1 lakh or 5 times the fees, whichever is higher. For firm, 5 lakhs or 10 times or fees, whichever is higher. If a professional misconduct is noticed, they will be debarred from being a member for 6 months to 10 years. Name will be debarred. Then we saw 136, 137. 136 is before AGM, 137 is after AGM. 136 before AGM. 21 days before AGM, you have to circulate copies of FS and audit report to the members. If you want less than 21 days, yes, 95% of members have to agree. Same as section 101 notice. Electronic mode. This circulation should not happen physically. In electronic mode, mandatory for listed companies and public companies whose net worth is more than 1 crore and turnover is more than 10 crores. Why they use and here where everywhere they use or? Because it's a mandatory condition. If you satisfy both, you have to circulate in electronic mode. Okay. 137. Once AGM is completed, you will file FS to ROC within 30 days in form AOC 4. If it's a 1% company, then they will file within 180 days from closure of financial year. Then in this, for some companies, they have an XBRL reporting, very important, which company listed and all their subsidiaries, paid up share capital of other companies more than 5 crores here or turnover more than 100 crores or companies following Ind AS. For some companies, XBRL not applicable. Bank, NBFC, insurance, housing finance. Once you follow XBRL, you have to follow for a lifetime, even if next year limits are not met. Then some more cases here. So what? We have to file 137 to ROC within 30 days from AGM. AGM held, normal scenario. AGM held, FS adopted, then file within 30 days. AGM held, FS not adopted, then you will file within 30 days something called provisional FS. Whenever you adopt it later, that time you file the final FS. Sir, AGM itself I didn't keep, sir. Could not keep AGM for whatever reason. No problem. File in 30 days from the date on which AGM should have been held and file with ROC as provisional FS. Whenever you keep the AGM and adopt the FS, that time you file final FS. This with section 137. Perfect. Then all sections are done. Then we went to CSR. Okay. Yeah, we went to CSR, guys. Okay. Are you following, guys? Last section 135, which is CSR. Follow. In CSR, let's revise one more time. CSR 135 is applicable for whom? It's applicable for whom? It's applicable for any company whose turnover is more than or equal to 1000 crores, net worth more than or equal to 500 crores, net profit more than or equal to 5 crores. How you have to spend or how much you have to spend? 2% of average net profit of last 3 years should be spent. If I am loss making company, will I spend? No. Even if turnover is crossing limits. In this net profit, I will not include two things. One, income from an overseas branch or subsidiary and dividend from a company already paying CSR. Now this 2% can be 3 extreme scenarios. One, I spent exact 2%. Good. I spend more than 2%. So if you spend more than 2%, I will carry it forward to next 3 years. If you spend less than 2%, they are deciding ongoing project or not ongoing project. Simple. Ongoing project, they are saying very easy way, spend within 3 years. In the 3 years, in the first 30 days, you will transfer to separate bank account. In the 3 years, if you don't spend, then in the next 30 days, you will transfer to fund under schedule 7. Not ongoing, project is not yet started, you are not capable. Within 6 months of end of financial year, again you transfer to fund under schedule 7. For all the spending, we need to have a committee called CSR committee, which is mandatory if the spend is more than 50 lakhs. For this committee, public company should have 3 directors if independent director is required for that company. Otherwise, 2 are enough. Private company, anyway we will have only 2 minimum, then I will have 2 directors. Independent director concept is not there for private company. Foreign company means you should have the person authorized representative under section 380. Next, few other small amendments which are important. During CSR activity, if you created a capital asset like hospital or you purchased the hospital, that should be registered either under a name of section 8 company or a public authority or a trust. Public authority means corporation, etc., or registered trust, or the beneficiaries for whom we are building the hospital or school. Next, which profit you have to take, PAT or PBT? PBT. Can multiple companies come together and do a project? Yes. If holding company is following CSR, should subsidiary follow? No. Apply limits for them separately. For other activities, administrative work, CSR expense can be maximum 5% of the CSR expense can be admin expense. Sir, where to spend? First, where you should not spend is important. Employee and their family. You can't spend outside India. You can't give donation to political parties, one-off events, marathons or awards or charity or any employee statutory contribution is not possible. But if you are doing charity, you want to donate. Donate to whom? Section 8 company who has a track record of 3 years of doing similar objects. Schedule 7, we have our story, but remember some key points: malnutrition, poverty, education, art, culture, then sports, Olympic sports, recognized sports, public library, then research for contribution for research, natural disaster, Har Ghar Tiranga, COVID, rehabilitation center, all these we can, let's say restoration of sites, all of that you can spend. Okay. Next, last 3 points in CSR. First time when CSR is applicable for the company, they have to register in CSR 1 for CSR registration. Second, CSR 2, you have to file AOC 4. Along with AOC 4, you have to file CSR 2 on yearly basis, giving details of all updates that happens. So while doing CSR, I didn't plan, sir, but I earned some profits. Those profits you also spend for CSR. If you are not spending for CSR objects, then within 6 months you will transfer to fund under schedule 7. Lastly, impact assessment. For whom it is eligible, if the CSR spend is more than or equal to 10 crores in the last 3 years, then I have to do an impact assessment. Then assessment is for whom? Not for all the projects. If there is any project in the past which is more than or equal to 1 crore, which should also be completed, and that completion should have been 1 year over. I will again repeat, project over, completed, it should have been 1 year since the date of completion, and project is 1 crore or more. Then only I will do impact assessment, then only I can see the impact. For that, one professional is doing a independent agency, can be CA, can be not CA also. For him, the limit that they have given is 2% of CSR or 50 lakhs, whichever is higher. In that 5%, I will include 2%. That's it. Revision about CSR and a whole chapter following, guys. Okay. Perfect. Let's revise section numbers of this chapter. 128, books of accounts. 129, preparation of financial statements. 2 subsection 40, loudly. 129A, periodical FS. 130, reopening of books. 131, voluntary reopening. 132, NFRA. 133, accounting standards. 134, signing off board's report. 135, CSR. 136, circulation of FS to members before AGM. 137, circulation to members after AGM. 138, internal audit. That's about it, guys. Those who are watching recording, for remembering section numbers, write it 3 times now itself. At least half of those will remember. That's it, guys. Thank you. Yeah. So let's start revising audit and auditors with our Gen Z notes in less than 10 minutes. I gave you a few minutes time. We finished auditors today and yesterday. You went through the notes. Now we will revise together. Okay. We will start off in the same order in which the class was taken for you, guys. 142 talks about remuneration of auditor. Simple. For statutory audit, audit fee could be inclusive or exclusive of travel, food and other expenses. Shareholder will decide this by passing a ordinary resolution. First auditor, board of director will decide the remuneration. That's all to remember for exam from section 142. Next we went to 145. 145 talks about auditor has to sign the audit report. If it's a firm, any partner can sign, and he will give his observations and reservations in the report can be read in the AGM. Important points, he will read it. Next we saw 146. Auditor he shall attend the AGM, and he also has right to speak and be heard in the AGM. Right to speak, he will speak. Heard means if somebody tells a questions, he can answer. If it's not possible, authorized representative, instead of him, some other CA will go and attend. This is 146. Then we went to 144. In 144, we saw one set of people, A, cannot provide the services to another set, group B, if you are the statutory auditor. So 144, auditor not to render certain services. So who is that one set of people? If you are the auditor, that means if I am the auditor, myself and my parent, subsidiary, associate, and some other entity in which my firm has significant influence or control, and any other trademark or brand name of my firm, we can't provide services under 144 to the company, then companies holding and companies subsidiary. What are the services? We have a mnemonic, this iCube, I am dupe. So basically investment advisory, investment banking, internal audit. AS, actuarial services. MS, management services. DS, design and implementation of financial information system. Outsource financial services. Other services. BS, bookkeeping services. Are you following, guys? Clear. Then we went to next section, 141, eligibility. Who is eligible? This we split the section into two parts: qualification, disqualification. Under qualification we have only one concept. Under disqualification we have four parts. Under qualification, who can be an auditor? CA as per ICA Act, or a firm where majority of CAs are practicing in India and the firm includes LLP. Then disqualification, first part out of the four parts we saw. In first, you with the company, and the company is holding, company is subsidiary of the holding, and very important, subsidiary of the associate. With this group you cannot have business relationship, but what is allowed is professional service as per ICA Act, like tax audit, GST audit, and commercial transactions at arm's length price, it's allowed. Examples: hotel, airline, telecom, etc. This was the first part. Second, then next we saw employee and officer of the company and their employees and partners. So employee, officer, their employee and partner not allowed. Then any person who is a director in the company can't be the auditor. Any person whose relative is the director or KMP in the company, then you cannot be the auditor of the company. Body corporate not allowed. LLP is allowed. Okay, fine. Next one. Third part we saw that limits for every partner, individual and relative. So individual's partner, individual's relative with the whole group. Here who's the whole group? First let's look at the group. Company, company's holding, company's subsidiary, company's associate, and subsidiary of holding. With this entire group, guarantee and security is maximum 1 lakh. Indebtedness maximum 5 lakhs. Security not for individual and partner, only for relative up to 1 lakh of face value. If it crosses, rectify within 60 days. Corrective action will be taken. Now we spoke about relative. Relative is defined in two subsection 77. In that we saw individual, first your close relatives, parents, kids, brother, sister, and spouse. Then everywhere stepfather, stepmother, everything will come. Brother, sister, step will not come in two places. You can't have step spouse, so step is not. That is one, logically not possible. Second is stepdaughter is not included. This you will remember, I don't have to teach you again also. And son-in-law and daughter-in-law. Next, then we moved on to fourth disqualification. If you are doing the following services, you can't be an auditor. 144 services, auditor not to render these services. No COP. If you have COP, if you don't have COP, you can't be an auditor. That means you are in industry. Maximum limit is 20, but this does not include 1% company, dormant, small company, private less than 100 crores, and convicted for fraud means 10 years, not possible. Are you able to recollect, guys? Then we went to 140. 140 talks about resignation and removal. Resignation is by myself. Removal, 3 cases. I want you all to be loud, guys. Resignation. Once you resign, intimate company ROC within 30 days. Inform edit 3. If it's government company, intimate even C&AG within the same 30 days. Next, board is removing. Board wants to remove you. They will first pass board resolution and intimate central government within 30 days. Once the central government order comes, within the next 60 days, you have to pass a special resolution and give opportunity of being heard. That's it. Resignation over, removal by board over. Next, removal by tribunal. Tribunal can simply pass an order. If order is passed, then auditor once removed because of fraud cannot be audited for next 5 years. But in this, tribunal can do it by themselves or an application given by somebody else. But if central government gives an application to tribunal, then they have to give the order itself within 15 days. Are you following, guys? Okay. Next, removal by shareholders. Removal by shareholders. This is 140 right along with section 115. Special notice. A special notice will be given. Then if special notice is given, then in general meeting, shareholder can pass special resolution to remove the auditor by giving opportunity of being heard. This you will read along with special notice. Special notice, just to revise the provisions, it's 1% of paid up share capital or 5 lakhs of paid up share capital, whichever is less. In meetings chapter you will see that. Next, go to 139, 5% of total voting power. Yeah, 1% of voting power and 5 lakhs. Anyway, we are not discussing this part, so I will just leave all of this because this comes in special notice. Meetings, Gen notes, I will discuss special notice. Auditors, you revise, that's it. Leave that part. Come to 139, appointment of auditors. We saw this also yesterday. In simple, first auditor and subsequent auditor for each government and non-government. Simple. First auditor for other company within, board will appoint within 30 days. I will just connect here so you can see. Board appoints within 30 days. If board fails, shareholder will appoint within the next 60 days. But actually you should write 90 days from incorporation. So that 90 includes 30 days of board. Okay, next, government company. C&AG will be within the first 60 days. After that, same as above. Board within the next 30 days. If board fails, shareholder within the next 60 days. Are you able to follow, guys? Why actually it's 30 plus 60? Both put together is 90. To have an EGM, you need 90 days in section 100. Okay. Next, subsequent auditor, other company and government company. For other company, once you appoint, he has one term for 5 years and every year we will ratify. That means from end of first AGM to end of sixth AGM, it keeps going on. For government company, in simple, forget the complications, he will be appointed every AGM. AGM I will keep appointing every year, but the provisions is within 180 days from the commencement of financial year, and he will hold office till the end of AGM of that financial year. Are you all able to follow, guys? Are you able to recollect this? Okay. Then if there is a casual vacancy, usually if there is casual vacancy, board will fill within. But if the casual vacancy is because of resignation, then shareholders will fill within 3 months. Why 3 months? Why 3 months to fill? Because 3 months is 90 days. 90 days you need time to keep EGM. Okay. Next, the government. If it's a government company, C&AG will appoint within 30 days. If they fail, board within the next 30 days. What about government company resignation? Still same. Resignation split comes only for casual vacancy of other companies. For government company, only one provision. No members in 3 months. Government company resigned. C&AG, 30 days. If they fail, board within next 30 days. Total reconstruction of firm. That means all the partners leaving, new partners coming. Is this casual vacancy? Yes. Not appointing the auditor itself. Is this casual vacancy? No. Not appointing is not equal to casual vacancy. Then in the same section we saw rotation. Rotation is basically individual will be for 1 term of 5 years, firm will be for 2 terms of 5 years, total is 10 years. After your duration gets over, you will not be audited for next 5 years is the cooling off period. For whom it's applicable? Not for all companies, only for listed companies or unlisted public company with more than or equal to 10 crores of paid up share capital, or unlisted private company more than or equal to 50 crores of paid up share capital. Borrowings or debt more than or equal to 50 crores for unlisted public or unlisted private. Not allowed, meaning within this cooling period you can't try to find loopholes like using brand name or same network firm or common partners or old partner and new firm. These are not allowed. We discussed detailed in class with logic, all of that. Okay. Members may propose, members can also tell, members of the company will tell the auditor that within your firm, you please rotate the partners. Don't send the same face every year, I'm getting bored. Okay. Next, last section we saw, last important section, 143 talks about rights and duties of the auditor. There is one set of points for rights. Duties has 4 sets. Under rights, what are the key points? He has right to inspect books of accounts under section 128 and books of holding subsidiary associate. Then he has right to get all information and explanation, right to visit the branch. Then 142, right to receive remuneration. 145, right to sign. And 146, not attend. It is right to speak at the meeting. No, sorry. This is right to get notice. 145 is also right to speak. So right to sign, right to speak in AGM, and also right to receive notice for AGM. That is 146. Then duties, we saw there were 4 types of duties. One is enquiries made by auditor, fraud reporting, government, other general duties. Enquiries, 6 enquiries mandatory auditor has to do. Enquiries about whether personal expenses are charged to revenue, whether investments are sold at a loss, whether entries are just merely represented by book entries, whether shares are allotted for cash, loans and advance, 2 points. Whether the loans and advance security is prejudicial to members and company, and loans and advance shown as deposits. This also we saw. Then next, fraud reporting, simple. If the auditor during his course identifies fraud more than or equal to 1 crore, then within 2 days intimate board and audit committee. Then they should reply within 45 days. Whether they reply or not, within the next 15 days you will inform central government. So they replied within 20 days itself. Then from that point, within the next 15 days you will intimate central government. Less than 1 crore, government is saying I don't care. So just 2 days you intimate board or audit committee. Next, for government company, third duty, simple. Once C&AG, you file the report to C&AG, audit report is given to C&AG, then within the next 60 days, if there is a need, C&AG can order for test audit or supplementary audit. Are you following, guys? Okay. Other reporting duties, some key points, list of points are there. Key ones, if branch auditor means you will rely on the work of other auditor following SA 600. CARO reporting mandatory. Then 133, accounting standards complaint or deviation you have to see. Then give report on adverse remarks, SA 700 series you follow their saying. Managerial remuneration, you give your comments, is it computed properly? Then director's disqualification, just like auditor's disqualification I have to check. And 125, IEPF. Is IEPF transfer done properly? Audit trail is the new amendment we have. And 123, declaration of dividend is correctly done or wrong. New point we saw here was the company cannot act as an intermediate to receive or transfer funds to an ultimate beneficiary. Are you able to revise, guys? 147 talks about penalty, important penalty. That's why it's even entered our Gen Z notes. Auditor penalty. Generally, if you make a mistake in the provisions of Companies Act for audit chapter, 25,000 minimum, maximum 5 lakhs or 4 times remuneration, whichever is less. I am an auditor, I will do fraud and apply intentionally. If you do 1 year imprisonment, 50,000 to 25 lakhs, which is 8 times remuneration, whichever is less. Additional liability, unlimited civil and criminal liability. Unlimited means all the damages you have to pay, and arrested along with the partners will join you for criminal and civil, but partners will not come if they were not involved or they were not doing the fraud. It's not intentional by them, then criminal is exempt for them. This 147. Then everyone's favorite section, 148, cost audit. In cost audit, key points, they classify into applicability into regulated sector and non-regulated sector. Regulated includes like petroleum, drug, electricity. Non-regulated, tea, coffee, cement, defense, etc. Overall, for regulated, overall turnover should cross 50 crores in previous financial year and individually 25 crores. For non-regulated sector, overall should cross 100 crores, individual 35 crores or more. If yes, then the report will be, sorry, okay, we'll come to that report. This cost audit not applicable for 3 people. SEZ, revenue from exports more than or equal to 75% and captive consumption, no need. Okay. Then appointment, he will be appointed within 6 months from the start of this financial year, that or 6 months from end of previous financial year. If audit committee is there, you will take their recommendation. Report within 6 months from end of financial year. That means appoint within 6 months from start of the year, report within 6 months from end of financial year. Once you give the report, you have to forward to central government within. How to remove him? Simply pass a board resolution. All the other provisions of penalty, disqualification applicable to an auditor is also applicable to a cost auditor and company secretary. That's about it, guys. Thank you. Hoping you understood. Yeah.
Start off with the expected question marathon for the last chapter in Companies Act, which is our foreign company. I always keep telling foreign company is something you have to learn in the ending because it has a lot of connections with other chapters, and if you learn it in the end, it becomes very easy. The first thing always is the definition. For any attempt, I will always have this in my expected question list, which is your definition of foreign company. Even though it came in one of the latest attempts, it's very important to understand the whole chapter by itself. So the first thing, if you look at this, what is a foreign company, sir? Foreign company is a company which is incorporated outside India. Uber, Apple, incorporated outside India, but they have a place of business in India. Uber is having its operations in India. Apple is having its operations in India. So it has a place of business in India. The definition also reads, foreign company means a company incorporated outside India and has a place of business in India by itself or through an agent. Again, let me read the definition. Foreign company means a company incorporated outside India and has a place of business in India by itself or through an agent. Either physically or through electronic mode. Either physically or through electronic mode. They write only once, but we split it this way. So how I will understand the definition? Foreign company means a company incorporated outside India, has a place of business in India by itself through physical mode. Now read like this. Citibank is incorporated outside India, has place of business in India by itself physically. Citibank satisfied. Next, let's take Pixel website. Google Pixel does not have offline stores in India, but in its website, directly Google website, you can buy the phone which they will deliver to you. So Google Pixel is a company incorporated outside India, has a place of business in India, by itself has its own website through electronic mode. Are you getting it? Next, KFC is a foreign company incorporated outside India, having place of business in India through an agent physically through KFC franchise. Your neighbors or your friends, somebody will take KFC franchise. So if KFC has the own franchise, it will come under physically by itself. But if KFC is having through franchise of others, it comes under physically. KFC, McDonald's, all that will come under this. Foreign company incorporated outside India, Amazon in US, place of business in India through an agent through electronic mode. So not Amazon, somebody in US selling some goods to me, they are selling those goods to me through Amazon. Somebody in China selling some goods to me through Alibaba website. So somebody in China is selling incorporated outside India, having a place of business in India. They are having a place of business in India through agent, through electronic mode, Amazon or Alibaba. So this is how you have to understand this definition. Very, very important. The minute you understand this definition of what is a foreign company, next question only comes. They will ask you, foreign company has, is this a foreign company, not a foreign company or not? So the next set over here, foreign company, whatever conclusion is possible in exam, it cannot cross these three. First, incorporated outside India, place of business also outside India. That means they don't have any place of business in India. They have no work in India. For example, you can take currently as of now Tesla. So if you take Tesla, it's incorporated in US, having place of business in US only and other countries. It's not having place of business in India. So Tesla has nothing to do with the Indian Companies Act. So these kind of companies which are incorporated outside India, place of business outside India, like Tesla, nothing to do with Indian Companies Act. These companies we should not worry. Following, guys. Second, incorporated outside India and has a place of business in India in any of these four scenarios by itself through agent, physical or electronic mode, then this type of companies will follow the chapter of foreign company. They will follow the chapter of foreign company, which is section 379 to 393. Okay. So these companies will follow basically 379 to 393. Whatever is there in this chapter, limitedly if they follow, it's enough. Like what companies? Citibank, Pixel website, KFC, Amazon, because they're having some kind of operations in India, Indian people are affected. Third, incorporated outside India only, sir. outside India only. Place of business in India only, sir. But 50% or more of the paid up share capital, including equity and preference, 50% or more of the paid up share capital, including equity and preference, 50% or more of the paid up share capital, including equity and preference, is held by Indian citizen or a company incorporated in India. Are you following, guys? So it is a foreign company when it started, but today majority of the companies owned and the decisions are taken in India. So in this third case, this company will follow from section 1 to section 470, full Companies Act they will follow in the third case as if it's a company incorporated in India itself. Are you following, guys? So in first case, incorporated outside India, place of business outside India, like Tesla, nothing to do. In second case, incorporated outside India, place of business in India, then these points will come. Third, incorporated outside India, place of business in India, and 50% or more of the paid up share capital is held by Indian citizen or a company incorporated in India. Then it is a company as if it is incorporated in India, deemed Indian company. Full act they have to follow, guys. That is what we have over here. So let me read this over here. Foreign company means a company or body corporate incorporated outside India and has a place of business in India by itself or through an agent, physically or through electronic mode. I gave examples for that also in the book. Applicability of this chapter, look at this. For a normal foreign company, this chapter is applicable, which I told over here. For other foreign companies, few foreign companies have to follow this chapter and other chapters of the Companies Act as if it's a company incorporated fully in India. If not less than 50% of the paid up share capital, equity and preference. In associate, we take convertible preference. Here we take equity and preference of a foreign company incorporated outside India is held by one or more citizens in India or one or more companies or body corporate Indian incorporated in India or a combination of above. So this itself has been a question in the past few attempts. Either Tandi they haven't asked, guys. They have only asked around this or little bit around this. So this itself covers half the syllabus of this chapter. So first, what is a deemed Indian company? A deemed Indian company is a company in which paid up share capital of 50% or more is held by Indian citizens or companies incorporated in India or a combination of both. Can repeat again for September. Can repeat again. September 25 they asked that only. Then they asked what is foreign company earlier. So this time what I feel, you go through by yourself, guys. This RTP Jan 26 question number 14 also I gave you. Please go through that question where they'll give you 3-4 scenarios. And they will ask you, it's a foreign company, deemed Indian company. This is a company in which no provisions they have to follow. So in previous attempts, they asked different definitions. This time they can mix everything and ask at once. And for the whole mixture, the third point is also important. Circular clarification for what is meant by electronic mode. Very important under section 379. Why, sir? Because here today, because of technology, when they use the word here electronic mode includes what, sir? I'm doing business through WhatsApp included. I'm doing business through email included. In some dark web, I'm doing one transaction included. So for that, government told, okay, let me give one circular. What do you mean by electronic mode? So anything covered over here is coming under electronic mode. Bitcoin transaction, no foreign company will get covered. So this definition of what is electronic mode is very important. Are you all with me, guys? So let's see what they are saying for electronic mode. I will just read through these points and give you some examples so you can connect. The first one, they are saying B2B and B2C transactions between two business and business to a consumer. Data interchange. For example, lot of server data interchange. Your Google Photos, you will keep it here, but server will be in US. Or a lot of business transactions, banking transactions, and other digital supply transactions. In GST, you have supply. So such kind of digital supply across the world. For example, I'm providing class from here in Chennai. I have actually students who are buying it from Dubai, buying it from Middle East. They will come to India and write the exam later. That becomes a digital supply transaction. What if there's some academy in Dubai and you're buying class from them? You buy a lot of AI courses from abroad, correct? So data interchange example, PO raising, claims for insurance or payment remittances, forex transfers, all those things. Offering to accept deposits or inviting deposits for subscription in securities in India from citizens in India. Sorry, what they're saying is, for example, let's say Apple in US is issuing deposits to collect money from people in India or from citizens in India. Are you getting it, guys? Foreign entities collecting money from or borrowing from people in India. Financial settlements, web-based marketing, Meta ads, Google ads, advisory consult. For example, Goat movie of Vijay, they did the de-aging from some US company. Okay, transaction services, database services and products, supply chain management. For example, Meta Ads, BCG Consulting, then cloud server for database, anything online, guys. Online service such as telemarketing, guys. You get a lot of ads, WhatsApp ads, telecommuting, telemedicine, online therapy, online consultation, education. You don't need a lot of AI courses abroad. You have this Harvard MBA distance education courses, information research, online therapy, online international courses, all these things. ACCA is one classic example. ACCA nowadays many students are doing that. So ACCA is an international course. CMA US, CPA, so many other. Okay, so all related data communication service, whether by email, mobile service or social media, whether conducted by email, mobile device, social media, cloud computing, document management, voice or transmission or otherwise, whatever you do over here, we call it and put it under electronic mode, guys. Here they are saying securities offered or listing of securities of IFSC is not part of electronic mode. So something which is there in IFSC, we will not call it as part of electronic mode. Okay, ignore this one dabba. Some AI is just summarizing the whole law material. Is taking time. By the time it finishes, I'll finish off this foreign company and proceed, guys. Next, so we are done with circular clarification. So these three are the important ones, not only for this attempt. Whichever attempt you are going to write the exam out for your juniors, tell them never to skip these three. Next, 381 and 384, filing of accounts and annual return for a foreign company, important. Okay, what is this 381 and 384, guys? Let me explain that. So first is 381. Again, I told you I'll be putting another video called 4 marks in 4 minutes, where all the filing of financial statements and annual returns of 3 cases, foreign company, normal company, LLP, I will summarize and put in one video of 6 minutes. So here I'll be talking only about foreign company. So a foreign company also has to file financial statements and annual return. So filing of annual financial statements only will come in section 381. Annual return will come in section 380. Correct? It will come in section 384. Sorry, it will be coming in. Yeah, it will be coming in 384. Okay, let me repeat again, guys. Filing of financial statement like section 137, filing of FS to AGM, that is this 381, and annual return, our 92 is 384. So how this will come? Procedure to be followed for filing with registrar is very simple. Every company under this chapter shall within 6 months from end of the financial year will file to ROC. Even in LLP, they will file within 6 months declaration of solvency. Here also within 6 months. So LLP also I'll file within 6 months declaration of solvency. Here also I'll file within 6 months. In FC3, along with FS, place of business established by foreign company in India and on the date of balance sheet. Here, 3 things are key. What are the 3 attachments I'll be giving, guys? They are saying statement of related party transactions. Very unique. I have to give related party transactions. Basically, when you are in India, what were the related party transactions you did? Repatriation of profits. How much of the profits in India you took it back? So repatriation of profits. Whatever profits you earned in India, how much you took and went back? Statement of transfer of funds, including dividend. The money that you earned here, how much you took and went back to your home country. So what are the 3 points? So basically, when you're filing FS in 381 to ROC within 6 months from the end of financial year for a foreign company, along with the FS, 3 attachments: related party transactions, repatriation of profits, transfer of funds. Are you following, guys? Related party transactions, repatriation of profits and transfer of funds, guys. Sometimes if 6 months is not enough, you can ask for extra time. Maximum time they will be giving you for this is 3 months. Then how will I earn money as a CA? So what you can do, every foreign company in relation to Indian business operations, not the whole company, not whole Uber in relation to Indian operations will get its books audited by a CA or firm in practice, guys. So the whole chapter of auditors will be applicable over here. Appointment, remuneration, all of that. So what about 384? 384 will come over here. So what is 384 saying? Provisions applicable with certain exceptions or modifications. So what they are saying that annual return is there, no, section 92. That same thing is applicable over here, but company will file annual return within 60 days. In normal company, it is within 60 days from end of AGM. In normal company, it is 60 days from end of AGM. Here, since we don't have an AGM, from end of financial year in form FC4. So therefore, in above, it is within 6 months from end of financial year, you will file FS. Over here, within 60 days from the end of financial year, you will file FC4, annual return. Rest will be same, guys. With this, filing is done. Next, I'll come back to amendment in the last 392 and 393 important sections. So if I come to 392 and 393, 392 is punishment for contravention. If you don't follow provisions in this chapter, the company which is supposed to follow, if I don't follow the provisions, normally penalty you will not ask, no sir, why are you asking us to read? No, simple. Here, normally if it's a continuing offense, no, it will be 500 per day or 5000 per day. I checked this 3 times and even I got shocked when I read this for the first time, guys. In case of continuing offense, it is 50,000 rupees per day during which the default continues. Rest is fine. Company, fine on defaulting foreign company, not less than 1 lakh up to 3 lakhs one time. Officer, minimum 25,000, maximum 5 lakhs. Learn these things. But what is key? What is key over here? Continuing offense means 50,000 rupees per day. Why sir, so much dollars? When we are going there, they are taking no. So when you come here and make punishment, take that 50,000 rupees per day. So this can come in MCQ. Foreign company doing contravention. How much per day? 500 per day, 5,000 per day, 50,000 per day, 5 lakhs per day. Students will either put 500 or 5,000. Gone. If you didn't read. Now you are watching this. No. If it comes in the exam, 2 marks in the pocket. Are you following, guys? Next is section 393. A beautiful section. Let me explain this with diagram. So usually what's happening in section 393? Company's failure to comply with the provisions of this chapter not affecting validity of contracts. One of the most important provision in this chapter in section 380 is the minute a foreign company comes to India, they have to file an FC1 that they are entering India within 30 days. So when a foreign company comes to India, I will show this next. Within 30 days, they have to file to ROC that we are coming to India and they have to appoint one authorized agent. If they don't do that and if they don't follow provisions of Companies Act, they are saying all the contracts are still valid. Meaning, foreign company can sue third party can sue foreign company normally if everything is fine. But if company is not following the provisions, then foreign company cannot sue third party, but third party can sue the foreign company. This you would have seen somewhere in Foundation Partnership Act, where the firm is not registered. Then consequence of non-registration, third party can sue the firm cannot sue third party. Same thing over here is 393. Company cannot sue third party can sue company. That's what they're saying over here. Look at this. Where a foreign company fails to comply with the provisions, it will not affect rights of third parties against the company. However, it does affect the rights of company to sue against the third party. Next, it will not affect validity of any transactions entered when sued by third party. However, company cannot sue the third party and even claim for set off. Set off also is not there. For example, if foreign company to third party, I have to receive 300. These guys should pay 200. You can't set off. That means foreign company should pay this 200, but they can't receive this 300. That set off also cannot be done, just like partnership, guys. So with this, we are also done with 392 and 393. We are also done with next is dating of prospectus, section 387. Contents of prospectus is important. Let me go to that. So in section 387, yeah, dating of prospectus. Dating is not the dating that you have in mind, guys. Okay, now dating is what date I will keep. So no person can issue or circulate a prospectus of foreign company incorporated to be incorporated with a place of business without a place of business unless the prospectus is dated and signed. That date should be put and it should be signed. And they're also saying the prospectus shall contain the following details. Contents of prospectus like section 26 of Companies Act, details of MOA and AOA, the instrument defining the constitution of company. In their country, they may not call it MOA, AOA, they might call it some charter, that document. Act under which the company is enacted. Companies Act, Australia, UK, which country. Address in India where above documents are available. I can't go to Germany and find it. In India, where is the document? Where can I find? If the same is in some German language, translate to English. So for example, if it's a German company, I have to what to say, what is their German charter, then under which act it is there, then all these documents translate to in English and where it's available in English, and the date and country where the company is incorporated in Germany in 1975. Where the company has established a place of business in India, and so what is the principal place of business? So if you have a place of business in India, what's the principal place of business? And then they're saying above point 1, 2, 3 ABC instrument MOAOA, which act companies enacted, address of the company, which act in initial documents like MOAOA and address is not applicable, is not needed and applicable. Then when it's not applicable, guys, where 2 years is completed since the incorporation of foreign company incorporated 2 years over. Let me repeat, foreign company incorporated 2 years over. Then in prospectus, if you give D and E, it is sufficient. ABC is not what required, guys. Are you following? With this, we are also done with section 387. Last, we have only one thing. Section 381, amendment in RTP, FC1 to be attached. Let me go over here. I will quickly brief that provision, then only you can understand the amendment better. Section 380, 380, let me explain that. So last section, section 380 says, let me quickly run through all the provisions and then I will tell you what the amendment is. Amendment is very simple. In section 380, when a foreign company is entering India, place of business, then within the first 30 days of establishment of place of business in India, they have to deliver to ROC the following documents in FC1. So within 30 days, I have to file to ROC the following documents. What documents? The MOAOA of the company, certified copy, or if the charter of the company, if it's not in English, a certified copy translated to English. Basically the same thing we saw in contents. Registered office in India. What is the registered office? Then some KYC documents like list of directors, secretary, personal name, their spouse, former name, date of birth, residential address, nationality, passport details, country of issue, other passport. If they have more than one passports, they allow in some countries. PAN and occupation, DIN and SIN, membership number, secretary, all these things about the foreign company, collect all their data. They're coming to India, no? And this will be attached along with FC1. Attested copy. RBI has to attest it, because how ROC will check all this? RBI is a superior body in India. RBI will approve this. Earlier we used to file it to jurisdiction of Delhi. Now they are saying file it online to a place called Central Registration Center. So before we used to have something called New Delhi, guys. We used to have New Delhi. So instead of New Delhi, you will put Central Registration Center. Let me repeat, Central Registration Center will come there. Central Registration Center. And approval from authorized representatives also needed to establish a place of business or declaration that no approval is needed. So the authorized person will collect all this data and file FC1 to Central Registration Center. Then some other details like declaration that none of the directors or authorized agents have ever been convicted by the company. So they never have any conviction issues. And in the previously they came to India and escaped. Have they previously opened and closed business in India? No. Yes, no, yes, those details. Full address of the company and name of the person who is the authorized person. So full address and details of authorized person, all this will be submitted in form FC1. If any of these details are changing, then you will resubmit this in form FC2 to the ROC. With this, we are done with our Companies Act expected question. If you see, we are fully done, guys. We are fully done with our Companies Act expected questions, guys. Now, like I said, we'll be going on to the other laws in the same order. We'll be starting off with General Clause Act, and then we'll be going on to LLP, interpretation of statutes, and then we'll be going on to FEMA, guys. This will be the flow. Maybe this all put together, roughly another 1.5 hour. Other laws, we will be finishing it. Other laws carries 40 marks. So if you guys want to take a break, this live, if you're watching Premiere, it will keep going. Those who are watching recording, it's fine. If you want to take a break, maybe just pause it, refresh, again come back and you watch it, guys, because the video is going to be there. But again, I'm again trying to push you. If you finish everything, recollect all the provisions and sleep tonight, the kind of confidence you get will be amazing. So keep studying, guys. Let me move on to other laws now. Let's start off with the expected question marathon for our General Clauses Act. If you look at General Clauses Act, attempt on attempt, consistently it keeps giving us 8 marks. Let me start off with definitions. First is document definition. So if I go to definition of document over here, guys, This you have to memorize. There is no other option. And in exam, if this comes, this will come for a 4-mark question. They will simply ask in 3 words, define document, 4 marks or 3 marks. Okay. So they are saying document shall include, I have just broken down the definition on our material, shall include any matter written, expressed or described upon any substance. So any substance means it can be on my hand, it can be on a paper, it can be projector, it can be your head, it can be wall, it can be on the beach sand. On any substance the matter is written or expressed or described. How is this written or expressed or described? Am I using pen? They are saying it can be expressed or described or written by using letters, figures or marks. Letters means I'm using alphabets or any figures 1, 2, 3, 4 or any kind of symbols, marks, or by more than one or of those means. Combination of letters, figures or marks. Now why am I writing something? Why am I writing something or expressing something or describing something using letters, figures or marks? I am doing this to communicate something. So it is intended to be used or maybe used for the purpose of recording that matter. I am writing something somewhere for recording that. So if you look at the definition of document, document shall include, it shall include basically anything scribbled or written anywhere, it's called a document. So document shall include anything written, expressed or described by means of letters, figures or marks or more than one of those means, which is intended for the purpose for recording that matter. That's why they are saying it shall include a book, file, painting, inscription and even computer files are document, but it does not include Indian currency notes. Important for MCQ, document does not include Indian currency notes. The next definition we have is affidavit, good faith. So if I go back over here to affidavit and good faith, let me go to affidavit first. Now again, affidavit is a definition which has come for 3 marks in the past, guys. Basically you have seen these movies, in movies that villain or some evidence will come and tell, I promise on Bhagavad Gita, Bible, Quran that whatever I'm telling is true and fair. That is only affidavit, guys. But how that is defined, affidavit with its grammatical variation and cognate expression, which means sometimes they will tell seriously in court, sometimes they will crying and tell, sometimes they will tell in Hindi, sometimes they will tell in Urdu, sometimes they will tell in Tamil. So with its grammatical variation and cognate expression means any grammatical variation, any language and cognate expression, whatever you tell, it shall include affirmation and declaration. Any affirmation and declaration in the case of persons by law allowed to affirm. So not everybody can do in the court. Whomever court is allowing, they can do. They are doing this or declare instead of swearing. That's all definition, guys. So basically any person in any body language, grammatical variation or cognate expression, whatever expression I'm talking, shall include affirmation or declaration by the person allowed to affirm, guys. And in this act, the definition of affidavit comes na write same thing. Affidavit of oath comes na write the same thing. Affidavit swear comes na write the same thing. What you have to do, if oath is coming instead of affidavit, you write oath. If swear is coming instead of affidavit, you will write here swear. Just the first letter will change and everything else will be the same, guys. The next definition we saw is good faith. So if I go to good faith, a thing shall be deemed to be done in good faith. This definition is not like Sale of Goods Act, because in Sale of Goods Act or in Contract Act they say let the buyer beware, caveat emptor. That means if I am buying something with my negligence, without seeing, I wanted to buy a blue pen but I bought a red pen, it's my fault, I will be punished. In this act it's not like that. In good faith, in General Clause Act, they are saying even if I do it negligently, even if I do it carelessly, it's all right. So they are saying a thing shall be deemed to be done in good faith, whether in fact it is done honestly, whether it is done negligently or not. So whether I am careless or not, still I will call this as good faith, guys. So again, remember this definition for 3 marks, very important for 3 marks. A thing shall be deemed to be done in good faith, whether in fact it's done honestly, negligently or not. But then they are also saying, as per Indian Contract Act, a honest purchase made carelessly without making proper inquiry cannot be said to have been done in good faith, and therefore it will not convey good title. Therefore, in reality, in practicality, we will follow which act? We will follow only Indian Contract Act or Sale of Goods Act. Therefore, if this comes in exam, write both the definitions, and if a case study comes, you will answer based on Indian Contract Act or Sale of Goods Act, guys. But you will write as per General Clause Act, answer will be different. So give that both perceptions answer if this comes in the exam. Next, we are done with affidavit, done with good faith. Person or month. This is simple, guys. So person or month is simple. So if I go to person, like how in Income Tax Act, person includes so many people. Over here, person includes only a few people. Person shall include, it shall include company, association, body of individuals, whether incorporated or not. That's it. Not like Income Tax Act, so many people. Here the word person includes whom all, guys? Company, association, body of individuals, whether incorporated or not. Therefore, company, association of persons and body of individuals are incorporated or not, guys. That's all. This is definition of person. Next in definition, what we have is month. Definition of month, if you see. Yeah. Why I'm saying month? Earlier they used to ask financial year. So let me quickly finish financial year. What is financial year? Financial year means the year which is commencing on the 1st of April. That's all. Calendar year means what? Which is starting from Jan to December. So financial year, what you already know, April to December. Calendar year, Jan to December. What is month, sir? Month is basically month reckoned as per British calendar. That means this is not, every month is not 30 days over here. Month is as per British. Jan is 31 days, Feb is 28, March is 31. That month you should keep in mind. Okay. Next, serving of post and object of General Clause Act. So if I go to the object of General Clause Act first, 4 points, 4 marks. Easy to ask in exam. Object of General Clause Act, I will read the side headings and explain to you. Shorten the language of central acts. Because a lot of definitions being used here will be used in across many acts. Instead of reusing the same definition of good faith or affidavit or document in all those acts. For example, document is not defined in Companies Act, it's defined over here. So instead of defining in every act where document is used, I will simply use it over here to shorten the language of other acts. Uniformity of expression of central acts. Where a term like document is used in multiple acts, it should convey the same meaning. Therefore, the meaning is given in General Clause Act. Next, to state explicitly certain convenience rules for construction and interpretation, to avoid confusion between central acts, guys, and to guard against slips and oversight by importing. Those days, what used to happen? All the acts that we pass, no, physically we used to print and send to Parliament. Parliament will sign, President will sign. That time, what if some paper gets missed out, or what if some concept gets missed out? So to avoid general concepts being missed out, I have a separate general act. So to guard against slips and oversight by importing of every act into certain common clauses which will be coming here. So otherwise, sought to be inserted in every central act, sometimes it may be missed out. This is what do you mean? Object of General Clause Act. Next, if I go to post, service of post, if I go, guys, yeah, service of post, if you see. So if you come to meaning of service by post in different acts, for example, in Companies Act and every other act, they will tell sometimes certain documents have to be sent to the party. It has to be served by post. They will tell send by registered post. So what do you mean by registered post? This act is saying where any legislation or regulation requires any document to be served by post, then unless a different intention appears, it shall be served as following: properly addressed. So wherever they use the word service by post or registered post, first it should be properly addressed to the person. That person's address should be there. It should be prepaid. That means stamp should be there, and it should be posted by registered post. That means in any act, if they use the word serve by post, it should be properly addressed, it should be stamped, and it should be sent by registered post, guys. Next, if it doesn't come in this way, that means it's not properly served to you. Next to what they are saying, some case laws based on this where past exam questions are coming. In one case, they have asked you to send by registered post. You have to send by registered post only. In some other case, they asked you to send by registered post acknowledgement due. If they asked you to send by registered post acknowledgement due, you have to send by registered post acknowledgement due and not by registered. That means what, guys? If it is registered post acknowledgement due, means sometimes when you get the post, they will ask you to sign the courier. Sign, otherwise they won't give it to you. So that is only called registered post acknowledgement due. So where the act is saying send by registered post acknowledgement due, it has to be sent by that. You cannot send by registered post. If you send in the other one, then that is not tenable. That means it's not properly sent to you. Second, sometimes when notice is sent to the landlord, let's say I am the landlord, I have a house. In my house, I have a tenant. Now, I am not there in the house, my tenant is there. The notice has gone to my tenant. But for me, it is supposed to come to me, but my address I gave that house. In that house, my tenant is there. The tenant got that and he rejected and gave it back. Now, it is still deemed that notice has been sent to me. Even though my tenant returned it back, it is still deemed it is sent to me. So a notice is sent to landlord by registered post and the same is returned by tenant with an endorsement of refusal. Tenant is returning saying this is not me, sent to landlord. Now that's the relationship between you and tenant. You should tell the tenant if something comes to me, give it to me. Therefore in this case also they are saying it is presumed that notice has been served properly. Are you following, guys? Next, it was held that where notice sent by registered post to person concerned at proper address is deemed to be served upon him unless contrary is proved. I gave an address to income tax department. After that, I changed my house 5 times. Income tax department sent to the address which I gave. I am not there. Somebody else is there. I even sold that house. Still, notice is deemed to be served properly because in this case, this is the address. Notice is sent by register to the person concerned, the proper address deemed to be served. So that is the address available with the department. So whatever address you gave, that is valid unless you change it, guys. Are you following, guys? This is the next one, serving of post and object of General Clause Act. Next we will go to section 14, 16 and 19. So now coming to these 3 sections, section 14, 16 and 19, this comes under subdivision of powers and functionaries. Let me quickly explain this. The first one over here, power conferred to be exercisable from time to time. What they are saying over here, power conferred to exercise from time to time. For example, class leader in a class has some power like taking attendance. Traffic police has the power to stop you and check for certain things. Like this, what they are saying in simple terms, various acts gives various power to different authorities. Such powers does not have any time limit. They can be exercised as and when required. For example, assessing officer in income tax can summon any person as and when required. So when a power is given to you, as long as you are in a position, you can exercise that power. Next to question 16. Power to appoint includes power to suspend. If I am appointing someone as class leader, I can even suspend and dismiss them. Same way, if for example, government is appointing someone as income tax commissioner, government can also suspend or dismiss them. So anyone having the power to appoint somebody, then the same person will have the power to suspend or dismiss the same person as well. Next to section number 19, official chiefs and subordinates. A law related to the chief or subordinate shall apply to the deputy subordinate performing the duties in place of superior. For example, I am supposed to do something. I am not well, so I am not doing it. I am appointing a student to do it. Now, whatever rule is applicable to me is also applicable to that student. So, if a certain law is applicable to deputy director of customs and if his assistant is doing that work, then the law shall be applicable for the assistant as well. Remember, guys, in General Clause Act, apart from definitions that we mug up, guys, the remaining provisions, if you just learn the concept, it is enough. If you just learn the concept, it is more than enough, guys. The next definition of financial year, we already saw April to March. Calendar year is nothing but Jan to December. Next, we have to see government, commencement or official gazette. So next definition is government. Government is very simple. In school days, we used to have those 4 lions, the emblem. But in any angle you see, you can only see those 3 lions. And in school social studies, they used to say those 3 lions represents these things. What those 3 lions represent? It represents legislature, law, executive, operations, judiciary, court. Therefore, they are saying government means those 3 things: legislative, executive and judiciary, law, operations and court. And over here, they are saying, but in narrow sense, it is used to connect the executive only, meaning the assigned executive expression in which context in which it's used. That's it. Government securities is nothing but securities issued by central or state government. Government securities is nothing but securities issued by central or state government. Stay with me, guys. Stay with me. Hang in there. I am also pushing myself. Taking this recording continuously is not easy, guys. Of course, I will have some breaks, but you guys don't have that breaks. So it's not easy. I am recording this continuously in one day, and after I finish this only, I am also going to sleep. And that's when you will also be sleeping, guys. So official gazette. Today, if government is giving any official information, if Modi ji is updating something, he will put a tweet or he'll put an X or he'll put Instagram post or he'll put Instagram story. But those days, back in the day, we didn't have all of that. So official gazette was like the official publication of government. Today also we have it, but today it's not in print. It's in the form of website. So basically, official gazette is nothing but an authorized legal document of the government. It's the public journal of the government of India, where all the information from government, amendments, anything will come here first. It's published on a weekly basis. Important for MCQ, and published on a weekly basis by Ministry of Housing and Urban Affairs. Again important for MCQ. Ministry of Housing and Urban Affairs, And this prints the official notices of the government. Who is printing this? This gazette is printed by the Government of India Press. Government of India Press will print this, guys. Now if I come down to commencement, we also have the definition of commencement, guys. Commencement means Companies Act 2013, but from which day it came into force. So basically they're saying commencement means from which day something is coming into force, which day something is coming into force, and from when it has legal force and effect. So again, let me repeat, commencement is the day on which something comes into force and it has legal effect. For this, what is the date of commencement? There are two dates. Usually there are two dates, guys. Generally, it's the date on which President gives his assent. Generally, it's the date on which President gives his assent, guys. So where the date is not mentioned in the act, date of commencement will be date on which President gives his assent. So generally, when the act is silent, when President signs, that's the date. Otherwise, where specific date is mentioned in the official gazette, just now I told you what's official gazette. So if official gazette has a date, then that date will be there. So what is summary for commencement, guys? Official gazette has a data, follow the date. Official gazette is silent, no specific date is given, follow the date on which President has signed the same. Are you following, guys? Clear? Let's proceed to the next one. So if I go back to our expected question, we are done with this. Next, I have to go to section 9, 10, 11, 12, 13. So if I come to all these sections 9, 10, 11, 12, 13, guys, let's go one by one. 9 talks about commencement and termination of time. They are talking about when we use the word from and to, how do we use it? In simple terms, I'll read the simple terms and explain, guys, because simple terms is what I typed over here. In simple terms, from is used to exclude the day on which the deadline starts, and to is used to include the day on which the deadline ends. For example, I'm saying dividend has to be paid from 30 days from date of declaration. So dividend will be paid within 30 days from the date of declaration. If I am declaring today, let me repeat, dividend has to be paid within 30 days from the date of declaration. And if I am declaring it today, then today I will not count. I will start counting from tomorrow. Correct? Dividend has to be paid within 30 days from date of declaration. If I'm going to pay within 30 days from today, the 30 will count from tomorrow. And if they use the word, if the word to is used, then the last date will be counted. So to 15th November, not till 2 15th November. So 2 is included for a date, means then that last day will also be counted, guys. That is section number 9. Next is section number 10, computation of time. In simple words, when a deadline is there and the deadline is falling on a particular day, which is leave. In simple terms, for a due date as per law, for example, court you have to submit or some application you have to fill, and application is falling on a holiday, guys. So when application is falling on holiday, the due date shall be deemed to be extended by 1 day. Are you following, guys? That too not, for example, if due date is falling on Saturday and Saturday is holiday, it's not Sunday. It is not Monday also. It's the day on which authority is next open. Sir, Monday Pongal, sir. Tuesday also Pongal. Then when is the authority next open? Authority is next open on Wednesday, that day. So in simple terms, where a due date falls on a holiday, whether it is emergency holiday, whether it is pre-planned holiday, any holiday, then it is postponed to the next day when authority is open. During COVID, post office was closed for 6 months. Then for 6 months it gets postponed. So it will be fall on the day on which the authority is next open. So keyword over here is when the authority is next open, guys. Then the next one, if you see, section 11, measurement of distance. Many acts will say measure distance, especially income tax will tell urban land, rural land. For that, what they are saying in simple, the land to be measured, if act is silent, it will be measured as a straight line on a horizontal plane. That means if I have to measure distance between here to this location, it's not the crow flying distance, it's not the flight, it's not the train. Between these 2 points, I will draw a straight line, and that will be the distance of what I will measure for 2 places. Next is section number 12. Due date will be taken pro rata in enactment. That means sometimes when the whole money cannot be paid, you will pay proportionately, guys. Look at this. Where the whole amount is not payable, then pay it proportionately. For example, if company declares a dividend of 3 rupees per share for 200 shares in total, dividend payable is 600. So 200 into 3. So proportionately you compute, guys. What we already know is there in the act. Last is section 13. Section 13, if you see, this came recently in the exam. Recently it came, but I'm still keeping because it's important. Words importing the masculine gender shall include word female. So he shall include she. Are you following, guys? So words importing wherever I use the word he, she is included. unless the act is saying she should not be included. For example, earlier, before the amendment, Karta of a HUF used to be eldest male member only. There you cannot tell eldest male member includes even eldest female, because that time it was not included. But today law is amended, equality has come into picture. Today Karta means eldest member of the family, it could be male or female. But generally when the word uses masculine terms, you can automatically include feminine terms, but unless the law says don't include, you should not include that. Next, words in singular shall include words in plural, where in general terms. However, the act is saying it should not be used, we will not be using the same. Next we have section number 8. Before I come to section number 8, I want to take two more things. Yeah, section effect of repeal and section 22. Let me finish that and come over here. So let's start off, guys. Last three sections we have section 22. Making or rules or bylaws and issuing orders between passing and commencement of enactment. This is fairly simple. What they are saying, usually if you see, act will come first. Companies Act 2013 followed by rules. Companies Act Rules 2014. Correct? Rules comes after act. This is saying you can make the rules before and make the act later. It's fine. I can make the rules in 2022. I can make the act in 2025, 3 years later. But the rules will come into effect only after act comes into effect. Let me repeat. The rules will come into effect only after act comes into effect. So in simple term, power is given to pass any rules or order in respect of an act which has still not yet come into force. So act no varla, but I can still do the rules. However, the said rule will be effective only after commencement of the act, guys. Are you following? This is section 22. Last, we have only two more sections left, which is effect of repeal, section 6, and construction of reference to repealed enactments. Let me finish this. When an act is repealed, for example, when GST came, VAT went away. When GST came, service tax went away. When GST came, excise duty went away. What will happen when something like this happens? When something like this happens, first, it will not affect any inquiry, litigation or remedy of previous act. So in previous act of VAT, service tax and excise duty, if any inquiry, litigation or remedy is pending, that will continue. Any case is pending, it will continue. Affect any penalty. In previous act, I got some penalty, sir. No, just because act is gone and new act has come, that penalty I don't have to pay. No, I still have to pay. Affect any right. In previous act, whatever rights and privileges I had will still continue unless the current act says you can't have it. For example, in VAT, previously we had the VAT number, that number. But GST came and told, no, that number is not valid, you should register again. So new act told you have to change. Otherwise, in general, it will not affect the previous right. For example, when Companies Act 2013 came, it told the old Companies Act 1956, if you registered, registration is still valid. So it won't affect the previous rights. It will not affect the previous operation. Whatever good things, whatever you did earlier will not be affected just because a new act came. And it will not revive anything not enforced, guys. Now, tomorrow, if GST is removed, does not mean VAT is back. Imagine GST is removed because GST is not working out. For example, it's working out beautifully in reality. Example, if it's not working out, if GST is scrapped again, nothing is coming yet, does not mean VAT is back. So, revive anything not enforced during the period. Are you following, guys? These are the points over here. Now, last one, very important. If you ask me the most important question in this chapter, I'm taking it last so that you also don't sleep. This is the most important. Came in RTP multiple times, came in MTP multiple times. Just waiting to come into your exam. Let me explain this with an example. So now let me tell you what is there in section 8. I will read the provision, but let me explain with an example. Okay. We have the Income Tax Act 1961. When Income Tax Act 1961 was there, we had only Companies Act 1956. So that time in Income Tax Act, they will tell compute net profits as per the provisions of Companies Act 1956 will be the wordings. And from that net profit, you do PGBP adjustments. The minute when Companies Act 2013 came, this act was scrapped. Now net profit will have the meaning as given in Companies Act 2013. But the wordings in Income Tax Act 1961 will still read as net profit as per section, whatever section, as per Companies Act 1956 only. But this act is deleted, no. So what to do now? So this section 8 of General Clause Act is saying if a situation like this comes, it says the wordings in Income Tax Act should now be reread as whatever provision is there over here, its equivalent provision over here will be taken. So, even though this uses Income Tax Act 1961 says as per the net profit provisions of Companies Act 1956. Now this act is not there. Now it should be deemed to be read as net profit as per Companies Act 2013. Are you guys following what I'm saying? Let me know. Let me know in the comments, guys. So in simple words, for example, if section 115 JB of the Income Tax Act 1961 for calculation of book profit, the Companies Act 1956 are required to be referred. With the advent of Companies Act 2013, the corresponding change has not been made in 115 JB of the Income Tax Act 1961. So on referring to section 8 of General Clause Act, book profits to be calculated under 115 JB of Income Tax Act will be as per the new act and not as per the old act of Companies Act. That's what is given over here in paragraph, guys. Proper case study question can come in this. With this, we are done with the expected questions of General Clauses Act, guys. Expected question of General Clause Act is done. These, at least, instead of skipping this chapter, at least learn these questions and go for the exam. Let's move on to the next chapter now. Only a few more chapters left. Let's move on, guys. Let's start off with the expected question marathon of LLP, guys. Now I can see that almost we're done with 3.5 hours. We still have about 4 to 5 chapters to go. So from now, I am going to speed up. I think in the last 3 hours, you have caught up with pace. Most of you will be like, sir, when you will get increasing the speed, sir. Now have your dinner, guys. Keep your dinner plates next to you. Time to speed up, guys. Whatever chapters are, I'm going to be increasing my speed and we're going to be fast. Now, first is amalgamation and compromise of LLP. I'm going to go through my Gen Z notes. What do you mean by compromise, arrangement and reconstruction of LLP? Now, LLP might have some problem with its partners, might have some problem with its creditors. When issues come between you and your wife or you and your friends, someday you will try and compromise. For that, all the parties have to agree, guys. Same way here, compromise and arrangement between LLP, between its partners and creditors. Such a compromise can be done if 3/4 in value agree for the same. So 3/4 in value of creditors should agree for the same. Once they agree, our LLP will reach out to tribunal saying everybody agreed. When I'm applying to tribunal, they have to give some following attachment: latest financial statements, details of pending investigation, material facts of LLP. Let me repeat, when you apply to tribunal, 3 attachments are important: latest financial statements, details of pending investigation, material facts of LLP. So when I'm applying to tribunal, these 3 things again: latest FS, pending investigation. Repeat with me, guys: material facts of LLP. And once this thing is filed to tribunal will give me an order. This order will be filed to ROC within 30 days, guys. So summary, I'm sorting with my creditors, 3/4 agreed, filed to tribunal with these attachments. Tribunal is giving me order, filed to ROC within 30 days. If I don't follow any of this properly, there is a default penalty, guys. Next, once tribunal is giving me the order, they will not leave me as it is. The tribunal can supervise the compromise and arrangement and make modifications to order if resolution provided cannot be worked satisfactorily. They told me to do something. What I'm able to do is not happening properly. So they will modify the order, guys. This is with respect to compromise. Next, provision for facilitating reconstruction or amalgamation of LLP. You all know anyway amalgamation chapter. So like amalgamation of companies, here we have amalgamation of LLP. LLP plus LLP, new LLP allowed. LLP plus company not allowed, guys. How will this happen? Compromise under 60 above. If above compromise, in this case, if the order tribunal is saying tribunal can order for amalgamation of LLP and that order will be filed to ROC within 30 days. Same thing is over here. The order will be intimate ROC within 30 days, guys. And such an order will have normal effect, just like amalgamation of companies. What is it, sir? The transferor LLP to transfer all assets and liabilities to transferee. Amalgamation, you have all assets and liabilities transferred. All pending legal proceedings shall continue. Amalgamation, you have same thing. Leads to dissolution of transferor LLP without winding up. So the transferor LLP will be closed. In amalgamation also, one company gets closed. Exit opportunity to be given to dissenting parties. Some people will not be happy with this. Give them exit opportunity, settle them off, guys. Order for any other order needed to be smooth execution. Okay, so all these basic points, nothing great over here. So basically these points will happen. And then tribunal shall not pass any order unless it has received a statement from ROC stating LLP is complaint. So tribunal will pass the final order only when ROC, will not pass any order unless it has received a statement from ROC stating LLP is complaint. And if you don't follow, there is some penalty for the same. Let me go to the next one, guys. So we are done with amalgamation and compromise. The next one is section 15 to 17, name clause related to provisions of LLP. This time, be clear with the process of incorporation of LLP, details to be attached for this process as it was never tested in LLP. Let's go there. Now let's go to incorporation of LLP, guys. Incorporation of LLP steps are very easy. First step, you need to have 2 or more designated partners. How can I start LLP without having DPs? 2 or more designated partners. Second, you have to obtain designated PIN and DSC. So second, I will obtain designated PIN and DSC. And once I get the DPIN and DSC along with the 2 designated partners, I will check for name availability of the LLP, guys. Once the name, so what are the first 3 steps? 2 or more designated partners will get the designated PIN and DSC and check for name. And once they have the name, they will file for electronic filing of documents. And once you file electronically, the ROC will issue LLP in PIN and in certificate of incorporation. This will be issued within 14 days of filing. Within 14 days of filing will be given by the official seal of ROC, and within 30 days after that you have to draft the LLP agreement. You have to draft the LLP agreement. These are the 6 steps, guys. Promoters will come together, get the DSC and DPIN. They will check for name availability, do electronic filing of documents, wait for 14 days and get certificate of incorporation LLP PIN. After that, within 30 days, I will draft the LLP agreement. Now, what is important over here? When I am doing the filing to ROC, what are some attachments I have to give? There are 2 attachments I have to give. One is called an incorporation document, other is a statement. The statement is same as Companies Act. What is there in Companies Act? Advocate, CA/CS/CMA, advocate or CA/CS/CMA, and anyone subscriber of LLP will certify that everything is true and fair. So again, I'm repeating, guys. The statement will be certified by advocate or CA/CS/CMA and subscribers of LLP saying that all information is true and fair, guys. And next one, the incorporation document will have some basic details like name of LLP, where the LLP is there, what business is doing, name of partner, what is address of partner, that's it. Name of LLP, proposed business, address of the LLP, name and address of partners, and other information of LLP, guys. These are some basic attachments that I will be giving. If you give some wrong information, imprisonment up to 2 years and fine 10,000 to 5 lakhs. Next, let me go to next question that we have is liability of partner and LLP, guys. Now getting to the liability of partner and LLP, guys. So if you look at liability of LLP, it's fairly very simple. When will the LLP be liable? Imagine I am the partner, you are the LLP. Now as a partner, I am allowed to drive the car of the LLP. Okay. So I took the car of the LLP, I drove and I crashed. It is within my power. So I did it. So LLP will compensate the loss to the third party to whom I crashed. So, LLP is liable for act of the partner, my act of driving the car, within my authority of driving the car, for a wrongful act or omission, for any wrongful act or omission which I have done in ordinary course of business. I didn't take the car and go to Goa for my personal trip. In the ordinary course of business, I took the car. So, LLP will be liable for act of me which is done within my authority, guys. Are you following? So a liability will be met out of the LLP property. LLP has its assets from the LLP. Now the LLP clearly told me, hey Karthik, don't take the car and drive, you are not supposed to drive the car. Now LLP will not be liable even if I am not supposed to take the car, but out of curiosity I took the car. So LLP will not be liable when partner carried out an act for which he does not have an authority. I don't have authority to drive the car, but I drove the car, and the person knows he has no authority, or he does not know, so basically whether I know I have authority or whether I don't know I don't have authority. If I don't have an authority and if I did something, LLP is not liable, guys. Are you following? Now what is liability of partner? When is partner liable? In this case, when LLP is not liable, when is LLP not liable? I don't have the power to take the car, but I still took the car. So in that case, LL partner is liable for wrongful act or omission of himself. I did something within outside my authority, so I am liable. When is partner not liable? In case where I had the power to take the car, LLP is liable, so I am not liable. So whenever there is obligation of LLP, partner is not liable, or obligation of other partner, I am not liable. Are you following, guys? Clear? For example, LLP took a loan. that loan should be repaid by LLP only. So partner is not liable for obligation of LLP, for example, loan by LLP or obligation of other partner. Some other partner made a mistake outside the scope of authority. He is liable. I am not liable because in LLP, concept of mutual agency is not there. Next one, guys. Unlimited liability in case of fraud. So if we go to unlimited liability in case of fraud, generally in LLP, what is the full form? Limited liability partnership. But in some cases, liability of LLP becomes unlimited. When does it become unlimited? In case of fraud, it becomes unlimited when an act is carried out. An act is carried out by LLP or partner. LLP or partner are doing an act where we are doing it with an intention to cheat. Hey, I am not doing it, what to say, without knowing. I know what I am doing. The LLP and partner knows what they are doing. Satyam case or Vijay Mallya. We know what we are doing with the intention to defraud its creditors or any other person for fraudulent purpose. So my goal is to cheat somebody. So in that case, if I have done something, I got caught, intention to cheat somebody else. In that case, LLP is liable with unlimited liability. The liability of LLP and partners who acted with the intention to defraud shall have unlimited liability. So whoever acted with the intention to defraud will have unlimited liability for all or any of the debts of the firm, guys. Are you following? Okay. In LLP and partners have to compensate loss suffered by the affected parties. So because LLP and partners did it intentionally, whoever suffered loss because of me, we have to compensate it to all those people. And next, where an act of fraud was carried out by the partner, the LLP is liable to the same extent of the partner unless it is proved that act was carried out without the authority of the LLP. Here they are saying when act is done by fraud, what is the liability of LLP? What is the liability of partner? Both will share the loss in the same proportion. Are you following? And for this, imprisonment is up to 5 years, guys. Next one, filing of annual return and declaration of solvency. So when we come to filing of solvency and declaration of, when we come to financial disclosures, sorry about that, guys. When we come to financial disclosures, statement of account and solvency and annual return. These are two documents that every LLP has to file. Every LLP has to file. Don't worry, I will be sharing a separate video very soon on YouTube where all the filings of LLP, all the filings of foreign company, all the filings of private limited company and public limited, I will summarize in one video and I will share it separately in a separate video. But here, let me discuss the one with respect to LLP alone. For LLP, statement of account and solvency. What is statement of account and solvency? This is like filing your financial statements, and basically every year when I'm filing to ROC, guys, I have to tell ROC, this year I am solvent. Solvent means my assets are more than liabilities. That is what is meant by solvent. This will be filed within 6 months from end of financial year. So within 6 months from end of financial year, why they're giving 6 months time? For me to prepare statement of account, for me to prepare financial statements, I need 6 months. Annual return is just like Companies Act. This will be filed within 60 days from end of financial year. So if my financial year is the cutoff, I will keep, I'll keep 2 dates. I'll keep 2 dates over here. So what are the 2 dates I will keep over here? I will be keeping 6 months and 60 days. Within 6 months, I will be filing statement of account and solvency. Within 60 days, what I will file, guys, I will be filing my annual return. So that is the summary of it. Let me repeat, from the end of financial year, within 6 months, what you will file, guys, statement of account and solvency, like your financial statements, which takes time. That's why 6 months. And annual return within 60 days will be filed. Not filing, enjoy the penalty. LLP 100 per day, maximum 1 lakh. Designated partner 100 per day, maximum 50,000 rupees, guys. Next, time limit. Time limit for different case of filing to ROC. New partner joined. Name and address changed. Related concept where filing to ROC is involved. Let's get there now. So now coming to some important timelines in the chapter, guys. I will just run through this. First, when a partner in LLP retires, he has to give a 30 days notice to other partners. So first time limit, remember, when a partner is retiring, 30 days notice to somebody else. Other case in which partner leaves, death, dissolution, unsold, insolvency. Fine. I'm only looking at timelines over here. Important timelines. Next. In any of these cases, when a partner leaves, that partner is called a former partner. Now, the minute partner leaves and is called a former partner, notice has to be given, especially retirement, notice has to be given to ROC within 30 days. Okay, this is one time limit. Next, let me go to other time limits. Section 25, registration of changes in partners. Where a partner is changing his name or address. I am changing my name from Karthik Manikundan to something else, or I'm changing my house address. Do you know you can change your name if you don't like it? One provision is there. So if I'm changing it, I will intimate LLP within 15 days because LLP should know. Correct? At the same time, the LLP will intimate ROC in 30 days. So I will intimate LLP in 15 days. LLP will intimate ROC in 30 days. Let me repeat. If I am changing my name or address, I will intimate LLP in 15 days. LLP will intimate ROC in 30 days. Then LLP, a new partner is coming in or a partner is going out. In same, if partner is coming in or going out, LLP should again intimate ROC within 30 days, guys. And when you're intimating ROC in 30 days, this will be signed by the designated partner. Are you following, guys? Next time limit. Sometimes when a partner is coming in or going out, or partner has changed his name or address, they are intimating LLP. In all cases, LLP is intimating ROC in 30 days. But if LLP fails to intimate ROC, they are saying what the partner may file it directly with the registrar if he believes that LLP will not file it. So partner can file it directly with the registrar if he doesn't file it. So once you file with the registrar will cross check with LLP if no response comes. So now to the ROC, instead of LLP filing, partner has filed directly. Let me repeat, where the LLP has to file to ROC within 30 days, LLP failed. So partner filed directly to ROC. ROC will cross check and wait for 15 days. If there is no response from LLP in 15 days, they will proceed and do the registration, guys. These are some time limits that we have. Time limit for different case of filing to ROC. New partner joined, finished 30 days. Name or LLP of LLP changed, 30 days. Related concerns where there is related filing to ROC involved. I don't remember 30 days. Next is small LLP limits. And we have all concepts related to designated partner. If this is done, LLP concepts, expected questions is done. Let's get there now. Now to start off with small LLP, just like small company, but small LLP they have not tested for a long time, so I make it important, guys. Instead of paid up share capital, here we have something called contribution and we have turnover. Again, you have to satisfy both. Contribution less than or equal to 25 lakhs, turnover should be less than or equal to 40 lakhs. Are you following, guys? So for small LLP, the limits contribution less than or equal to 25 lakhs. If it crosses 25 lakhs or if turnover crosses 40 lakhs, no more you call it small LLP, it becomes a normal LLP. So what is the contribution, guys? Contribution less than or equal to 25 lakhs and turnover less than or equal to 40 lakhs. Let me repeat again, guys. Contribution less than or equal to 25 lakhs, turnover less than or equal to 40 lakhs, and this 25 lakhs in the future can go up to 5 crores and 40 lakhs in the future can go up to 50 crores. You just have to mug up this limit. Last, provisions with respect to designated partner. Every LLP should have minimum 2 designated partners and at least one of them must be a resident. Who is the resident? A resident is the one who stays in India for at least 120 days in preceding financial year. So let me repeat, guys, for every LLP. For every LLP, guys, you need to have 2 DPs and 1 DP must be resident who stay in India for 120 days or more. Who can be designated partners? Such designated partners can be individual or body corporate, guys. Now, if it's a body corporate, how can I count residential status? Further, they are saying it should be a nominee, or a nominee should be, the body corporate should appoint a nominee and such a nominee should be an individual. So, who can be designated partners? Such designated partners will be an individual or a body corporate, will be a body corporate. Now I'm going to quickly revise some general provisions in designated partners. If a DP is going to join the LLP, the DP has to give a prior consent. If DP is going to leave, you have to appoint the new DP in 30 days. Time limit nyaba illiya? Time limit you don't remember. Time limit gurtuleda, guys. 30. If no DP is appointed, partner available will become DP. No DP is there. Whoever is there, default will become DP and you have to LLP will intimate ROC. Designated partner terms defined in LLP agreement, like partnership agreement. Here we have LLP agreement. Designated partner to obtain designated partner identification number. What is their work? Responsible for doing all acts required done by the LLP for filing returns or solvency report, everything, all the legal compliances, and they are liable for all the penalties imposed on LLP if they are not following. 3 types of punishment. In this chapter alone, in the past, they have asked punishments. So learn these punishments, guys. You have to learn these punishments. If you look at this, in this case and in this case, penalty is the same. So what is the penalty over here? designated partner LLP 10,000 is the penalty and 100 rupees per day. For LLP maximum 1 lakh and for partner 50,000. Let me read that again. For LLP and partner flat one time payment of 10,000. For LLP and partner 100 rupees per day. Again maximum for LLP 1 lakh and maximum for partner 50k. This comes in the following cases. DP reduced less than 2. Just like unlimited liability, here we have the same concept. Reduced less than 2 or designated partner is not resident of the country. Or vacancy of DP not filled or DP is not eligible. In these 4 cases, DP less than 2, DP is not resident. Vacancy of DP is not filled, DP is not eligible in this case. The last case, failure to give consent to ROC within 30 days, you have a different penalty. Here DP plus LLP 5,000, 100 rupees per day and maximum LLP 50k, designated partner 25k. I've just keep the screen over here, pause and learn this guys, because in LLP they have asked penalty in the past. So that's why for DP penalties I've kept it together over here. Maybe at least if you have the effort, time, learn this one penalty alone. With this we are done with LLP expected questions. Additionally, apart from this, because LLP many students are going to skip anyway, at least learn these questions. And additionally, if you have time, one more question I will tell you. Basically, dissolution of LLP, cases of dissolution. This has come many times in the past, so I want to add this also over here. So this winding up has come many times and that's why we kept it over here. Let me quickly revise in just 2 minutes. Winding up and dissolution can be happening voluntary. LLP will do it by itself or tribunal can pass an order. Tribunal will pass an order. Case of tribunal winding up, what are the cases? 5 points, 5 marks. LLP decides to wound up by tribunal. LLP itself is deciding, my time is over, tribunal wind me up. Or number of partners reduced below 2 for more than 6 months. This is one clause. For more than 6 months, number of partners reduced below 2. LLP is acting against the sovereignty and integrity of India. Or the default in filing statement of account and annual return for 5 consecutive years. Any other reason, just an equitable. This came just 2 attempts back, but just go through for repetition purpose, guys. I've just been very fast over. I hope you understood. I'm just recollecting the point that you know. With this, we are done with LLP. Let's move on to the next chapter.
Let's quickly revise in our Gen Z marathon interpretation of statutes. I'm just going to stay in this one page. Again, this is one chapter where you have to go and memorize. Memorize what, guys? You have to memorize all the terms inside, keywords. I will at least tell you the concepts what it is so it becomes easy for you. First, the interpretation versus construction. What is the meaning, sir? For example, interpretation is what I want to communicate to you. What your understanding is construction. For example, girl is messaging you, don't message me. She wants to tell you don't message. But your understanding as you have to message. So, interpretation versus construction basically is what the lawmaker wanted you to understand. That is called interpretation. What he wants you to interpret. What you actually interpreted, that is called construction of statute. So this interpretation of statutes basically has three separate concepts. Rules of interpretation, under that we have primary and secondary rules. How to read law, some rules are there. Aids of interpretation, what is going to help in reading the law better. Internal and external aids. And lastly we have interpretation of deeds and documents. Let me finish off the rules first, guys. I'm only going to give you overview over here. In secondary rules, doctrine of nocicta res sources. What is rule of nocicta res sources saying, guys? Rule of associated words. It means when 2 words are used together, like plant and machinery. Plant has different meaning, machinery has different meaning. When you read together, they have the same, together combined different meaning. Trade, business, occupation, separately different meaning, combined it has a different meaning. That is rule of nocicta res sources, the rule of associated words. Each word takes color from the other word. Doctrine of contemporino exposito. Sometimes you will see penalty, race horse, 500 rupees. Income tax act penalty 500 rupees. Small penalties will be there. Or they will tell transfer of shares, you have to give physical shares. Now demat is going on, no sir, why is the law so old? To understand a law better, try to understand the time when which the law was made. So if you go to the period, the contemporary period when the law was made, you will understand why the law was like that. Are you discrimination against women, sir? That time things were different, so that's why the law was like that. Why stepdaughter is not included, all those things. Are you following? You have to go and read the points inside to know what are the keywords to write. I'm telling you a concept. Next, rule of literal construction, primary rule. This is the core and basic rule. When something is clear, grammatically when something is clear, follow that. Law is not creating confusion. Dividend declared should be paid within 30 days. Law is clear, follow that. Second, rule of reasonable construction. Sir, when I am reading this, I am getting two doubts, sir. Should I follow A or should I follow B? For example, Income Tax Act, gift on occasion of marriage is exempt. Now I am thinking, what if I get married 3 times? Then 3 times gift exempt. What if I get married once in Chennai, once destination wedding, then 2 times? That means you are taking a reasonable deviation from what is there. It is capable of ambiguity, doubt. When there is a doubt, lawmaker is saying, if there are 2 or more interpretations, try to give importance to the spirit of the law. What was the intention? You don't try to construct in the way you want. What do you think would have been the interpretation of the person who made the law? His interpretation would have been mainly to tell you what? It's only one marriage, one gift. Okay. Next, rule of harmonious construction. That the word itself says harmony. Let's all be together. If there are multiple provisions creating conflicting provisions, one section is saying A, one section is saying B, try to follow both. In AGM, one section says AGM within 6 months. One section says AGM in 1 calendar year. One subsection says AGM should be held maximum time gap is 15 months. Which one to follow? Follow all 3. Possible, no. Father is saying come home by 9 p.m. Mother is saying come home by 8 p.m. Come by 8, you will follow both. That only is rule of harmonious construction. Within that you have 3 subterms. Without prejudice, then subject to, notwithstanding. Notwithstanding means what is there will definitely be followed. Without prejudice means without affecting some other section. Subject to means I will follow this subject to what is therein some other section. I hope the meaning is same. Okay, you're understanding. Hayden's rule or mischief rule. Basically, this is your loopholes. Whenever there is any loophole in the act, the authority will amend that. After that also, if still loophole is there, we have to see what missed out, what was the smartness of the other person. So under Hayden's rule, when you are studying, remember there are 4 points. 4 points under Hayden's rule. What was the law before? What was the loophole? And what is the remedy that is coming in? Is the remedy actually covering that loophole? That loophole only is called mischief. Okay. Rule of beneficial construction is nothing but same as reasonable construction. But when a benefit is supposed to go to some section of the people, and the benefit is not going, this rule is saying let the benefit go. For example, government is saying for all the farmers, I will give 5 lakh rupees per farmer. But only you should have bank account. Farmer is not having bank account. Here I will deviate. For the benefit of the farmer, let me do it. For underprivileged and some sections of the society, beneficial construction will be done. Even if I am deviating from the law, if it's beneficial for them, I will do it. Are you following, guys? Rule of exceptional construction. Here, generally and means I have to follow both. Or means I can follow anyone. May means I may optionally follow. Shall means definitely I have to do it. But exceptional construction is a case where may is read as shall is read as may, and is read as or is read as and. Depending upon the case where it is used, there go and read the points. There are 3 cases when may is read as shall, and there are 3 cases when shall is read as may. For example, when shall is read as may, when it's done against the government. When may is read as shall, by it's just a mere formality of may, when there is a lot of consequences against public interest, may is read as an obligation coupled with an formality means may is read as shall. Here there are 3 points, here there are 3 points, please go through that. Next, rule of adjustum generis. Adjustum generis says when general words are following specific words, the general word will take the same meaning as that of the specific word. For example, sir, I have lion, tiger, cheetah and other animals. These other animals will take the same nature of the wild animal. That's what is called adjustum generis. But again, there are here important 4 exceptions when this rule is not applicable. 4 exceptions when the rule is not applicable. Okay, what are the 4 exceptions? I will quickly show you the exceptions, guys. In rule of adjustum generis, rule cannot be applied when all the terms are general. Preceding, succeeding also general. I can't use. Specific word is exhausting the genus. I wrote all the wild animals name and then I'm writing other animals. Where a wild animal illa. I have the specific word itself exhausted all the possible points. There is no more general word. Or no. When the specific word is diverse in character, I am writing tiger, crow, snake, fish, and other animals. It's so diverse. Specifically, there is no trait, there is no continuity. It's covering everything possible. So, general word cannot take a meaning from the specific word because each specific word is in different corner. One is in North Pole, one is in South Pole. So, it's diverse in character. Or the law itself is saying, don't apply this rule means I will not take adjustum generis. I also told you when may is read as shall, when shall is read as may. These are the points, guys. When shall is read as may, against the government, na shall is may. Government will not do anything mandatory, optional only. Intention demands the same thing. Here also, discretion, option coupled with obligation, may is read as shall, and pure conventional. Courtesy kaga I have kept as may, actually it is shall. And lastly, if you read as may, object will be defeated, so you should not read as may. These are the points in may and shall and may. Next. So we are done with all the primary and secondary rules. We have some Latin terms also. I will go there in the end, guys. Now coming to internal and external aids, quickly I will tell you. Basically this long title, preamble, heading. First three I will summarize. Long title is a section on a long title. Preamble is before the act. They will give you object of the act. And heading is before each chapter there will be a heading. Charges, dividend. Question is, what is inside the act? Long title, preamble, heading. Can I use this for understanding the law? Yes. To understand the law, you can use it. But it cannot override the provision itself. It cannot override the provision. Are you all with me, guys? It cannot override the provision at any cost. Next, what is marginal notes? In the side of the act, like how you make notes, some notes will be made. Can I use that for interpreting law? Answer is no. Because after an act is passed, after it goes through the House of Parliament only, marginal notes are added by the person who is publishing it. So marginal notes are just for reference. It cannot be used for interpretation. It's not even part of the act. Next, definition sections. In definition, we have two types of sections, guys. What are the two types of definition sections we have? Which is ambiguous sections and definition, subject to a contrary context. Ambiguous, it's confusing when you read it alone. So when it's confusing, try to read with the entire act. So interpret it along with the other provisions of the act, then you will get the meaning. So what is definition subject to contrary context? Based on where you are using it, the meaning will change. Based on which context you are using, the meaning will slightly change. Okay. This is definition. Illustration. Sometimes act itself will have some example. Simple. Can I use illustration to understand the provision? Yes. Can illustration widen the scope? No. Can illustration override the section? No. Proviso. Proviso is basically exception. Proviso is in an act. You know what is proviso? Follow this except for these people. But exception and proviso are different. The small line of difference. I can't explain that in 1 minute, guys. We will see that in the regular. Explanation. Sometimes within the act there will be explanation. For example, private placement. Maximum number of people I can give private placement is 200 people. Now is it 200 for equity, 200 for debentures, 200 for depositor, or all put together 200? So each security it is 200. That is given an explanation. So explanation is for you to understand the law better. But can it widen the scope of section? No. It cannot narrow down, it cannot widen down. Can it override section? No. Schedules, like how Companies Act have schedules. CSR, there is a schedule for CSR, Schedule 7. Schedule is part of the act. It will again, it cannot override the act. It will help you in understanding the law better. Read the act as a whole. This I already told you. Harmonious construction. Don't read just inter-syllabus until I am expert in Companies Act. You need to read the whole Companies Act. Next, external aids. They are saying to read, understand the law better. Try to understand the history why the law was made. Nirbhaya Act came after a huge movement in India. That's why the punishment itself was changed. For juveniles will be hanged in an event of all those crimes. So understand history. Why GST came to allow for cross input tax credit between goods and service. You will understand GST better. Consolidating previous statutes and laws. Sometimes previous statutes will be consolidated into one statute. Classic example, GST, VAT, service tax, excise. All three were consolidated and what we got? GST. Next, usage. What is usage, sir? What people are actually following is different from the law. But as public, we have accepted that. So that will override the law. Are you following, guys? Are you following? Clear? So law is saying something, but public is not following that. As trade usage, public is following something else. Everybody accepted that. Then that only becomes the law over the act. Are you following? Yes. Court also will tell. Pala varshama idamma pannittu irukom. Okay. Earlier law and later law. Okay. Now, if there are two laws, let's say Contract Act 1872 and Partnership Act, Sale of Goods Act or Partnership Act 1930-32. Two acts are conflicting. Which act will override which act? The later act will override previous act. Are you following, guys? If let's say regarding a contract, Sale of Goods Act is saying X, Contract Act is saying Y, I will definitely follow X because the later act knew about the earlier provision and still made this provision. So later will override the previous. Are you all with me, guys? Clear? Dictionary definitions. Sir, can I take Oxford Dictionary for understanding some term meaning? They are saying to understand the definition, first go to section 2 of the act. Go to section 2 of the act. In section 2 definitions there are follow. So section 2 definition is not there. Then to understand the general meaning of the term, you can go to the act. Financial year is defined. Financial is not defined. So what is financial? Go to general definition and take the dictionary definition. Are you following, guys? Next, outside our law. Sir, can I use foreign case law for understanding Indian law? Solomon says Solomon. Foreign case law, you are using it. So they are saying, first see for a particular issue if there's a case in India. If it's there means you follow that. If it's not there, then you go for foreign country and use the case of a country which is following. The term they use is similar jurisprudence. India democracy, UK democracy. Yes. India democracy, UK, China communist. I can't take a Chinese case law. Similar judicial system, jurisprudence we can follow. Are you following, guys? With this internal and external is also done. Now lastly, interpretation of deeds and document. Under interpretation of deeds and documents, we have three sub-rules. Golden rule one irukku, elementary rule one irukku, conflict resolution one thing is there. Okay. What is golden rule? For example, let's say in an agreement, I wrote rupees 50,000 only. But when I wrote the amount 50,000, I put one extra zero. Sir, first of all, what is interpretation of deeds? So far, whatever we saw is interpretation of act. Is interpretation of act, guys. Interpretation of act. Okay. Interpretation of deeds, rental agreement. Let's say rental agreement, or let's say any lease agreement, those kind of deeds. So here, let's say I told rent is 50,000 only, but amount I wrote 50,000 with one extra zero. Which one to follow? Within the agreement, there's conflict. The court is saying, give importance to the technical expertise and circumstance where the draft is made. Who is the person who drafted this? It is a junior person. Mistakes are normal, so it's okay. They are saying golden rule enna solrana, give importance to the logic and solran. He's saying give importance to the logic. Look at this. In golden rule, what he's saying, read the document as a whole, circumstance where the word is used, and training of the parties drafting it. So if it's rupees 50,000 and 10 is put, when you read the whole document as a whole, you will understand for 1 or 2 BHK, 50K only is rent. I can't give more by 5 lakhs. Are you following? Second, elementary rule. One word will have the same meaning. Elementary, basic. Don't confuse things. All words will have the same meaning, guys. Don't confuse us. The word plant and machinery will have the same meaning throughout the agreement unless the context compels a different adoption. For example, the plant near the plant and machinery, now meaning is different. Are you following, guys? Okay, the plant is tree or the poothati near the plant and machinery. Are you getting it? So generally, if a word is used in document, give it the same meaning throughout the document unless the context is something else. Last one, conflict resolution. Simple. Within a document, if there is conflict, if there is fight in life, usually what we do, we try to resolve it. Here also they're saying you try your best to resolve the conflict in solran. If you are not able to resolve, then earlier will prevail over later. In act, later will prevail over earlier. Here, what will prevail over this, sir? Earlier will prevail over later. Sir, what do you mean, sir? Within a document, PVR movie ticket. First page they told, water bottle allowed. Second page they told, water bottle not allowed in theatre. Which I will do? Water bottle allowed. What is written first will be followed over what is written later. That is for within the same document. But if it's in case of act, so simple, if I have to summarize, in case of act, later will override former act. But in case of deed, what will happen? Former will override later. Are you following, guys? And then in this same interpretation of deeds, you have to look at some Latin terms. If I just show you those Latin terms, here we go, guys. So what are the Latin terms? What we already know. I'm not going to tell the terms, but look at this. Fine. If you see something like absolute ones is not clear. What is there only I'm going to follow. So absolute na literal construction. Keep in mind. Maggie is coming, sir. Because nowadays they're asking this. Maggie is coming. See, look, here also Maggie, here also Maggie. Maggie is reasonable construction. Are you following? Absolute means clear, that means literal. Maggie vanda reasonable construction. Lastly, Generalia something. Genelia, actress Genelia comes means harmonious construction. She's in harmony with everybody. Just know Sachin movie also re-release. So think of Genelia comes na harmonious construction. Okay. She acted in all movies, Telugu, Tamil, Hindi. So harmonious. Okay. Then last one, say some consude is coming. Consude, contemporary exposito. Con. Are you following, guys? That's it. Remember, like this, Latin terms come now. You know what are the terms, what are the concepts. With this, we are done with what, guys? Quick Gen Z revision in about less than 20 minutes for interpretation of stuff. This is clear, guys. Fine. That's about it. We are going to quickly revise all the limits that we have in FEMA. Gen Z notes of FEMA, guys. Basically, except for residential status in FEMA, we are going to revise the whole of FEMA in the next 10 to 15 minutes max. Basically, if you see, there are 7 dabbas that you have to remember, or 7 different types of limits. First is current account, which is schedule 3. Current account has totally 3 schedules. The third schedule talks about what you can do as an individual. For that, as an individual, limit is 2,50,000. If it crosses that, then you will go to RBI. This 2,50,000 is for what things? Like gifting, for donation, for any expense of medical, education, private tours, tourism, all of that if you want to go abroad. In that, they are not giving you 2,50,000 if you go to countries like Nepal and Bhutan, because you can use Indian currency itself. In this list, specifically they are saying for immigration, medical treatment and studies. For these 3 things, if it crosses 2,50,000, please get a confirmation letter from the respective institution also. Now, this 2,50,000 is for one individual. When I go with a group of friends or family, can I group it? Yes, friends, family. Same if you go together in the same visa or you can group it off, guys. Okay, that is about schedule 3. These are the key points. Other expense of schedule 3 could be, for example, you are buying mobile from US. Okay, you can buy mobile from US. It should be within the limit of 2,50,000. Are you following, guys? Clear? I'm not capitalizing mobile, keeping it in the expense side. Next, again within current account, schedule 1 is prohibited. That means current account has 3 schedules, guys. If you look at the 3 schedules of current account, should you remember these numbers? Yes, I will tell. Yes. Okay, easy to remember, nothing great. It's easier than section numbers. What is schedule 3 of FEMA current account? Which you can do, allowed, permissible. Can do means permissible. Okay. Next, schedule 1 is cannot do, prohibited. No permission, nothing. You cannot do. Schedule 2 is you can do with the permission of central government. Schedule 3 is can do with the permission of RBI. Are you following? Within schedule 2 you have 2 types. One is for individual, one is for other than individual. What we finished so far is other than individual. So we are individuals. We are done with individuals for schedule 3. Next is current account, schedule 1 prohibited. These things not allowed. Remittance out of lottery winnings. All lottery winnings in India you can't remit out. Race horse winnings. Riding horse from India, money can't go out of India. Money can't go out of India. Remittance for purchase of lottery ticket outside India. US lottery, no. For abroad, then banned and prescribed magazines you can't buy. Football pools and sweepstakes outside India you can't buy. Next, this same list has few other things. You have to search for these terms. Now I'm not focusing on logic in detailed class. Here, callback service, dividend balancing, commission on export on equity investment of wholly owned subsidiary in India, special rupee scheme account. These are all in schedule number. Which schedule, guys? 1 which you cannot do, current account. So out of 4 dabbas that we have in current account, 2 we have revised. Are you able to follow, guys? Okay. Next, one more point we missed here. Commission on exports up to 10% of invoice value for tea and tobacco. Usually you can't pay commission on exports, but if it's for export of tea and tobacco, allowed up to 10% of invoice value. This also is what in cannot do, with one exception. You can do up to 10%. Clear, guys? Next I'm going to current account schedule 2. Schedule 2 of current account, which is generally for the government departments, PSU, institutional level, government, usually for government departments or government things. Central government, you have to get approval for all of this. Cultural tour, is there any limit for cultural tour? No. Cultural tour, you have to get limit approval. Cultural tour. Freight of vessel by PSU, then that means renting of ship by PSU. Import by PSU through ocean if there are some expenses. Multi-model, here again code word, multi-model. Then container detention and payment of PNI club and transponders. Are you able to follow, guys? For this we had that story also, Indian team going to West Indies, that ship, signal, all container, all that is done. In this central government approval, apart from these code words, multi-model, container, all of that, okay. 2 points have limits. So you have to remember this for sure. If it's for payment to foreign print media by public sector undertaking, you have to see, is it for the following set purpose: tourism, foreign investment or international bidding, then it is exempt. Others na up to 10,000. So if PSU is advertising for 3 purposes: tourism, foreign investment or international bidding, then allowed. Beyond that, others up to $10,000. Prize money for sponsorship for sports that happens outside of India. Any state or national or international body of India is conducting cricket tournament, badminton tournament, whatever tournament, there is no. Apart from state, national, international, private is conducting, up to $1 lakh is allowing. $1 lakh into 80 is close to 80 lakhs. Ada tandi agu for keeping cricket tournament for private company. So they're allowing up to that much. Are you following? Now we are going to schedule 3, current account other than individual. So if I come back to this diagram over here, now we have finished revising schedule 1, what you cannot do. Schedule 2, central government is done. Schedule 3 we have finished with individual. Now we are going to schedule 3, can do with RBI permission for other than individuals. In other than individuals, there are only 4 points, and all these 4 are important limits. Okay, I told there are only totally 8 limits in this act, correct? Only 8 limits with some schedule numbers. You can't remember this. If you look at the past exam question, this only they are testing. These limits will come for 4 or 5 marks. Now, commission to an agent abroad for sale of residential or commercial plot in India. So let's say you are selling residential or commercial, your house in India is purchased outside. For that, for agent commission is $25,000 or 5% of inward remittance, whichever is higher. Logic is more higher, more commission you will get. Consultancy for infrastructure up to 1 crore, $10 million. Others 10 lakh, $1 million. Following, guys? Clear? Next, reimbursement of pre-incorporation expenses, that is allowed up to 5% of investment in India or $1 lakh, whichever is higher. This you have to mug up, but the logic you know, why higher, why lower. Last one is a new point, donation. Very, very important for exam. If you are donating for 3 purposes, code word, chairs for chairs over there, or funding of educational institutions or any funds for educational purpose, or technical institution for research in the same field of donor company, then in that case, it will be 1% of forex earnings of last 3 years or $50 lakh, whichever is lower. This ends our current account 4 dabbas. Not that difficult to remember, correct? Half an hour before exam you go through that 1.5 day, you can revise. Now coming to capital account, much more easier. What is capital account definition? We saw capital account is basically a person resident in India alters asset, liability, contingent liability outside India. Person resident outside India alters asset, liability in India. For that, examples only are in schedule 1 and schedule 2. Not that important in capital account. That's why we didn't write here. Meaning simple, fairly easy list. Giving loan, taking loan, buying asset, selling asset. In schedule 3 there are some prohibitions. That is more important for capital account because things to remember. North Korea, can you enter into transaction? No. Who has to give permission? Central government. If you enter into transaction by asset, sell within 180 days. Then for a PROI is prohibited to invest in India even though we are getting forex, chit fund, nidhi, agriculture and plantation and real estate. TDRs you can't invest. TDRs is transferable development rights. But the word real estate does not include this. That means these things are included. Commercial and residential flats you can invest. Real estate infrastructure trust you can invest. Township roads and bridges they can invest because that is for development. Otherwise, how will we develop? These are basic developments that are needed. Lastly, some miscellaneous concepts we saw, where apart from the limits, apart from residential status, what to remember. In reverse, if you see this account like RFC, resident foreign currency, or EEFC, exchange earners foreign currency, balance will be in dollars. These are exempted from FEMA because it's in dollars. Next, if any foreign national is working in India and getting salary, he can take the money and go abroad. Remittance of salary of non-resident working in India for the job should be maximum 3 years, but Pakistan means you can't take the money. Then under definitions, foreign exchange definition, you know what is foreign exchange. Balance in bank account in foreign countries. Other Tandi he is saying any instrument like traveler's check or bills of exchange drawn in India but payable abroad, payable in dollars, or drawn outside India in dollars, payable in India in rupees. Between the two things, where it is drawn, where it is paid, any one should be abroad. It should be in dollars. Then also we call it as foreign exchange. So these are the concepts in FEMA. Quick revision except for residential status and related point of PRIA and PROI. Are you able to follow, guys? That's all you have to remember for exam, guys. Thank you. So today residential status lo what we saw. For exam what to remember, sir? One last time we will do and close. You never left India. You are a PR. II. You left India for 3 purpose. You are a PR. OI. I don't care about days. You left India for other purpose. I will check the previous financial year. If it's more than 182 days, yes, you are a PR. You left India for other reasons, but last year you didn't stay for more than 182. No, then you are a PR. OI. Come down. Coming into India is easy. Coming into India, 3 purpose. Yes, PRI. Others are PROI. Then this PRIA and PROI, that property purchase. Are you for? And for company you have to write last one. Residential status for company, for other than individuals. 3 points. Incorporated or registered in India, or registered, simple I'll write. Okay. Indian entity, the PRII controls foreign branch or subsidiary or whatever. This also will become PR. I'll write all these are PRI. This also is PRII. And last one, PROI, let's say foreign entity controls branch or subsidiary in India. That's it. All these 3 are PRII. Second point, Indian entity PRII is controlling the foreign branch or subsidiary. Third point, PROI, foreign entity is controlling the Indian branch or subsidiary. Clear? Make a note. Anyone has a doubt, guys? Okay. Now to summarize the whole chapter, if you see, we basically have current account and capital account. Now if you see the three schedules, if you remember, now if you read the limits, you will understand. Schedule 1 is what is allowed for a PR II, correct? Schedule 2 is what is allowed for a PR OI. அப்போ நான் நான் ரெசிடென்ட் சொல்லியிருப்பேன். Schedule 3 is basically what is prohibited. This includes both PR II and PR OI. How it includes both? Schedule 3 only talks about PR II not to go have transaction with North Korea. Schedule 3 only also talks about PR OI cannot invest in Indian Nidhi company, chit fund, all of that. Current account also has 3 schedules. First, schedule 1 of current account is basically what is prohibited for a PR II, mainly II, PR II is prohibited. Then schedule 2 talks about what? Wherever you need central government approval, this was majorly for those PSU entities and chartered vessel, all of that. Schedule 3 pathina, they classified into individuals, others. Individual what is permissible with the permission of RBI. For others, what is again allowed 4 points, but here permission of central government, RBI. Again, what then same others also, what is permitted with the permission of RBI. Are you following, guys? Correct? We covered all the 7 schedules, guys. Limits la. This is what we finished before this. Now are you understanding? Whether you know residential status or not, limits are not going to change for you. And the schedule is for whom, you have to be aware when you're writing the answer. Done, guys. Can we proceed? Hello. That's it. With this we are done with FEMA. Thank you. Any doubts before we close? Fine. Thank you.
And with that, we are done with the expected question marathon for Jan 26 exams. If the few of you who are still watching now, salute to you guys who are still watching now late night in the night. Amazing, guys. That shows the kind of character and strength that you have, that you want to make it in this CA in your life. That will definitely happen to you. I will honestly tell you a thank you from the bottom of my heart to stay till here, and wishing you only most and more after this. If you watched till here, whatever your experiences so far in watching the last, I think 5 to 6 hours of the marathon, please drop your thoughts in the comments of this video. Those messages actually means a lot for me, because this may be 6 hours for you, but I sat for about 16 hours to record all this by writing the notes. I had severe throat pain, all of that, and all that effort for whom, guys? It's for you guys. So honestly means a lot. If you're watching it till here, in your comments also means a lot to me. And most of all, from the bottom of my heart, wishing you all the best. Go ace your law exams. Thank you. Tata. Bye bye.